can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hello,
my.
Thomas. How are you?
I'm good.
Sunscreen is not something that you believe in?
I do not believe in sunscreen. Against my religion.
Well, I hope you believe in dermatology because that's the only thing that can save you.
I was out yesterday. I played golf. I think I quit golf.
Wait. The last time you played, you said it was amazing. You were hitting the ball so good. It was a shame.
That's what I hate about golf. You can go from great to horrible. You know, you're one double bogey away from quitting the sport.
It humbles you.
I'm a quadruple bogey away from quitting the sport. That's all. I mean, double bogeys are good.
Yeah.
Where did you play?
At a buddy of mine's at his course. And
oh, this was the rescheduling of the country club outing.
Yeah.
No, because I'm in that one. What do you mean?
Oh, this was This was a different rescheduling.
Wow, you got a lot of fancy friends.
Yeah, so it was a horrible day. I played horrible.
So would you shoot in the 120s? Would you shoot?
No, I don't know. I didn't keep score.
You be so for real right now.
No, I didn't really. I after the first couple holes, I was like, okay, this day I'm writing this day off.
Today doesn't count.
It does not count.
But at least it was nice and you got exercise.
What?
Never mind.
She said it was a nice day. You got some exercise.
It was a nice day. I got some exercise, but I didn't, I hate it when I play bad, when I stink.
I know. Not fun. I get it.
Yeah, it's
okay.
Yeah, but you're not supposed to be good at everything. There's no fun in that.
it was a bad day. But it was, it was fun. I was hanging out with friends. So
sounds brutal.
Oh, believe me, they're brutal too. Okay. It wasn't like yeah. I will say one thing.
Use your words. Oh my God.
I will say one thing. One of my friends, his son played. He's a D1 golfer, right? So he played at Purdue.
Okay.
Boo!
So
I'm just kidding. Just a little rivalry, but that's very impressive.
So we're on the first hole of this golf course, and it's a tough hole. It's like a dogleg right over water with a bunch of traps around the green, and but it's not that. It's a kind of a short hole. It's only like 310 yards, but it's got a lot of crap in front. So the group
back in the day, you'd be cutting that. It'd be 285. You'd be tapping it up to the green. You'd be rolling it right in.
So most people, so we wait to the group in front of us is on the green, and then we tee off, and then so we tee off from like where normal people play, but this kid, because he's really good, tees off from championship tees, like way behind us, right?
Okay.
Sure.
And he goes, and we're waiting for him, and I'm looking at him like, what are you waiting for? And he's like, they're still on the green. Okay.
Oh, he was gonna outdrive. He was gonna hit
the green, right?
Distance, yeah.
Yeah, but from all the way to the back tees, we couldn't even get, we're nowhere close from the up tees.
Sure. Well, his problems are not your problems.
So the kid drives the green on the first hole, 300 and something yards, and I'm like, oh my God. And
that's nice.
Yeah. I think he was 3 under after 3 holes, and that's when I looked at my buddy. I go, "You just picked me off."
That's when you knew something was wrong, right?
He had 3 eagle putts in the first 3 holes, and I'm like,
I thought you said nobody played good.
What?
I thought you said nobody played good.
Well, this kid did, but he's a plus 3.5 or 4.
Wow, that's sweet.
Wow.
Yeah.
Very nice.
Yeah. No,
Did you learn it? Did you learn anything? Did you pick up some pointers? Was he
No.
able to tell you?
no. But the old
No, but that's what I don't understand is like you expect to get incrementally better, but you don't practice, you don't take lessons, you don't take advisement from anyone. Like, how are you supposed to magically get better?
Check, check, check. What's your point?
What's your point? Yeah, what is your point?
Those are all true. What's your point?
My point is that this kid is very consistent and diligent, probably in his practice and his execution and his.
Oh, I wasn't
drills.
comparing myself to him. I was comparing myself to my loser friends.
Okay, well, just practice. Go to diversity range like 2-3 times and practice.
Do something.
Anyway, that's what I did yesterday.
Well, I had a nice. First of all, what did you guys do to the market while I was gone, South North? I mean, I left you with one job to do. You know, just keep the EMSPs in a range here, and you couldn't even do that. What's up with that?
Yeah, they crashed them on Friday down like 100 and around 110. They're up 30 today, but yeah, Friday was the first big down move we've had in a while.
And now instead of having a 70 some odd dollar expected move, you got almost $100 expected move, 93 or so. You got volatility was over 20. I mean, I left you with one job to do. Just don't get hit by a bus, and you kind of got hit by a bus.
That's what we wanted. Higher volatility, a little two-sided action. You know, Friday was one of the, I think it was like I want to say like the 3rd or 4th busiest day in option trading history.
Options volume was 42% higher than it normally is.
I know, but the total volume traded was like almost, I think it was like the 4th largest in history.
Really?
And equally important, almost 300 of the S&P, a little over 300 of the S&P 500 stocks had higher implied volatility. So a lot of good things happening. Now you got to place your bets.
Place your bets. Step right up. Place your bets.
Step right up. Place your bets is right. That's correct.
Bat, how was Florida? What did you get off to jaunt off to?
I was there for 36 hours. Just had to, button up the house a little bit for the hurricane season coming. Make sure my palm trees are looking pretty, that kind of thing.
But everything's okay. Everything was good.
Yeah, everything's fine. Everything's fine.
Good.
It's hot down there in Florida, but it's beautiful. It's warm.
Well, that's Florida.
Yeah. It was
You
very
didn't
nice.
get to go to like Epic Universe or anything fun like that.
No, it was just the wife and I. So it was real good. I locked the door behind me, left her in the house, and then I came back. It was good.
No, you didn't.
We had a fun time. It was good. 36 hours in the Sunshine State. Good for the head. I'm back, baby.
Okay. All right. There you go.
How about you? What'd you do?
Not a damn thing, and I'm very happy about it. No, I just like worked out. I was outside for a little bit, but it was Lala, so you couldn't really I couldn't go north because there was just so much going on with Lala. But a couple of my friends went; they had a good time. I watched a little bit on Hulu, so that's cool because you watch the live.
I couldn't find it on Hulu. I tried. It was hard to. I don't know. I couldn't.
It was hard to find. I just typed in Lollapalooza, and I'm like, how the heck do you spell that? And then they had like 2 streams for it. So I watched a little Sabrina Carpenter, a little Olivia Rodrigo, from the comfort of my house, though.
Has Lala gone mainstream now that they're streaming it?
It looked cool. The Olivia Rodrigo thing with Weezer looked really good.
Yeah, that was cool. And the whole city was like all lit up purple, but 115,000 people. No, it's a no for me. That's too many. It's too many people.
But it looked really good. And I think Sabrina Carpenter last night played with Earth, Wind, and Fire. I think that's who she was out there with.
Yeah.
Yeah, it looked cool
and
too.
Gracie Abrams had brought out Robin. Like there were tons of just like surprise guests that you're just like, wow, really leveling up the artist sets, and like lots of new artists, lots of people discovering new music that they wouldn't normally hear. And the weather was immaculate, so good job from everybody.
Good job to the weather gods.
Yeah.
I mean, it was the first weekend here where we had like literally perfect weather.
Yeah. The air quality wasn't great, but the weather was perfect.
No, it's not. It's not going to be good for a couple of days, isn't it?
Yeah, that's fine.
Yeah.
And the end of the Cubs game was good last night.
It was good. Did you watch?
Yeah.
I did. Tell me all about it.
I just basically just caught the last inning. So it was good.
And the Cubs doing a wonderful tribute to Rhino at the game Friday. All the players wore blue 23 jerseys without their name on the back, and they had some of his former associates.
Teammates.
Teammates. I couldn't think of the word. Teammates. I was like, associates?
What are you in the mafia now?
Yeah. And they brought like a second base out to the field. It was really nice. It was a nice touching tribute to a wonderful man.
It was
Did you
really
see the lovely article of all about Tom in Bloomberg? How Tom commanded the stage and
Your photo was in there too. You looked good. Your photo was in there.
big deal, a photo of me. You know, like Tom was on stage all by himself, commanding the stage by
I'm
himself,
sorry, I've never been in Bloomberg.
having a good time and everything else like that. All about Tom. Tom this, Tom that. Ooh, Tom's amazing. Ooh, Tom this. I mean, if I don't fix his he doesn't get anything right.
Oh my God! Look who's got a hurt ass this morning. Look,
The expression is butt hurt, not hurt ass.
butt hurt, whatever. Look who's butt hurt.
He's right. No, the second time my ass hurt.
Look who's butt hurt this morning.
Oh, boomer! It's.
Hey, here's what I told
I'm
him.
so tired.
We were both in London at the same time. I went to the Bloomberg headquarters, sat down, met with a very nice columnist, Justina, invited her to the show, you know, told the stories. Tony's out there.
I spoke to her at the show.
Tony's out there. Tony's out there eating little sandwiches and drinking tea. And you know,
He was with his family.
Hey, then don't complain when you're not in the article.
I spoke to her afterwards. I gave her a lot of my time. I told her.
I know, but at that point, she told me, she goes, "You were annoying."
She did not say that. Do not put that on that young lady's name. Don't do that.
Those were her exact words. Oh my God, is that guy annoying?
Okay. All right. You are both petulant children.
I didn't get to go.
But good job by Dan. Good job by Dan, who works for IG and who was the photographer for those photos.
I didn't get to go to have high tea.
and the finger sandwiches
and the little cucumber finger sandwiches.
But you could. You go to London a lot. You could have IT. That's just on you.
I like a finger sandwich.
High tea.
I'm just gonna leave that there. I got nothing else. I got. But if you do want to be part of the phenomenon that Bloomberg wrote about, we would love to see you at one of our live shows. Mike, Nick, and Katie are up next on the West Coast, Seattle, on August 10th, I believe, and our home show. If you'd like to come see us in Chicago, come visit the offices. First, you need to fill out a form. But we would love to have you for our Tasty Open House. You can go to Tasty Live, our website here, and you can fill out that form to make sure you are on the list. So there you go. Yes, the Tasty Live Open House. Just got to fill out some things. So I think we have Jules working security.
Yeah, all you got to do is reach out to support@tastylive.com. So they'll give you all the information that you need. It's very easy to do.
Yeah. I think Jules is working the door, so.
That would be good. We should have Jules as the doorman. That would be nice.
There you go. tastylive.com/events. Yes, at Work by 11 at Thalia Hall. Coming up here soon, I think August 15th. So,
dude, it's around the corner, 11 days.
Yeah. Are you excited?
I am.
You don't have to travel.
No, don't have to travel. I might actually get my name in the paper. I mean, obviously, I'll be sitting up there just like everybody else. It's still two people on stage. I only mention one all the time.
Usually, when Batistas get their name in the paper, it's usually for something criminal.
I knew you were gonna go there.
Nope.
I'm
It's
trying
usually
to get to the
like
top
a
of the search,
police
Cosmo.
blotter.
I'm trying to get to the top of the search when people search. I'm trying to get to, trying to replace everybody else in the family.
All right. Well, there you go. So lots of stuff happening. Very, very exciting. Hey, in the meantime and in between time, we are gonna have a good show for you today. I have too many tabs open. Just bear with me here. I don't know what's happening. My life's falling apart. It's fine.
That's okay. You got some earnings coming out for tomorrow. You got Palantir.
What are you doing? It's not the time of the show for that.
I'm trying to help you while you're getting your.
No, I got it. The top of the 8 o'clock
Oh,
hour.
goodness,
We got an options jive. We got a research corner with Kai. Kai comes in. Everybody loves Kai. He presents his outlook for the week. And then Skitty on options, abstract application, Dr. Jim. When intrinsic value sticks. This is a new way to spell intrinsic. That's why I stumbled there a bit. I was like, that's not how we spell that, but that's fine. It's an interpretation of the word. But Dr. Jim will be in at 8:40. How come you didn't call Dr. Jim while you were in Florida?
You talking to me?
Yeah, I'm talking to you.
No, he's a little further.
How come you didn't call Dr. Jim? You were in the same state. How could you not? How could you diss the guy like that?
He was a little further north than me. I didn't want to inconvenience him. You know,
you guys could have met at a bonefish in the middle.
That's gonna never happen.
You little double date with him in autumn.
I mean, sure, I probably would. I mean, as long as there was a buffer between us, we could probably enjoy dinner.
All right. Well, he's going to be in talking about when intrinsic value sticks. Then 9 a.m. our market measure time buffers to tame volatility. I don't like all these random haikus for the segment titles today, but time buffers to tame volatility. Tom, what does that mean?
Time buffers to tame volatility. It's a duration piece.
Okay. You don't know.
Mm-hmm. He doesn't know.
And then live from the trade desk, big boy Scotty S. Scott Sheridan, cutting down all the top trending tickers over at Tasty Trade. That's going to be at around 9:30. So we got a really good show. Hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story, breaking news,
Breaking
across the wire. Leading story, top stories, jump in.
In today's headline, this just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's August the 4th. Oh, happy Leo season. Where are all my Leos at, I guess? I don't know. This is the part of the show we'd like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Sad day for me. My birthday month is over.
Okay. I need you to lock in. And now you can give me all of the earnings that are set to pop off for this week. Go ahead.
Well, does anybody really care if my birthday month is now over? But
Okay,
if
no.
you still are watching.
Why are you such a girl?
Palantir, Hims, those will probably be the two biggest ones for you. You got Lemonade, ADM, Yum, Caterpillar, VRTX, if you like those things, a few others. That's it.
No, we must now honor the birthday of the Golden Prince. Tom, your son's birthday is this month. Did you forget?
Whoa, Brit's birthday comes first. It's her month.
Oh, yeah. Tom, did you forget?
I did not forget. I don't forget.
You needed a nudge.
100% forgot.
You needed a nudge.
And Scott's birthday. Also, Scott is an August baby.
August 21st.
Yeah. So a lot of, August has the most births by month. I think followed by September, I believe. I don't know. Someone can check me.
Go back 9 or 10 months. All the women are paying for their birthday presents. Christmas,
No, I think it's Thanksgiving, so something got stuffed.
Thanksgiving and Christmas. They're getting.
Yeah, I think it's Thanksgiving.
taken.
Yeah, Thanksgiving,
Yep.
Christmas, whatever.
Mhm.
Hey, anyway, getting to my first headline of the day. Forecasters are predicting a dismal decade for stocks. Over the past several decades, the U.S. stock market has yielded average annual returns of 10%, of around 10%. But recent forecast, Vanguard projects the stock market will only rise 3.3 to 5.3% a year over the next decade. Morningstar sees stocks gaining 5.2%, and Goldman Sachs forecasts a broad S&P gain of only 3%. Would you revise these numbers higher or lower? And what do you think is in store for the next 10
I
years?
wouldn't revise them. I'd put an asterisk next to them and remind everybody that nobody knows nothing. They have no freaking idea what's going to happen the next decade. They don't have anything that's going to happen today.
Yeah, I mean,
Duly noted.
that's exactly the right answer. These guys haven't forecast one thing right in the last 25 years. How would they ever? How do you think they could possibly forecast the next decade? These are, in fact, the numbers are kind of idiotic because who would forecast numbers below risk-free rates? Like, if that was the case, why would anybody, if Goldman Sachs really thinks the market's going to move by 3% a year
Great
for the
point.
next decade, why would anybody need Goldman Sachs?
Right. They would say, get out of the market right now, go 100% in bonds.
Right. Why would you even need Goldman Sachs then? Like, what idiot forecaster would make that prediction?
Matter of fact,
You're
we
gonna
should
forecast themselves.
fire this idiot forecaster on behalf of Goldman Sachs.
Well, we should fire all these forecasters because, first of all, you don't need to forecast 3 or 4% return. What you need to say is, I would move straight to, if you really believe that, you should just say, I will move straight to bonds.
Right. Right.
Well, no prognosticator is projecting annual returns higher than 6.7%. So just gonna leave that there.
Mhm.
Okay.
Because you're a perma bear, I would have thought that you would have been like, yeah, let's go. Because
No. Whatever I am has nothing to, I would never forecast a rate below risk-free rates. It doesn't make any sense. Like, what's your
Okay.
job?
I question that every day. Hey, in other news, let's talk about the dollar. A battered dollar edged marginally higher after a dismal U.S. jobs report and the firing of a top labor official stunned investors and led them to ramp up bets of an imminent Federal Reserve rate cut that's probably definitely going to happen now next month. Let's talk the dollar. Let's talk the bonds. Let's talk currency. What are you doing to start the week?
Well, the dollar is a lot weaker again today.
Okay.
Yeah, euro's up about a 0.5 percentage point versus the dollar.
Yeah. I mean, we are mixed in the dollar. I mean, right now we're short the dollar, long the yen. That's really it. We're flat the euro.
Okay. What about bonds? Big day for bonds on Friday.
Yeah, it was a great day for our bond position Friday. We closed it out pretty much, and now we just have we're looking to reload, but they got down to like 115, I think just over 115 last night, but I wanted to get them back in the 114 handle or something, and they didn't get down there.
And the euro's back to where it was, and the dollar's back to where it was in June. I mean, let's put everything in perspective here.
Yeah, the dollar had a nice rally for about a week, but now it got killed the last 2 days.
Right. It all depended on, what headline you read. If you read the Wall Street Journal, you had one point of view on the economy. If you read the New York Times, you had another. And this is another reason why, news means nothing. The headlines mean nothing. We've been talking about this forever. Just watch the market is what you have to watch.
In other news, the SEC is announcing that it is creating an AI task force to lead the agency's efforts to enhance innovation and efficiency, which no one attributes to the SEC, but pop off.
I'm
The
surprised
SEC
Tom didn't take credit for this, just like he took credit for everything else. From
SEC named a chief AI officer. What are your thoughts of modernization for the stalwart government agency?
So I thought
I'm
that'd be
not
a direct
sure.
question to you.
I don't know what this means.
I don't either. I read this press release 5 times. I was like, it just kept saying enhance innovation and efficiency. And I'm like, but that's not telling me anything. They're like, again, we're enhancing innovation and efficiency. I'm like, okay, but what does
Yeah,
that mean?
I don't know what it means either, and I don't know how you can regulate technology in a sense like it's not even a regulated business. I don't know what you're supposed to. I don't know what they're going to be regulating.
They're going to enhance innovation and efficiency.
Yeah, I heard that. I don't know what this means. I can't comment on it.
All right. Hey, in other news, let's talk oil. Oil slipped after OPEC Plus agrees to another big output hike in September. Brent crude futures fell around 43 cents as OPEC Plus agreed to raise oil production by 547,000 barrels per day for September, the latest in a series of accelerated output hikes. What are we doing in sweet crude?
Oil's been falling the last 3 days or so. After tapping 70, it's down to about 66 right now, 65.96. Got down to 67. I mean, it closed at 67, got down to 65.68, right there, about 30 cents off its lows, daily lows.
Yeah, we don't have a position in there.
You don't have an oil
I mean,
position?
41's been creeping up, so it might be something to look at.
Nothing. Wow, it's a tough room today. Okay.
Well, we don't have an oil position. I mean, it's not like, I don't have anything to say.
Okay, but there's opportunity then with the IV creeping up then today. No?
Maybe.
Yes, maybe. Okay.
Maybe. See, Bat came up with that idea. Wait until around 9 o'clock when Tom mentions oil and then does something in it and then owns it for himself, very much like the show that we do. Then he can talk all about it himself.
What about natural gas, natty gas?
We do have a big.
I'm waiting for you, Sosnoff.
We have a decent sized position in there. In fact, I rolled it this morning. We're at 22 days to expiration. So if you have a natty gas position on, you might want to consider rolling today or tomorrow. I rolled mine this morning because my strikes got close. So we're flat deltas in there. We're leaning a tiny bit long. It's been on its butt.
Okay, now we're getting somewhere.
Yep.
Yeah. Okay.
Yeah.
Hey, let's talk crypto. Crypto wobbles into August as tariffs trigger risk-off sentiment. Price of Bitcoin fell around 3%. Well, the crypto market slid on Friday. The descent triggered a wave of long liquidations. What are you seeing in digital assets? And is it a risk-off sentiment? Would you agree?
I would not agree that it's a risk-off sentiment in there at all. I would say that, crypto sold off a couple $1,000s. I don't really look at that as much more than crypto selling off a couple $1,000s into a massive rally that it's had. I don't think of it as much of anything. I mean, ETH's down a few $100 off. It's kind of where it's been trading, and crypto's on the low end of its range. It's up 1,000
Sure,
today.
and Coinbase down 16% after their disappointing earnings.
I thought
Circle down 8.4%. Like MicroStrategy down 8.7%. Like
So I thought all those stocks were ridiculously priced, and I think Coinbase down 60, whatever was down on Friday, like 60 something. I think Coinbase down was the most surprising / least surprising move. Like the fact that MicroStrategy's, Coinbase, Circle, all those stocks got killed does not surprise me. The amount of the move in Coinbase did surprise me a little bit, but these stocks I've been arguing for so long. They were so overpriced, so ridiculous. I mean, Coinbase is a much more interesting play at 300. Remember, this is a stock that just traded 400, right?
I am aware.
So this at 314, it seems like it's a much more interesting play than at 400. And I think, it was 25% overpriced. I think MicroStrategy still has I wouldn't buy it here. It's a lot to go. It's Circle, I definitely wouldn't touch here. You know, even though, let's be fair. I mean, Tasty started accepting stablecoins last week. So for international customers, they've already been taking advantage of that. So it's kind of, I can see the advantages. I just don't understand how these stocks can trade at the multiples, at the levels that they're trading at, given the amount of revenue they do. I just don't get it. But I think stablecoins are here to stay.
Okay. Well, hey, happy anniversary, are due, to ETH. Ethereum turns 10 from scrappy experiment to Wall Street's invisible backbone. 10 years after the launch, major institutions are now building directly on Ethereum's rails. Co-founder Vitalik Buterin says the biggest disruption won't come with fanfare, but Ethereum will quietly reshape money itself. Of course, we were one of the first few people to interview him, but I can't believe ETH is 10.
Yeah,
Well,
even our own company, Sosnoff, sent out a nice little thing on social media about how you had a nice conversation with
oh my
him.
God.
Oh my God,
You
dude.
little
It was
bird
ever,
ass.
on anybody's lips, how you had a nice conversation with them. It was all about you, not the other guy in the room with you there, but just
I mean, even a store full of Pier 1 imports is not as fragile as your masculinity right now. Good Lord, dude. Pull it together, man.
Yeah, I mean, my God, take a pill or something. But we should
It's all
show.
about you, Sosnoff. Tell us about the interview that you had with him.
We should show the original interview with Vitalik because
We should, and they did on social, and you can follow
I
me.
think he was 17 years old in his mom's basement on his pair of headphones, but that was a fun one.
It was very cool. It was very cool.
Okay. Well, happy birthday.
He asked us to take a little stake in Ethereum too. We turned him down. One of life's regrets.
Hey, Meta Platforms is post earnings, but they are pressing ahead with efforts to bring in outside partners to help fund the massive infrastructure needed to power their AI fever dreams. They disclosed a plan in a filing to offload $2 billion in data center assets as part of that strategy. It is interesting about where the landscape is going to go in terms of the consumption of energy and how power grids and people, are going to deal with that. We're going to see what happens. But is there anything to be done in Meta post earnings?
That's a tough one. I mean, it's had a very strange reaction in the tape in Meta has been very tough to trade. The first day it really didn't come after earnings. It didn't come down much at all. It kind of hung around that. It hung around all day around that kind of 775 level, 775, 780 in that level. And then it really didn't drop. I mean, all things considered on Friday, as nasty as it was, dropping whatever it did, $24 or something. I didn't think it was that big a move. And I also didn't think the liquidity in there was that great on Friday. Stock's up $7 pre-market today. I think it'll be interesting to watch a few of these stocks like Meta and Microsoft that had, I think Microsoft's a lot weaker than Meta. So we'll see. But
Microsoft had the same IV rank of around 10, and Microsoft's up 3, trading 527.
Yeah, I think all these stocks are going to be tough to trade now because you're going to get a very low IV rank because they're all post earnings. So they're not going to be, they're not going to be super attractive.
Overall market volatility is higher to start the week.
Well, we got almost up to 20 in the VIX on volatility on Friday. We almost got to 20 in the VIX futures, but they've stopped just short, and they're down. They're down almost a point this morning. So we'll see.
80 cents to 1910. Yeah.
Yeah.
Alphabet's Google's growth stage venture arm Capital G and NVIDIA are in talks to invest in an AI infrastructure provider called Vast Data in a new funding round that could value the startup as high as $30 billion. Again, this company no one's ever heard of with the most generic name ever, Vast Data. What is that? But it's worth $30 billion. Be so for real.
Google's up $1. Nvidia's up a little bit more, maybe like closer to $2 on both of these.
I
You
never
should
heard.
start calling Dr. Data Vast Data.
I never heard of that company.
Vast Data. No one's heard of it. But they're worth $30 billion. So get in on that ground floor, I guess. I don't know.
Get in before it really goes up.
It is one of the most valuable AI startups right now. So
Wow, never heard of it.
they developed storage technology specifically designed for large AI data centers, enabling efficient data movement between GPUs made by the likes of NVIDIA.
Nice.
Nice. Good job, Vast Data. I don't know. Hey, Microsoft came out with their lists of jobs that are most in danger and are most safe from AI. Do you want to make some guesses?
Oof.
Sure.
Okay, you want to go with most in danger or most safe?
Are these like jobs I would know, or are these like
Probably jobs you've never done. Garbage man,
yes, especially as an aging person that's going to need some medical care.
any kind of plumbers, electricians, though they're all safe.
What are your guesses, Tom? What do you say?
I would say that
Cross-legged knock-kneed co-host are safe. Pin-like legs. That's good.
I would say that, 'cause I'm not sure how Microsoft's going to do this. Microsoft predicts these jobs are safe from AI. No, just tell me. I don't know. I don't want to guess. What do they say?
Okay, so the ones that are most safe at the top of the list, phlebotomists. Obviously, you can't really replace. That's the person that draws your blood when you go to a lab. That's a phlebotomist. You're looking at me like you've never heard of phlebotomist. So
Yeah. Well, no, I would never. That's just a dumbass. I mean, that's who's going to say that?
But that's the answer. But that's the why is that dumb if that's the answer and then that's real and applicable?
The person who draws blood from you is the job that's safe from AI?
Yes.
Check.
And then number 2 is nursing assistants. Number 3, hazardous material removal workers. Then number 4, painters and plasters. Number 5, embalmers. You can't really replace embalmers.
Okay, that's why I didn't answer this question.
Oral and maxillofacial surgeons. Automotive glass installers and replace safe light repair, safe light replace.
This is so specific.
Tony, this one for you. Motorboat operators. Orderlies, roofers, you're right there. Roofers, surgical assistants, massage therapists.
Massage therapists. They can't make that one into a robot.
Tire builders. And then here are the jobs that are most in danger. The top of the list, interpreters and translators, because you can just throw anything into, AI and it'll translate it.
Stop taking Cantonese, Saznoff. We won't need it.
Historians are at risk. And it also on here, it's interesting, brokerage clerks make it into the top 10 there. Writers and authors, I do not like that at all. In the top 5 there, you can see the whole list through Microsoft there. Also mathematicians, technical writers, proofreaders, copy editors, advertising sales agents, archivists, web developers. All of these jobs are in danger. To you, what's most at risk? Yeah, to you, what's most at risk?
What's most at risk?
Yeah.
I think they had it right. But anything that requires any kind of research towards it, and I think they came up with historians or something like that.
Sure. But also, you see, legal professions on that list too, which is you'd think, it's a white collar job, but it's it's at risk. How about for you, Tom?
You know what? The librarian going through the, what's that called? What's that index called? They remember we have
Oh, the card catalog, the Dewey Decimal System. Yeah.
Decimal system. I think those people are most at risk too. Yeah.
Yeah.
I think what Microsoft should be doing, first of all,
no.
I don't believe that Microsoft actually, I think somebody used Microsoft to do this. I don't think Microsoft, this is not a statement that Microsoft put out. This sounds like to me like this is just like something that somebody used Microsoft.
No, it was published by Microsoft researchers, but pop off. I like how you just pull facts out of your ass.
Because I don't understand why Microsoft researchers.
It was done by Microsoft.
Well,
I will cite my sources if you cite yours.
Well, honestly, the most dangerous, the biggest risk of losing your job to AI would be Microsoft researchers.
Okay. Sick burn, boomer. Okay, well, I got to keep it moving. I'm behind. Hey, Tesla. A jury in Florida determined that Tesla should be held partly liable for a fatal 2019 autopilot crash. The company must pay a portion of the $329 million in damages to victims and a survivor. And what are you doing in Tesla?
Tesla up $8 on that news.
Okay. Tom?
We have no position on Tesla.
Okay.
Tesla has an Ivy rank of 12.
Boeing workers who build fighter jets are going on strike. They actually went on strike. 3,200 workers at Boeing facilities in St. Louis and St. Charles, Missouri, and also in Illinois voted to reject a modified 4-year labor agreement, and they're on strike. What are you doing in Boeing?
Boeing down about $1.50 or so.
Anything in Boeing? Have they had their earnings yet?
No, I mean,
no. Boeing,
Okay.
Boeing, maybe did they, Sadaf? They must have.
I think they already had earnings, but we don't have a position on it there.
Okay, gotcha. Hey, Delta is now assuring U.S. lawmakers that they will not personalize fares using AI in a simply diabolical move. Delta floated the idea. They're like, oh, hey, yeah, we know when your Nana died, and we're going to use AI to jack up that fare. But then they said last week they would not use AI to set personalized ticket prices for passengers after facing sharp criticism and broad public concern. Delta, what are you doing, DAL?
Yeah, I mean, personalizing, that sounds really scary. I think that I think making fares flexible is totally fine, but I think using AI to personalize fares, I'm not even sure what that exactly means.
So what that means is, say, using large language models, they can scrape all of the data, all of the cookies about you. So let's say that somehow the AI knows that you already bought your tickets and hotel to go to Disney World, right? So they already know that you're locked in. You already paid your, 5 nights at your Magic Kingdom hotel. You already bought your fast pass, whatever, and all your tickets to Disney World. And so now that last component is your flight. They then use that. They're like, well, they're already locked in for the tickets and the hotel. They're like, we could charge them whatever we want for this flight, and they got to take it.
Yeah, I don't like that at all.
Yeah, no one likes it because it's evil.
Yeah.
Yeah. Hey, Shein and Temu's prices are going to get hit even harder by the new de minimis rule. Its exception is now gone. Duty-free shipments of goods worth $800 or yes was a sweet, sweet loophole that many, including your girl, took advantage of. But e-commerce sites use that loophole when shipping hundreds of millions of packages to U.S. consumers. This affects Shein, which you can't really trade, but you can trade Temu, which is PDD. What are you doing?
We don't have a position on in either of those two.
PDD 111 and change, up around $2, $1.80, $1.90, $2, close enough.
Okay.
But the market's a little bit stronger here today too. I mean, you've got even the S&P's up 0.5 percentage point, going across the board pretty much. Nasdaq being the strongest of the group by a skosh.
It is that time of year, even though it is August. Spirit Halloween is launching more than 1,500 seasonal locations in strip centers and malls across North America. And hundreds of these are going to be spaces that you previously loved, like Joanne Fabrics. R.I.P. Joanne. Forever 21, Party City, Kmart, Rite Aid, Big Lots. Spirit stores open at the end of the summer. They are going to, be just around the corner here.
I saw Halloween stuff up in like Home Depot and Lowe's and stuff like that already.
Oh, Michael's has been Halloween since the end of June.
What the hell is going on?
I have no idea.
It's crazy.
I have no idea, but you do you. Hey, restaurants are adding dozens of new spicy menu items in a bid for younger diners. From March to June, U.S. restaurant chains collectively launched 76 new spicy menu items. It's an easy to execute strategy that keeps the attention of Gen Z and Gen Alpha and one boomer who's addicted to TikTok. That's Tom. Tom, are you excited by the new spicy offerings?
Yes. I think it's about time. I mean, the bland ass food in this country has to stop, and we have to get some flavor.
But there's a difference between bland, well seasoned, and like nuclear detonation.
No, but there's a lack of seasoning and a lack of spice in this country, and we need to fire things up a little bit.
Spiciness? Okay. Good job out of you. No, listen, they said they're trying to get younger here. They're trying to get older here. As you know, as you get older, you lose your taste buds, and they're just trying to get the older people to come back to these.
No, I can't handle spice now. I have heartburn.
Well, you're in that no man's land. You're not old where you've lost your taste. But I'm talking about people in their 70s, like Tom.
Oh yeah, that's true. Hey, crazy seeing all of the reports of this come in. I'm skipping a story here, Beth, but the MLB Speedway Classic was an absolute disaster. 90,000 people turned out at Bristol, which is a NASCAR track, to watch a baseball game, but it got massive rain delays. There wasn't enough food. It basically turned into Fire Fest. They had bunless hot dogs, cheeseless nachos. They ran out of liquor. It was not good. All the tweets I saw, like the drone footage looked cool. The stadium was full. Like it looked like everyone showed up. They had cool merch and swag and pit crews, and they came out, and went around the track. Like that all looked good. But the actual execution, I don't know why it was so poor.
Well, it looked really cool.
I literally just said that.
I know, it just looked really cool. And I've been to a bunch of baseball games that are outside of the norm, like the one in London and the one in Field of Dreams, and they're super cool. But yeah, I will say that nachos without cheese is the most depressing ballpark.
And a bunless hot dog?
Bunless hot dogs. Bunless hot dogs and nachos without cheese is probably the most depressing stadium food I've ever seen.
It really is. I got to give you that one too. It really is.
So now the game is scheduled to resume at like 1 p.m. today, maybe? Because it was a total rain shot. Like they only got to play one inning, and like that was it. So
that's not good.
No, I know. I was like, I had such high hopes, but what are you gonna do? Hey, finally today for my viral video of the day. When you guys had a dog, or in fact you have dogs, were your dogs protective of you? Like my Chihuahua, like if anyone would, even like if my parents would try to hug me, she would like try to get in there and she's like, hey, you don't touch my mom.
No, usually they try to run away with those people and say, take me to a better place. Save me.
But Tom, were your dogs protective of you?
Oh yeah.
Yeah.
But he needs protection.
This video is going viral after a dog unexpectedly stole the spotlight at a jiu-jitsu competition after his owner was getting pinned during a match. Watch this.
That's pretty good. That's pretty good. That's a keeper.
That's good.
He's like, Dad, are you okay? Dad, get up. Oh my God.
That's very good. That's very good. I gotta give them some. I gotta give them
Hey,
some props there.
that is my time for today. Bat, what's coming up next?
Ooh, let's take a quick 90-second break, and then we can come back. We can come back with a little more Tasty Live with Confirm and Send. You want to? Let's do it. Back in 90 seconds. Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the Confirm and Send. But before we do, let's take a look at the market. Sadnov, thank the lucky stars that I'm back, Sadnov, because even the S&Ps have rallied, Sadnov, unlike what they were doing while you were watching the home. They were going down. Even the S&P is up 35 and change. NASDAQ up 185. That's your lead in the clubhouse on a percentage basis. Russell up 14. Dow up 197, all around a half a percentage point after a big move lower, as you can see here over the last 4 days, culminating with Friday's move. Volatility down 77 cents, still elevated at 19 and change. Tom was correct. It went over 20 for a quick second there on the futures, back down to 19.13, about a 4% move. Bonds are up 4, Sadnov, 115 and change. I saw them on Friday go have one of the bigger moves. They were down into the 113 handle and then rallied back later in the day at 115, but the market did not rally back later in the day. What do you think about that?
I think the bonds actually right up here might be a little bit of a sale. I would be surprised if the market doesn't at least try to go back to like kind of close to unchanged on the day-to-day. I haven't done anything. I sold
selling off by 30 or 40 handles, you're saying?
Yeah, I sold a little last night, but it obviously didn't work out. Up about 29. They're up 34 right now, so right around here. But I think at one point today we should. I don't know if they're going to go down in the day, but I think we should get back to close to even. I think the bonds are actually, believe it or not, kind of think I'd rather sell them here than buy them up 4. And he did get down towards 115.
2-point move over Friday.
Oh yeah. I think the bonds are a better sale here. I haven't sold them yet, but I think they're a better sale here. So anyway, that's where I'm at right now. I want to sell S&Ps and sell bonds this morning. Nothing else.
Bitcoin up around $1,200 to 114.7, dropping from its lofty highs of over 120 over the last couple of days. Oil down $1.70 and change. Gold back up over 34, 34.18, up $19. Silver up 34 also, but 34 cents, bring it to 37.
Yeah, can I say one thing about silver? Today's like 21 or 22 days to
futures options. Yes,
futures options. So you might want to roll your gold position. But if you look at silver, because I had a position on there, the IV rank I think is in the single digits or close to that.
It's 14 now, but because rallying a little bit, volatility usually goes up by a little bit of a rally. But yeah, you're close enough.
So I did not roll my silver strangle forward. I closed it this morning. About
an hour. To close instead of roll is what you're saying.
Well, at 14, yeah. But that was about an hour or two ago, and I didn't know. Whatever. I didn't know if it was off or something, but I think it is that low because gold. I think gold was like 27 or something, or 24. The IV rank.
Gold is 27. You are correct.
So gold I did roll forward. Today's 22 days, but gold I rolled forward to SEP. Silver I closed this morning, just if anybody cares. Okay.
Staying mechanical like a good boy, and nat gas on its butt, trading. Trying to flirt with being under 3. Sosnoff.
Yeah, we're leaning a little bit long, but nat gas is also a roll today at 22 days. All right, let's do confirm.
51, you would roll that and not close it.
Confirm and send.
Let's do it.
Are there tax incentives or tax deductions or any other advantage to trading as an LLC or an S corp versus trading as an individual?
I mean, I'm not an accountant, and I don't trade under an LLC or an S corp for my personal account. So for me, I keep it just like everybody else as a retail investor for my personal accounts. So I don't feel that there's a tax incentive or tax advantage to doing it. Now there are, you can write off your office and some of the expenses, but then you have to pay for data. You don't get to be, I believe you don't get to be first in line like you are with options as a retail investor. If there was an existing order from other professional traders, because you consider professional if you're doing this, right, Sadnoff, then you don't get.
Yeah, so I can't say that there's a tax incentive unless there are certain, it really depends on the kind of business that you set up and other things like that. I don't think there's necessarily a tax incentive. Are there tax deductions? Sure. And that's one of the advantages of setting up an LLC or an S corp is that you can deduct certain things like, your office or some, different expenses that you have around that you use for trading. But you have to be
secretary.
But you have to be careful. You open yourself up to potential audits because it has to be your primary. Like you can't have, like Tony or I couldn't do it because it's not our primary. So it has to be your primary, number one. And I mean, there's a few other advantages like, you're protected by your corp and things like that. But there's also a negative side to it, which like you mentioned, that you're as soon as you form a corporation, the exchanges consider you as a professional. I know you're not a professional, but the exchanges, that's how they look at retail individuals versus professionals. And all of a sudden your data costs can go up from 0, because we don't charge you anything, to, over some number. It could be between, depending on how many different types of streaming data you request, it could be from a couple $100 to a couple $1,000 a year. So there are certain expenses, and there's certain expenses with establishing the LLC, filing a tax for that and stuff like that. So the advantages are tax deductions. You're able to go mark to market, which for some people is really important. So at the end of the year, you can go mark to market, and then you also can, you have the protections of the corporation. In the incentives, I don't really know if there's any of those, but the negative side is just that, like Tony said as well, I think you lose your status for preference as an individual, and you also have additional data fees, and you have to prove that you really are, that is your primary. So
Right.
we don't do that.
One half dozen of another, but it seems like a lot of work to be an LLC.
Let's go next question.
In my opinion,
I've never really understood the notion that interest rates are determined by the bond market. I've done some research on this topic, though I haven't been able to find any information that resonates with me. Could you please explain how the bond market seemingly controls or influences everything, and what you mean by the Fed can't lower interest rates with the bond market where it is?
Well, if bonds go lower, they pay a higher interest rate. So you're not, if all of them don't catch up to each other, like the 30-year, the 15-year, the 2-year, the Fed fund rate don't get in line with each other, you then do have an ARB. So if you're going to have that ARB, it has to equal itself out, and the market just naturally does it.
Yeah, the bond market is like any other asset class, and that actually is liquid and it trades. The bond market is a $50 trillion marketplace, and so it's a very real. There's literally hundreds of.
It's like you can't have an option trading under parity to a stock, and that's what it would look like if you had the bonds paying a significantly higher interest rate than what was offered.
The bond market is a massive asset class, and that massive asset class has very tight markets, and it has hundreds of billions of dollars chasing those very tight markets. It's impossible to trade outside of it. Just think of this. Think of your house, or wherever you think of your house, and you might think your house is worth, let's say, $500,000. But if the marketplace has your house worth $300,000, then your house is worth $300,000. Doesn't matter what you paid for it. Doesn't matter what you think, but your house is worth what the marketplace tells you it's worth. Yeah. Same thing in the bond market. Bonds are worth what the marketplace tells you they're worth. That's what interest rates are. Fed lowering rates, it's not going to change where the market's trading. That's all there is to it. Let's go to the next slide.
But there's no magic number like, bonds at 111 means interest rates are going to be.
Yeah, they could after the rally we had on Friday and the rally this morning, 115, we're just under 116, they could easily lower rates here. Let's go next slide. Last week, you expressed displeasure with how you handled a Microsoft trade and talked about the wide bid-ask spread on the opening. I understand that you're trying to close an earnings position so you can focus on the show, but if the bid-ask spreads are fairly wide at the opening, would it be better for an inexperienced trader to wait 10 or 15 minutes for the spreads to tighten up?
You're talking about pretty wide markets here. They were like $3 and $4 wide. So to answer your question, listen, I would say yes, but with an asterisk on it. Like you're able to watch what the market and the stock is doing. The only reason Tom was annoyed at his fill was the stock dropped by about $5 or $6. Now, if he had watched the stock and he saw the stock dropping by $5 or $6, or rallying by $5 or $6, he would have changed his trade price. But again, he was looking at pre-market markets, which are good to a certain point, and then the market itself opens and you have to watch it. So I don't blame Tom. It happened almost right on the opening too, so it wasn't like you had a chance to watch the overall market.
Yeah, I mean, to be fair, if it was any other stock, or there's only a handful of stocks, you're talking about Microsoft, which is a $4 trillion company. You do not expect, I didn't expect to get bad markets in Microsoft. And if it wasn't bad markets. You didn't expect the stock to move so much. I didn't expect the stock to move $10 from the last print it had to the first print, from the last print it had when we were closed to the first print it had when we were open. That right. Surprised me, and I didn't, like Tony said, I didn't adjust my price.
And the market not doing anything different from. It wasn't like the market rallied or sold off significantly.
However, if you have the ability to wait 10 minutes or 15 minutes, of course, wait. You don't have to do it on the opener. Absolutely wait.
Yep.
Let's go next slide. I inadvertently triggered a pattern day trading rule in my account, and I used my once in a lifetime reset. I understand that I'm stuck in jail now with equities, but does this apply to futures and crypto as well?
Pattern day trading does not apply to futures and futures options or crypto. So no, you can do whatever you want in and out as many times you like there. On the equity side, unfortunately, you have to be careful about, your, I believe it's 5 round trip trades in a 3-day period. But hopefully that'll be changed, sooner rather than later. I'm going to say in 9 months, like a pregnancy or a year, but maybe people think it'll be done earlier.
Yeah, I'm hoping for Q4 of this year, but we'll see. But yeah, you can trade futures options, crypto, spot forex. You're in jail with equities, unfortunately. Yeah, I mean, if you've already used your one-time exemption, hopefully they get rid of this ridiculous rule quickly. Let's go next slide. Is there a way on the platform to run a scan to see liquid, high implied volatility stocks?
I mean, we just go by IVR. Sure, you can just click on IVR. I use the high option volume list. You can use any list you want to make your own, and just click high to low. I do it all the time on my option trades today, every Tuesday and Thursday. Podcast.
It's important that you get comfortable with the scanning we have on Tasty. So what you do is you go, and there's a series of icons in the center section of the platform. They run vertical, not horizontal. They run vertical. And the second one down when you get to the icons is called watch list. If you hold your cursor over it, it's in the vertical column just to the left of the center of the platform. If you hold your cursor over it, it says watch list. If you click on that watch list, your next choice pops up at the top, and there's a drop-down menu. If you select, for example, you go in there and you go to something like liquidity, and then you go over to high option volume, that will bring all the high option volume, liquid high option volume stocks. Then you can go to the IVR column, and on the top of that, you can click on it, and it will take you to ascending or descending order. And so if you're covering positions, you'll like to see low to high. If you're opening positions, you'll like to see high to low. And it's really simple. It's super fast. It's the easiest way to do it. You could scan by liquidity, you could scan by anything, but for me, Tony and I default to high option volume, and then we go from high IVR, high to low.
A lot of people like to use the NASDAQ 100 list or S&P 500 if that's what you want to do. Go pick your poison. It doesn't matter to us, but for sure.
100%. Let's go to the next slide. I think I once heard you say that calculating return on buying power is not the best method to calculate success. Why is that, and what would you recommend instead?
Calculating return on buying power is not the best method for individual trades. You're talking about, like, so you can have a vertical spread that uses a limited amount of money and on a percentage basis makes 50%, 75%, whatever the case may be. But it's such a small part of your overall portfolio. Your overall portfolio might be unchanged or up or down single digits. So really, you got to look at your overall portfolio and not the buying power on each individual trade that you make.
Yeah, the challenge here is that the return on buying power is, you can create trades like a vertical spread, with that basically doesn't use any money. But it's really hard to make money on those trades. So the buying power in those trades is tiny, and so the return on buying power, if you're right, it's going to be huge. But I don't think that's a good path to success. So we look at the return on our net. We look at the return on our net lick, not the return on an individual play based on the buying power we're using for that trade. We look at the buying power we're using for the trade to measure our risk, That's the back of the envelope way to measure risk. We don't look at it. We don't look at it to calculate, success or whether or not it's a good trade. We look at buying power versus net lick to see whether it's a good trade. But we look at buying power used to determine risk.
Good job. Good job out of you. You know what? We're going to take a quick 90-second break, Southern. You want to know why? Because we've got an option jive for you. We'll be back in 90 seconds. Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
What did you get up to last night?
I had a rough night. I was doing webinars till 7 o'clock.
Oh, no.
Yeah.
It's hard being a cam girl.
It is.
You had breakfast for dinner?
Breakfast for lunch, breakfast for dinner.
Oh, no.
Yeah.
Was it even good cereal?
No.
Well, yeah, I was like, what kind of cereal do you eat?
I had some.
You're like a Mueslix guy.
I like Raisin Bran.
Okay.
Special K and granola.
Just not
I like oatmeal too.
Okay, congratulations.
We weren't talking to you.
I like cream of wheat.
To me.
I like cream of wheat.
I was literally talking, and he's just like, I like oatmeal. It's like, okay.
I'm gonna tell you right now, St. Bart's.
Yeah, here we go. See, I knew I'd get Tom going. I have to
only
just talk
been
about
there.
St. Bart's.
I've been there a couple times. I love St. Bart's.
Couple of times?
Couple times.
Are you sure it's not going to get you in trouble? Would you like me to get that cut out, or would you like to keep that in there?
Keep that in there.
Okay.
What's the other?
Tough
What's
guy.
the other?
Wait till I tell about St. Bart's a couple of times. Wait, I could be wrong, but wait, I have it here on film.
Wait a minute. Hold on. I've only been there once. What do you mean?
I already texted how many times you've been to St. Bart once. I go, ooh, do I have news for you?
I'm getting tickets. You're coming with.
I'm not.
Yeah, you will. I'm buying good seats, and you're gonna
I'm
come
not
with.
sitting through it.
You're gonna tell me Elton John's no good?
Radio was
one of the worst concerts I've ever seen in my life.
In the day, you're gonna tell me Elton John's no
In the day, what? I didn't see him 40 years ago. I'd rather see Lady Gaga.
So
you're a freaking poser.
So then I said, hey,
what? Give me one name of one Lady Gaga song.
I don't know the names. I just like before we get all excited here and start, and start using those little what do you call those things that you blow out on New Year's Eve?
My what do you mean? What?
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option. Jive.
Tomas, we're back, my friend. You know what that means. Time for a little bit more Tasty Live with this option jive.
Option.
Listen, drink on your own time, okay? It's 8:15.
Yeah, this is I was trying new iced teas this weekend.
Okay, what is this? Okay, where is this going? You were trying new iced teas this weekend. So, and I'm a guy who's boring on the weekend, right? Okay, go ahead. Yes.
Oh no,
Tell me,
I wasn't boring. I was busy this weekend. I was out. I was doing stuff. I was building stuff, planting stuff, playing stuff, eating stuff. I was doing stuff. You missed it. Let's see. What do we got here? Well, actually, it's late. Let's go, Beth. Let's see what we got.
Okay, let's do it.
Ooh, we have a little option jive today because Kai is on vacation, so we're not doing the weekly wrap up. And we'll see what we got here. Implied volatility and option duration. So, just a little bit of kind of this is a life hack here. a little bit of a recap. Option pricing depends on 5 factors: underlying price, strike price, interest rates, volatility, and time. Among these, volatility and time have a special relationship. Really? They have a special relationship too? All right, let's see what they got.
I've had enough of these special relationships in my life. I don't need any more.
Special relationships are definitely overrated. In the Black-Scholes formula, volatility and time appear together as volatility and time. This mathematical connection means when one factor decreases, we can increase the other to achieve similar pricing results. Now, Tony will explain what's in the box.
Oh, this is where I get my time in the news articles.
You wanted to be in. Here you go.
Here's your time. Get up there, kid. Get to bat.
All right, we'll go to the next slide.
That's the Black-Scholes formula, Sadnov. Everybody knows that. I can see that in my sleep.
When the implied volatility is higher, options carry high time premium, allowing us to potentially capture profits more quickly. Shorter durations work well because the rich premium compensates for less time. When IV is lower, like it was going into the end of last week, options are cheaper but need more time to develop. Longer duration gives our trades room to work despite the lower premium environment. What you saw on Friday was a very typical example of when IV is really low, then you have a big move. That's when you get these very high percentage moves that kind of hurt if you're not prepared for them. Let's go to the next slide. So even though we normally choose an expiration date closest to 45 days in order to optimize performance, sometimes we can adapt our duration based on current volatility, especially when 45-day options are not available. So sometimes when volatility is super high, we'll reduce duration. And when volatility is very low, we'll increase duration, because increased duration synthetically acts as kind of a buffer, and it will synthetically increase volatility. In high volatility, you can reduce the duration because you're just taking advantage of the all the added juice. Let's go to the next slide. So see if this works. We tested 3 different approaches using 16 delta SPY strangles: 30 days, 45 days, and 60 days when the IV rank was above 30 for all market conditions and when the IV rank was below 30. And each approach was tested 2 ways: holding to expiration and exiting at 21 DTE. We don't really hold anything to expiration, but
no, but I mean, a lot of people like to. I mean, it is the fastest theta decay, but it comes with other gimmies and gotchas, right? By keeping that on.
Yeah, but just remember, here we're looking 30 DTE when IV rank is above 30 and 60 DTA when IV rank is below 30. Let's go next slide. So the results demonstrate that matching duration to volatility environment produces consistent returns. We should really say more consistent than trying to outsmart the math. Shorter durations during periods of high volatility slightly outperform, while longer durations offer more stable performance with reduced volatility. So as you can see here, again, we talked about kind of trying to normalize the P&L. In the 45 days for all markets, you know, you can see how that's just kind of right in the middle. And the 30 DTE for over 30 with a P&L volatility of 27 and a 60 DTE when IVR is under 30 with a 24% P&L volatility. We basically normalize all these things. So if implied volatility rank is really high, go a little longer. If implied volatility rank is just kind of the middle of the range, we just go normal. And if implied volatility rank is normal 45 days, and if implied volatility is super low, we go longer. And everything normalizes.
Pretty standard right there, right? I mean, that's
similar. Yeah, it is. Similar performance pattern with early exits, because that was holding to expiration. This approach improves both returns and risk metrics across all strategies. See, the last slide doesn't do as much for me because we don't hold anything to expiration. Longer term strategies such as the 60 DTE show the best risk-adjusted performance when combined with early exit discipline. So you can see here at 21 DTE, the average daily P&L is significantly higher. Now, when you say what's the difference between $1.12 and $1.44, well, 30 cents on $1.44 is almost a 25, almost 25 or 30%. It's actually 30% more. Right. So that's a huge number. You can also see the volatility of your P&L is way down, and this makes it in the 60 DT, it's half, almost half. In the 45 DT, it's just, it's let's say it's a third less. And the same thing for the 30 days. So you have less P&L volatility if you measure 21 days, and you make, 30% plus more money. It's a no-brainer. That's why I mentioned this morning, I rolled gold, I rolled natural gas, because we're at 21 days. That's it. Boom. Just follow the discipline. Let's go next slide.
It makes making the decision so much easier. You don't struggle with yourself. Now,
yeah, you don't even have to think about it. Hey, I'm at 21, 22, 20 days. Just roll. There's nothing else to think about. It's like it's a no-brainer. You don't even have to, it's the best thing we ever came up with, because you don't have to think about it at all.
Yeah.
Adopting option duration to volatility conditions maintains consistent performance across all different volatility environments. Closing trades at 21 DT significantly improves both returns and risk, regardless of the initial duration. And the 60 DT strategies show the best risk-adjusted performance when combined with early exit discipline in low IVR. It's a great refresher piece.
Very good, my friend. Let's take a quick, let's take a break and come back. We got more Tasty Live at the opening bell next. We'll be back in 90 seconds. Don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 82,
83. I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him as a charity case.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tomas, we are back, my friend. You know what that means? The opening bell here in less than 3 minutes, my friend. Even the S&P is hanging pretty steady most of the morning. They're up 30, almost 37 handles. NASDAQ up 204. That's your leader in the clubhouse by a skosh. Russell up 14. Dow up 201. They're all open. They're all up around the same on a percentage basis. Volatility in by 80 cents to 1910. Hasn't moved all morning since we've been on the show. Bonds up 4 ticks, hanging in there also to the high end of their range, 115.26. Bitcoin futures are up around 1,000 or so, up 980 to 114.5. You can see here trading at the lower end of their most recent range. Oil down $1.63, sliding for the last 3 days. I don't think too many consumers worry about oil sliding, but gold is catching a bid, Sadnov, up $27 and change, almost 28 now, trading just a skosh off of its highs. Silver doing the same too, up 43, but off of its highs of close to 40, now trading 37 and change. Net gas flirting with 3 on the low end of its range. I'll wait for the rest of the market to open here in less than a minute here, Sadnov. What'd you do in gold? Oh, just rolled up some puts. I gotcha.
Yeah, gold's bounced a little bit today. I was looking to see if there's anything happening in copper, but there's really not. I don't have, now that I took off my silver position this morning, I just don't have a lot on, just a small gold position. So
PLTR, Hims, Lemonade, ADM, Young.
That's tonight, right?
Yep, tonight.
We have a position on in HIMS. We have a HIMS position on. It's pretty much a bunch of ratio spreads. And in PLTR, I think those are the only two we have. What else did you say there is?
PLTR, VRTX, Hims, Lemonade, ADM, Yum, Caterpillar, to name a few. There'll be a couple more.
We do have a Lemonade position on, and we do have a Caterpillar position on.
Beautiful. Well, there's your bell, your extended bell sound. And we come spinning out of the turn here on the E-mini S&Ps up 39 and change, about 7 handles off of their highs. Netflix is up around $11 or $12. You were talking about some of these stocks earlier. Meta up around $12 or so. Also, Microsoft up $6 and change. PLTR for earnings, you can see here after the market closes today, up around $5.50. Crowd up 5 and change. Tesla up just under 4. On the downside, Sadnov, we got a few, not many, but Boeing down 2 and change. APP down around 3 and change. FSLR down $1, and every other volatility-related product down small. Some oil-related stocks like XOM down small too. Even the S&P's up 44.
Yeah, this is right around the highs.
Is that you or me?
Yes, I was short some puts in Lemonade. I don't know. I think it was a what's your assumption trade because I don't remember doing it myself. But since they have earnings tonight, I just covered the puts. We made a little money. We sold them at 90, bought them back at 15 cents. Now, sorry, bought them back at 75 cents. People say, well, why even cover them? Because I didn't really care about that position to start with. I mean, if there's some actual trading in Lemonade, which I'll take a look at later. I mean, I'll do something for earnings, but to be fair, I don't even know if that stock trades enough. You know what I'm saying?
Sure.
We have a Caterpillar position on. We're short the 460, 470 vertical spread in CAT, and the stock's up pretty good today, but I'm just going to cover the vertical spread. I don't even. Markets are really wide in there. Maybe I can't cover it. I can cover it. Maybe I can't cover the price I want to. But
maybe you can, maybe you can't. We'll find out.
Yeah, there's a big difference. But I wouldn't be opposed to doing something in Caterpillar. But you know what? It's another one of these stocks. It's a
markets, right?
$450 stock with crappy markets and not a stock I particularly want to trade for earnings.
Right.
So I'm going to leave a bid in all day, and if I get filled, great. If I don't, we will.
We'll take it under advisement.
We'll live to play another day, right?
We certainly will. We certainly will.
So I'm leaving my bid in. Not going to touch it. Caterpillar's up 280. We'll stay away from that. Let's see what else here. We're getting close to a level where I didn't think we'd see S&Ps up here.
The S&P's up 48 on the news that BAT is back.
Well, I'm going to start to sell them
and
up here because
MEF at 314.
I kind of like the
50 cents off the high, Sadno, if you could be somebody.
Yeah. All right. And I think the best play tonight, I mean, if you're going to play anything, is probably going to be PLTR.
I would agree.
I mean, that's really the only one, right? That's the. I mean, Hims moves around a lot. It trades a lot.
It's got good IVR of 43. It's up almost $6. It's almost a 3.5% move. You look at September options; they're about 15 cents wide. You go into the weekly options, which would be 4 days to go, and a $17, almost $18 expected move. And you got the same type of markets, 15 cents wide. Good markets at PLTR, widely watched.
Yeah, but what I like about it is we had a vol pop on Friday, so you have decent IV rank in there. You've got what you said this week, a $17 expected, $18 expected move, right?
That is right. That is right.
Yeah. So I kind of like that. So the stock's trading for 160. So right now, you can go as high as the 200s. Well, not really.
Almost.
195. The markets are pretty tight. You can go almost 2 times the expected move. Well, not. There's a lot of call skew in here. Oof, a lot of call skew.
Oof.
Woof.
Oof.
Woof. $35 apart. You can, let's see. I'm just seeing how tight these markets are.
Oof.
Not bad. They're trading pretty close. Oh man, I got greedy. I was gonna say, I think you can trade these things around mid price. I got the first one off at mid price. I can't even get the second one off 2 cents worse.
Oh, darn.
They made a mistake. They bought a strangle from me 1 second ago, and now it's 10 cents lower already.
Yeah, you did it at 149. It's yeah, you're right. Yeah.
Yeah, they made a boo boo.
Yeah.
They la boo boo. They made a la boo boo.
You know, I had the boo boos for you. You didn't want one.
I don't want a la boo boo. But
you could have put it on your Merce that you walk around with.
It's pretty rare that you see market makers buy a strangle and it drops 15 cents in.
That was an existing order. Probably.
You think so? I don't know.
Yeah. You think they changed vol that quickly on really no movement? Well, I mean, if it rallied by about 40 cents, I guess maybe.
I don't know, Tony. I think they just made a labubu.
I think a labubu has to be our new, when you do calls instead of puts, we have to call it a labubu.
It's a labubu. Yes, they made a labubu, and they bought the stuff from me at a very bad price. They labubu'd it. Yeah, I can't get any more off. Wow, that was weird.
Right.
Anyway, hang on 1 second. Let's see. Hims. I think it's the same thing in Hims, but I have less of a love for that stock.
But you like the product.
The product?
Yeah.
I don't know. I don't have an account with them, but
You don't have a subscription, a weekly, monthly subscription?
I don't have a monthly subscription. Let's see, what do we have in there? We're short some puts and some calls. I guess that's pretty normal, right? You're short puts and calls.
Yeah, that's usually what we do here on the show.
I know. I'm gonna start over in. I have like some ratio spreads on in there. I think they were pretty good. We did a 5/12 ratio spread.
That's you and Hims. Did you close it that way?
No, I'm looking at it right now. We did it at 230. We did it at 228. It's 123.
That's a good buck and change your way. I mean, the S&P's at 54. And
Yeah.
by the way, you didn't get any weekend volatility coming out of your positions either. So
I didn't get any week. I didn't get paid on the weekend.
No, you were not going to. I mean, you might, if we hang out here right now, and if you're looking at now, if you had delta in SPY related products, you're probably getting some of that this morning with this rally of 55 or 56 handles.
57 handles this morning really surprises me. Did not think we'd see that. But let me tell you something. Hims, I'm surprised. Very liquid markets. Expected move of $10. Stocks trading 62. I mean, I don't trade enough Hims to really.
Ivy rank of 54 looks good, Thomas. It's trading near the higher end of its range, just a skosh off its highs.
Man, there is some call skew in here.
Oh, for sure, and that's why you put on that call ratio spread, couple whatever.
Yeah, there's some major league call skew in here. I'm just putting on some
big league call skew.
What?
Big league.
I'm putting on some small trades in here just so we have some stuff to watch for the rest of the day. Sold some 4-day strangles in Palantir. Sold some 4-day strangles in Palantir and Hims. In Palantir, we sold them $1.49 while we're doing this show. They're at $1.30 now, and you can't get them.
And in Hims, you're $20 away on the put side, $40 away on the call side. And it's pretty much a delta neutral spread, maybe a tiny little short delta to it.
I know.
But just to show you, just to characterize how much call skew there is there.
Yeah, it's crazy. But I just did something small just to get something on. Let's take a look and see what else we have here. This morning, biggest losers for us are the Qs, the SPY, and that's it. Qs and SPY.
Qs and SPYs, that's
biggest winners, Coinbase, and that's it. And the Japanese yen.
Beautiful.
One stock that's been just an absolute freaking powerhouse is Reddit. It's up $8 this morning on the heels of a crazy move the other day on Friday.
Yeah. Reddit bucking the market here. Reddit's the horse starting off 197, up almost 5%, up $8 and change, as Thomas said.
I mean, Reddit is just, that move on Friday was up 27, and then what we got today on top of it.
Reddit was a bucker for sure.
Yep.
All right, you ready to take a quick 90-second break, son? If we can do that, we can come back. We got the skinny on options, abstract applications with my man, Dr. Jim. Nothing says Monday like him. You want to do that?
Sure, let's do it.
We'll be back in 90 seconds with Mr. Monday right after this. This Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
Little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
You want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not Iberico ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
Oh, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful.
I could be
You're
argumentative.
68% cantankerous. Okay, there you go.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means? Nothing says Monday like this, man. That's right, Dr. Jim, the skinny on options, abstract applications. How are you, my friend?
Man, I'm well, man. I mean, I'm ready to step into the fray with you guys and make a couple of boo-boos. Like, that's what we're doing, right? Like, we get in there and we start boo-booing it up. Is that right there, Tom?
It's what we do best.
I mean, that's my wheelhouse. That's not the Red Sox wheelhouse. 11 games over 500, Tom? Dude, that 20, you should be very, very concerned, my friend. That 20 on the over-under for 84.5 games, I mean, that's a done deal. I think they're also going to surpass the Cubs in the next couple months.
Well, it's entirely possible, but what should I be concerned about again?
Well, I mean, the Red Sox are 11 games over 500. They're 3 games away from the best record in the AL now.
Yeah, but
Does
why
that
do
surprise you?
I forgot why I care.
Well, Tony, help me out here. So I've got $20 cash on hand from the Eagles Super Bowl. I've got 20 on the Red Sox over 84 and a half.
You have a hard time collecting these, Dr. Jim.
I know. I'm aware. No, I'm aware. But I'm not gonna let them forget. Like, this is why they invented text messages, Tony. Right? This is why we have this constant communication.
You're gonna get a new phone. Who dis?
I'm gonna get. I thought. Yeah. That's so funny. Oh, that's so funny. But yeah. So next Friday, you guys got Trading with Tom and Tony at Work by 11 in Chicago in the homeland, the motherland. Are you guys excited about that?
Very exciting. Can't wait.
Oh yeah.
Maybe Bloomberg could come out and write another article about how Tom commands the stage.
Oh my God.
You know what I mean?
Somebody is hurt.
Right?
I saw that.
I'm up there fixing every one of his boo-boos, making him look good and stuff like that, and there.
I'll tell you what, Tony, with the Bloomberg thing plus the Ethereum thing, where you apparently weren't there for that either.
I wasn't there. I mean, it was no. I mean, look at me. He aged the shit out of me. I mean, I think it was me on the Ethereum one there. I mean, I had a nice full head of dark black hair, and now I look like Sosnov.
You still got the same tan though. Like, you've kept the bronzing up. Like, the bronzing has been incredibly consistent.
Thank you.
I've got to give you that. But so when he came on for the Ethereum, at the time, I can't remember. Could you actually buy Ethereum, or was it still just an idea?
No, you could buy it.
You could buy. He actually offered us.
I mean, it was pennies, right? I mean, it was pennies.
It was 25 cents, but I don't remember where you could buy it.
Wow.
Like,
yeah.
It wasn't. There wasn't really.
It was like a dark web. You had to go down into the sewers.
Yeah, you'd have been on you'd have been somewhere like around Mount Gox or something.
It was Mount Gox. You're right.
It would have been some exchange that blew up, and unless you had moved it off into your own wallet or something, there wasn't I'm not sure where we would have put it. Let's put it that way.
Yeah. And so, that's interesting though, man. It's so crazy that was 2014.
Yeah, like Coinbase. I don't even know if Coinbase existed. I don't think it existed then.
Yeah. No, that's crazy, man. That's some wild stuff indeed. But well, all right, gentlemen, you guys want to do some finance this morning? Speaking of some wild stuff, we got we got the markets are ripping this morning, man. Let's talk about when extrinsic value sticks. Whew, man, did you guys know that extrinsic value can be a little sticky at times? Have you ever thought of your extrinsic value that way?
I don't think I've ever Sticky.
I mean, I think we do think of it generally as being a little
We
sticky.
talk about it about being bid or something like that.
Yeah.
We never use.
I'm not
Well,
sure
wait,
I'm
well,
not sure
of course you
exactly what you
don't.
mean.
Well, of course not, because we haven't done the segment yet, right? So you got to give me the next 8, 12, maybe 34 minutes, and we'll figure it out together. But when it comes to, so you said that you generally think of it as being sticky. Are there times when you don't think it's that sticky? Are there times when you feel like it's, whatever the antonym to sticky would be?
I'm not sure what you mean by sticky.
Well, sticky means I think, Dr. Jim, correct me if I'm wrong. You're looking at extrinsic volatility, meaning it has $1 of extrinsic volatility, and the stock goes a little bit higher or lower, and it still has the same $1 of extrinsic volatility. It didn't move 1-to-1 with the delta that it represents. If the stock went down $1 at a 50 delta, you would think it would move down accordingly. But no, extrinsic value stays bid.
That's essentially right. I'm going to go at it from a slightly different angle, but that's essentially right. But are there times when it's kind of working a bit more loosely in your favor there, Thomas? When maybe you're kind of getting paid on the extrinsic like you would hope to get paid, let's say.
Okay.
Like you even said yourself over the weekend. You said, "Hey, I didn't get paid on volatility this weekend." Now maybe that's because volatility didn't come in or whatever. But when it comes to the extrinsic value being sticky, maybe you got trapped in some sticky extrinsic value. That's also possible.
Let me see what you got here, and then I'll comment.
All right, that sounds good. All right, let's go here, Beth. Thank you very much. All right, so when it comes to option pricing, analysis and interpretation can get quite complex when you dig into an option pricing model like the Black-Scholes, but in its simplest form, option pricing boils down to two component parts: intrinsic value and extrinsic value. And as premium sellers, it is extrinsic value that is of utmost importance. But extrinsic values themselves can behave quite differently from one strategy to the next, even. And so when we think about our role as premium sellers, like the widget that we're selling is extrinsic value. Like that's the thing that we're essentially selling, because most of the positions that we have, the strategies that we put on, out of the money, we're playing extrinsic value. That is the quote unquote premium that we are selling. And so this is of utmost importance, the extrinsic value. But we have to understand that in different circumstances, the change in the extrinsic value or how that extrinsic value is going to behave is not going to be the same. And that's what I wanted to highlight here this morning. So Beth, hit us here on the next slide. So the key to this begins with a very simple graphic. So if we think about moneyness, so you've got moneyness, at the money, out of the money, in the money. And then you also look at extrinsic value. The at the money strikes are going to have the highest amount of extrinsic value. This is one of those definitional things that I think a lot of people learn. A lot of people even watching the show this morning, even new traders, have probably heard that before, and they've kind of filed it away, and maybe they understand that extrinsic value is the greatest for the at the money strikes. Okay. The thing that I think, though, is maybe more surprising to traders that they don't quite realize, the at the money strikes also have the stickiest extrinsic value. So when you are in an at the money situation, not only are you dealing with the most extrinsic value, which again, as a premium seller, like, we don't mind selling high extrinsic value, but we eventually want it to move lower. Also, though, on top of that, the extrinsic value itself is going to be very, very sticky. And there's a mathematical reason for that we're going to talk about on the next slide. But when it comes to at the money strikes, gentlemen, do you guys kind of think about the fact that, all right, these strikes are going to cling to this extrinsic value to the very end?
I mean, there's definitely some extrinsic. The further you go out of the money, they're gonna hold value as forever.
Yeah, because risk is gonna have value forever, right? But the amount of money is gonna be small.
That's correct. Yes, that's correct. But when you move out of the money, yes, risk is always going to have value, 100%. But when you move out of the money, that extrinsic value gets a lot less and less sticky. That extrinsic value, the options are not going to cling to that extrinsic value as tightly as they might for the at the money strikes. So when you guys are putting on your strategies, I'll even give you guys a little bit of a hint, like maybe a strangle, right? Versus maybe a straddle, right? These are going to behave so differently. One of the big differences between those strategies that we're going to look at here in a few minutes is the stickiness factor. Like you don't have the same stickiness on the extrinsic with a strangle that you do with a straddle.
What do you think about that?
Are you tracking with me, Tom? I know you're still trying to add up all the money you're going to owe me, but I can help you with that later. You don't have to worry about that.
What's your question? If you say it again.
So when you put on a strangle, like if you're thinking about a strangle versus a straddle, obviously we do more strangles than straddles, but we'll do some straddles from time to time. Do you think about the fact that because the strikes are out of the money, the extrinsic value, you're going to get paid on that extrinsic value a lot more quickly, a lot more easily. And so when you put on a strangle versus a straddle, that stickiness factor really, really matters quite a bit in terms of how the extrinsic value changes. And by the way, for the record, this is not my opinion. Like this is governed by mathematics, which we're going to see here in just a minute.
It's a tough question for me to answer because I'm not really sure where you're going in this. I mean, we've researched it a million different ways. I'm not sure where you're going.
I guess I'm just curious. I mean, you guys have been trading for umpteen years, right? I mean, maybe this isn't something you think about. I'm not trying to trap you. This isn't a trick question. I'm just curious if this is something you even think about when it comes to when you put on your strategies. Like when it comes to choosing out of the money strikes versus at the money strikes. I mean, I know that volatility, here's another way to phrase the question. I know that volatility is going to obviously inform a lot of strike selection. Like I know that the research team has looked at this so many different ways. But I'm actually curious, when you choose a strike, like an out of the money strike, like for example, 30 delta versus 40 delta would be a classic example. You want to sell a put, you're trying to decide between 30 delta and 40 delta. Does it ever enter your mind that the 30 delta put, the extrinsic value on that is going to be a lot less sticky than the 40 delta put? That's a direct way to ask this.
We generally go wider because it means we have to do less. Like it requires less management. Like we don't think of it in terms of stickiness. I've never thought of an option as in terms of stickiness. I think about it as far as I just don't want to have to micromanage the position, and I don't want the delta swings. So I prefer the further out of the money because it's just easier to manage. Is that what you're asking?
No, Dr. Jim, I would say it's not something that we look at. Like I never look at how much extrinsic value an option has compared to another option, because I'm looking at the probability of success. We've done a lot of research, and you've supported it too, where at the money straddles are actually a little bit more advantageous to put on and sell than out of the money strangles. But we go with the higher probability of success on the strangles. So I don't think we look at the extrinsic value, but the segment so far for me is showing me that as my options move and I get rolling up and rolling down, I get closer to at the money, that my extrinsic value or the premium itself is going to be a little bit more meatier. So
it's going to be meatier. It's going to be meatier, and the meat's going to stay on the bone.
Right.
So here's another way, Tom. Let me speak your language to you, right? Okay. So like you go, where's that? Terry Black's, right? So you go to Terry Black's in Texas. You're sitting out by that smoker and you order like whatever, the brisket. You ordered us brisket. You ordered us 19 pounds of brisket. He bought it out. He brought it out. And it was falling off the bone, Tom. Tom, you couldn't pick it up without it falling onto your plate. That's an out of the money strangle. Now, contrast that with like, I don't know, I hate to throw her under the bus, but maybe Mama Schultz's ribs. Like Mama Schultz's ribs, it's not necessarily going to do the same thing. Like you're going to have to really chew for a while to get that meat off the bone. And so that's going to be your out the money straddle. So there you go. Does it make sense to you now?
Well, when you talk about bones and brisket, the answer is no.
You made me have to throw my mom under the bus. Like I had to go to those levels this morning to get through to you, man.
Dr. Jim, let's hope you never have to do that again. Okay?
Let's hope.
I'm just saying.
Let's hope.
And she watches the show from time to time. Mom, I love you, and I hope that you know that. Your ribs are absolutely amazing.
Let's hope
Terry
that
Blacks are out of this world.
Let's hope that the next time you have brisket, you don't have to take the bones out of it, because then I'm not sure what you're actually eating.
Man.
But I'm not. Again, I'm not sure.
No, it's okay. It's okay. Tom, this is why I'm here. right? I brought stickiness to your world. I brought kurtosis to your world. I brought moneyness. Like, it's all good. Beth, hit us here on the next slide. So this is kind of this is what's governing the process. Tom, this will not surprise you. I've brought this up so many times on the network. It all comes back down to charm. It all comes back down to charm. So when you're talking about a stock price and like an out of the money strike, that's like a strangle, right? Like the first example. The charm on that option is relatively high. Now, what charm is it's a second derivative of the option pricing model, and it's delta's derivative with respect to time. So it essentially shows you how delta itself is going to decay as you get closer and closer to expiration. And so as deltas get dragged down, extrinsic values are going to get dragged down with them. And so a big reason why an out of the money strike is going to decay more rapidly is because the charm is higher. Contrast that with an at the money strike, like a straddle, for example. Now you're in a situation where the charm is actually quite low. So it's not going to decay as rapidly. Because, I mean, think about an at the money strike, right? By definition, the delta has to stay around 50 even as time goes on, because it's at the money, and at the money strikes have to have a delta around 50. If I sell an option with a delta of 20 and time goes on, is that option's delta going to stay at 20? No, it's going to decay. It's going to be 18, 14, 11, 8, and so on and so forth. And so that's kind of the point here. And so, Beth, go to the next slide, the final slide, the coup de grace, Tom. When it comes to strangles and straddles, right? This is kind of what I alluded to just a minute ago. If I sell two options with a shared strike in the center for a straddle, I'm going to get the most extrinsic, but I'm going to have to combat the super low charm on that strategy, which is going to cause the extrinsic value to stick to the strategy. So how do I combat that? What do? I manage more aggressively. I manage at 25% of max profit a lot more quickly than I might a strangle. Whereas if I do a strangle where I'm selling a put out of the money, I'm selling a call out of the money, everybody's happy, I don't have to manage as much, as high probability, all the things we've already addressed. I also get the benefit of higher charm, and so I'm going to be able to hold on to that position a bit longer, maybe go for 50% of max profit, and just be able to get, a bit of an easier time, let's say, because it's going to be Terry Black fall off the bone type of extrinsic. Do you understand now?
He was talking about a beef rib, Sosnoff. He wasn't talking about brisket. It's okay. Dr. Jim doesn't know what he's talking about when he's not talking about math.
Whatever. And even then, it's still only about a 50 delta. Speaking
questionable.
of 50 delta.
Okay.
Yeah.
So
Tom ordered 19 pounds of something last time we were in Houston a few months ago, and it fell right off the bone.
I bid the 19-pound poo-poo platter. Okay, that's what it was. You walk up, you don't have to wait in line. I'll take the 19-pound poo-poo platter. So I don't want to burst your little bubble here, because I wasn't sure exactly where we're going, but now I see on the last slide where everything is.
Here we go.
The reason that we go for 25% on straddles and 50% on strangles is not because the strangles are a better trade or the straddles are a worse trade or vice versa. It's because for dollars at risk, it's the exact same thing. It's just our preference is the less management on the strangles versus the micromanagement kind of requirement on the straddles. But I don't think that there's a difference with which one's better.
Well, I mean, if the markets are priced efficiently, can there be? There really can't be, right?
Exactly. Yeah. So I don't necessarily think that, the out of the money strangle is better than the at the money straddle. I don't think it's a better trade. I think it's a different kind of trade. So that's why I wasn't sure where you were going with this discussion. Like, I don't get the point,
No, I totally agree with you. This is not a better or worse discussion. This is really more of a, oh, wow type of discussion, like oohs and ahs type of discussion.
Oh.
Where traders might be looking at a strategy, or they might be, with an at the money strike, they may be, why am I not getting paid on the strategy? Why is it moving so slowly? Like, why is the extrinsic value going nowhere? Well, it could be because the extrinsic value is sticky. Why is the extrinsic value sticky? Well, it could be because the charm underneath the surface is very, very low. And so it's just this is another way to, say something we've been saying now for however many years it's been. Every single thing that you see in the markets, in the strategies, there's a mathematical underpinning for every single thing that you see. And in this case, it happens to be charm. Now, we could take the lazy man's approach and just say, I'm going to do the triangle because it's easy. I'm not doing the straddle because of whatever. We can do that. But then I can step in and I can help you out. I can fix your labubu and we can talk about some charms.
There you go. You got it.
There it is. I think that's pretty much it. You guys didn't even comment on my lettuce this morning. I mean, look at this, man. Like today, like it's doing some things.
Even the S&Ps are up 73. Sadnov is a little flustered. He's not going to comment on much of anything.
Sure, fair enough.
No, I'm not really that. I'm not flustered. I'm more surprised. I didn't think you'd see up. I thought last night when they opened lower that they would rally this morning and maybe tomorrow, but I thought they'd be up like 20.
Mm-hmm.
Markets moving.
Not up 70?
No.
As premium sellers, one of the things that matters most to our success or failure is extrinsic value. So understanding relative extrinsic value levels and its inherent stickiness across strategies is incredibly helpful, especially as it relates to strategy selection, trade management, and the resulting profit or loss. Red Sox 3 games out of the best record in the AL. You can't stop them now, man. You can't stop them.
No, you can't. No, you can't. All right, Sadnov, what do you think?
It's good. It's good. I mean,
all right. Well,
yeah.
You get a good. You get a good, Dr. Jim. That's like a C,
I'll take it.
C plus. I think. I don't know what good is these days. I mean, good these days could just be passing. I mean, for all I know. I mean, Vinny comes home with a D and he thinks it's good sometimes. You know what I mean? Then I take everything.
Tony, have you ever seen the? You've seen that video that's floating around the internet where they change the grades, right? That little like 14 or 15-second video.
Sure, it's
like,
awesome.
Oh, it's so good. Oh, it's so good.
I never thought of that in my entire life, but I always got A's because I was the boy leader of Arista and Archon. So
there you go. There you go.
We're gonna take a quick 90-second break and come back. We got more Tasty Live after this. Even the S&P's up 72. America. Come back in a second.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. Yeah, that's gonna. There's a spider on my desk. No, kill it, kill it, kill it, kill it. Oh my god, oh my god.
Where is it?
It's on my microphone.
I don't see it.
Not from there, you won't.
Oh no, oh god.
Spiders don't bother me at all. Just the big ones.
No, it didn't bother you at all. From where you were sitting, you had no problem with it. Man, let me tell you something.
Thank you,
I don't want you to throw me a life preserver. That's never going to happen.
Thank you, Bat, for coming to my aid.
You're welcome. You're welcome.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
people are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live, sounding off with market measure. But first, let's take a look at the market. Even the S&P sounding off, trading near their highs, up 74 and a half handles.
They sure is.
NASDAQ is the leader in the group, up 374. That's a little over 1.5% versus a little over 1% for the rest of the market, with the Russell up 23 and the Dow up 400. Volatility in by 7%, back to 1840. Sosnoff. Bonds holding steady, 115.19. Bitcoin up $2,250. Sosnoff, 115.8. Gained about $1,000 since we've been on the show.
All right. A couple things to just mention real quickly. Sorry for the long break. I was trying to figure something out. Couple of shows coming up. Like Dr. Jim just mentioned, hopefully he will be out in Chicago for our event that's in 2 weeks on the 15th, week from Friday. So Tony and I'll be at Talia Hall 2 weeks from Friday, August 15th in Chicago. if you want to sign up for it, tastylive.com/events. We can't wait.
You sure it's Tony and I? Because according to Bloomberg, it's just you up on the stage.
Okay, I'll change this. Beth, can you change the slide? In 2 weeks at Talia Hall, I will be at Talia Hall. And if Dr. Jim's here, he can help me out. So we'll be in good shape. But doors open at 8. Show starts at 9. I will be doing this by myself. I do not need any help. And Beth, you can help me if it's all right. I mean, any monkey can do it. It's easy.
Wow.
Talia Hall, Friday, August 15th. Can't wait. Then, but actually this weekend, I think it's on Sunday, Mike and his whiteboard, Mike, Nick, and Katie will be at the Crocodile. I have no idea what that is, but at the Crocodile in Seattle, Washington. So those guys are flying a long way out there for August 10th for a really fun event. tastylive.com/events. Go see Mike, Nick, and Katie at the Crocodile. Who's ever been to the Crocodile before in Seattle? Anyway, the whiteboard tour hits Seattle. Can't wait for those guys to bring their stuff to the West Coast, and looking forward to everybody signing up. tastylive.com/events. Mike, Nick, and Katie, it's a great show. It's about 2 hours, a little less than 2 hours long. Hopefully it's small, it's intimate. They'll take some questions. I think you guys are going to love it. Then Tony and I are 5 days after that, August 15th in Chicago. And then the following week, if there is anybody, because this is kind of our roadshow portion of the year, if you are in Mexico City, can you bring this slide up, Beth? We are going back to Mexico City. So if you are in Mexico—
Oh my God, did they Photoshop the shit out of this picture? Who the hell? Man, you got a chin? You're a flat stomach? I mean, you got a little bit of, you're a little chubby going on in the right places? I mean, Lord have mercy. Lord have mercy.
Can you shut him down?
Oh my God.
So come see Tom live in Mexico City if you'd like to. I have a handful of tickets for anybody that lives in Mexico City. I'm going to do the keynote on Wednesday night. That's the one I would come to if you're in Mexico City. I'm not sure exactly on the Thursday night shows. I know it's a panel and there's a bunch of stuff going on.
They even made you smile. Man, Cassie really does love her job. She sure do care about her job.
Anyway, we are going to be in Mexico City on Wednesday, August 20th, 6 p.m. I forgot the location, but I think it's in the financial district, and
you would butcher the address. I mean, you can hardly get the Chicago events correct.
I will get the address for you. But if you're in Mexico City, and Mexico City's huge, I get that. But if you're a Tasty Trader in Mexico City and you would like to come out to the event, it's on us. It's on us. So come out, see us live. And wrote a really fun discussion for that night on AI digitization and the future of risk taking. I think it's going to be interesting. It's a discussion I've never given before. So looking forward to having a little fun with that one. Wednesday night, August 20th, a bunch of you guys came out last year when we did a talk in Mexico City. So hopefully we'll see you again this year. Looking forward to it.
Absolutely.
And again, I said I've got a bunch.
You will be on the stage here all by yourself this time. This will be one of those things. If Bloomberg comes to this, they would see you in all your glory.
I've got a handful of free tickets. Can you get him like a T-shirt from Bloomberg or something, Beth, to make him happy? Because he's so hurt. It's sad.
Do you guys need to hold hands for a little?
No, I'm fine. I didn't do anything wrong.
You're
a shirt from Bloomberg. That was good, Sadnov. That was good. Don't worry. If I need one, I'll talk to my friend Dylan Radigan.
I'll get you a shirt. You know what? I'm going to talk to my buddy Dylan Radigan, have Michael Bloomberg send you like a signed baseball cap or something, if it's okay with you. All right. I'll get you something. Sure. Don't you worry about a thing. All right, let's go. Let's see what we got here, Beth. Anyway, hopefully we'll see. We'll have a couple Tasty Traders come on out to Mexico City. I'm really looking forward to it. It's a cool place. Time buffers to tame volatility. this is a little heavy, but we're gonna do a market measure sponsored by SIBO, and let's do it. Time buffers to tame volatility. Basically, this is a discussion about, do you want to sell lots of short-term trade? You want to make lots of short-term trades, or more longer-term trades? And what does the difference in risk look like? So, because this is a question that we get a lot, but we don't really know how to quantify the answer, but we did for this in this segment. When selling premium, we can adjust the amount of risk and the type of risk that every trade carries. The types of risk you can adjust are duration, volatility, and direction. Since most accounts are experiencing higher directional and higher volatility risk, we can adjust duration risk to help mellow out portfolios. A lot of people do not know that. It's a slick way to do it. Let's go next slide. So duration risk can be thought of as the risk that a trade carries on a daily basis. Let's say we wanted to trade short premium for the next 60 days, and we have the choice of selling 6 10-day trades or 1 60-day trade. Okay? Let's see how the 60-day strangle compares to the 10-day strangles, 6 of those, when comparing them over time. Want to take a guess here? And we're not going to show you, we didn't do this based on results. We did this based on risk.
I can't give you that. I don't know.
Okay.
I mean,
so what you want to think of here is how much more risk are the 6 10-day trades as opposed to the 1 60-day trade? How much more risk do you take
on a versus? Like, let's just say, for argument's sake, if you straight lined it, you might say that there's 6 times more risk just because you're doing 6 of these. Is that what you mean?
Yes, exactly. But there's not going to be. It's not 6 times more risk.
No. I'm gonna say 3 times as much risk.
You're close. Let's go to the next slide. So over 60 days, you could either sell 1 strangle every 10 days or 1 60-day strangle. Trading longer DT contracts gives you perpetually wider break-evens and therefore a higher chance of having more profitable trades over time compared to the shorter duration contracts where break-evens are perpetually tighter. So the first thing you're going to see here is on the 10-day, we took the actual prices here. The credit's about $3.46. On the 60-day, it's $9. So on paper, what you're thinking is 6 times 346. Well, that's got to be pretty close to $20, right?
Yes.
So you collect about twice as much premium. Do you take twice as much risk? That's one way to look at it. And the answer is probably. Do you take more than that? And the answer is maybe. I don't know.
Right.
But the break-evens, the reason you're taking more risk is the break-evens are $1.30 away on the calls and $2.20 away on the puts on the 10-day and $24 and $46 away on the 60-day. So obviously, you're going to take a lot more risk on the 10-day. Let's go next slide. So when you start comparing the pops on the strategies across different expiration cycles, it can be a little bit misleading. But the probability that all 6 10-day strangles will be profitable at the end of 60 days is just 12%. We know that the risk on a single 60-day strangle is lower over a 2-month period because the break-evens are wider and the theta decay is lower. So if you look at it, a 60-day strangle, the pop per trade is 65%, and the probability that they're profitable is 65%. But on the 10 DTs, 6 times, pop per trade is 69%, and the probability that all are profitable is 12%. Now that in itself does not tell the story, okay? Because that on paper you're thinking, well, yeah, I don't need all the trades to be profitable because I collected $20 as opposed to $9, right?
Right.
So I don't need all the trades to be profitable. You're right. Let's go next slide. Okay, But here's the meat of this segment. So over time, the return you are expecting has to scale proportionally with the risk you're taking. Therefore, to estimate how much less day-to-day risk you are taking using a longer dated strategy, divide the credit by the days to expiration of the options to compare the daily risk and the return expectations. So for example, if you collect $3.46 and you have 10 days to go to expiration, then your credit per day is about 35 cents. That's also what your risk is per day. Because what we're saying is to compare, it's a little bit confusing, but if you want to see how much risk you're taking using the longer dated strategy versus the short dated strategy, okay, you divide the credit by the days to expiration to compare the daily risk. So we're going to take the credit of 346, let's just say 350, divide by 10 days, and we're going to get risk per day of 35. On the 60-day strangle, the credit's 910. We're going to divide by 60 days, and we're going to get a credit of 15 cents per day. So that's the risk we're taking per day. So when you look at it, it's just a little, Tony said 3 times, it's a little over 2 times. So it's like 2.5, let's say. Yeah. So it's pretty close. And that's the risk you're taking per day, which is essentially you're taking a little over 2 to 2.5 times the more risk per day when you go out to when you go out to 6 different 10-day strangles instead. It's not crazy. It's just more risk. That's all it is.
Right.
Let's go next slide. So in theory, many of an option's risk measures scale roughly with the square root of time. And they put the formula here. So I said 2, you said 3, I said like somewhere between 2 and 250. It's actually 245. So shifting to longer dated options reduces your day-to-day gamma and theta risk. The lower theta means wider daily break-evens, and near-dated options, typically less than 30 DT, are more sensitive to gamma and theta, while far-dated options over 60 days or around that are more sensitive to vega. So the simple answer here, Tony, is that it's about a little under 2.5 times. So your guess was close. Let's go.
I get a Cupid doll.
Let's go next slide. With directional volatility and risks, with directional volatility risk very high, shifting your contract duration further out in time could help mellow the risk in your portfolio on a daily basis. Longer dated options result in lower durational risk. Compared to shorter dated options, the day-to-day risk is lower because the break-evens are wider and the theta decay lower. By shifting a 10 DT strategy to a 60 DT strategy, you would take a roughly 2.3 times of the daily risk. Comparison differs depending on the expiration cycle you trade. We often use 45 days in most of our studies because it provides optimal outcomes. Now you know why.
Good job. Good job out of you. Good job out of the team. Sadnov, what do we got coming up next?
We got your boy.
Yeah, that's right. Mr. Scott Sheridan, Scott Sheridan Studios. We'll be back in 90 seconds. Let's Tasty Live.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top yearly recap.
breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmies, shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
Right together, spin it around. Yup. And you want to clap. And then strut down, strut down, strut down, strut down. Right together, spin. Left together, spin. Hitch, 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 cross, turn. Shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey! Oh, he's got the walk down. He's got it down.
It's perfect, and you got the bag. You got everything.
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God.
You watched the debate, you knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a blank VHS tape to spare for the debate. Stas, what comes up next? The opening bell. Don't look so surprised. Sadlov has been this way since 1980 when you first started trading. Wait a minute, was it always 8:30? Yes, the opening always was the same. The closing has changed.
Like, what has changed? I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me?
The only thing I ever think that changed was the 15-minute curb session.
From 3 to 3:15, so they did change it. So it was the closing and not the opening that's changed.
For option traders, the 15 minutes.
Well, listen. We're not bean traders here.
Do not engage.
Wait a minute. So
when I got in this business,
we used to open it. We used to open at 9 o'clock. Since 1980 to now, we didn't always open at 8:30 in the morning.
Yes, we did. Is that a $20?
I am going to get this $20 off of you.
I don't think so.
No matter what. Chris, how are you, my friend? Chris, your job after you get off the show here is to find out when the New York Stock Exchange opened in the 1980s, what time they rang the bell. I have a $20 bet with Sosnoff. We're going to be eating good tonight. I already decided that Sosnoff will be having cereal for dinner tonight. I said the New York Stock Exchange did not open at 8:30 Central Standard Time. It opened at a different time. Saz said it always opened at 8:30.
I already have the answer. You guys need to choose a year, and that will determine which one of you is correct.
No. I've already won this. I said from 1980 to now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. And you know what that means? Enough out of you. That's right, Tasty Trade World Headquarters.
I got a little
Your friend
feedback
of
on
mine, Mr. Scott Sheridan, the Scott Sheridan Studios. Are you there?
I am here. So a couple things. All I heard yesterday before the show was Tom was bright red. He's not.
I'm not bright red.
Not red at all. I wouldn't have even known he was out in the sun.
That's right.
Did you have a big brim on the hat, like covering everything?
Oh, I had a person holding the umbrella.
Person holding the umbrella. Perfect.
This is a very fancy place. They have people that hold umbrellas.
See, that's smart.
Yeah.
That is smart.
Yeah.
See,
That's that mark too.
Chucky belongs to good clubs. This is actually really funny. Chucky belongs to good clubs. So you never played Scottsdale National? Scottsdale National, there's no rakes in the bunkers.
No what?
There's no rakes.
Why?
Because once you're done with the hole, somebody comes out and rakes everything, and you don't see them. It's the craziest thing.
Is that the GoDaddy's course?
Yeah.
He got fired from there.
Apparently he quit. It depends. It
depends on who you ask.
It depends on who you ask. Okay. He says he quit.
He did.
So here's the funniest thing. So I'm playing at a course up north, Tony, by you. I know why living up where you live, why you never come into the city. I totally get it now. So I'm playing at this course. This caddy comes out. She's great. So I'm wearing a Desert Highlands hat. So he said, "Oh, you're at Desert Highlands." I said, "Do you know the course?" He said, "I'm at Scottsdale National." So I looked at him. I said, "Do you happen to know Chucky?" He's like, "Of course." And I said, "Okay, sorry." He starts laughing. He's like, "Enough said." Oh my God, I love that. Yeah, I quit. Yeah, I'm sure you did. He's like, yeah. He's like, you mean when Bob Parsons decides that you're no longer a member and your locker, the contents of your locker are in your car? so that when you,
everything I've heard, that guy's the biggest dick on the planet Earth.
What's funny is I've heard from people he's a really nice guy. I've never met him. I don't know. I don't know. I mean, I could listen.
I heard anybody.
It's his course.
Yeah, I know.
You can say the same thing about Chucky.
Oh, no, you can't.
I mean, it's like you're basically invited.
Whatever, I don't care. I mean, I don't care about...
you think you'd ever get an invite?
No.
I've never been invited to any...
Well, wait a minute. Now that I know that he's premium club status with American, maybe he's got Concierge, excuse me. Maybe he's got yanked that I did not know for the past 40 years.
Yeah. I traveled this weekend, and I said to my wife, I go, watch. There's going to be one guy who's going to go before everybody else.
Were you on American? Were you on American?
I flew American. Before women and children, those in wheelchairs, those with pacemakers, before everybody, there's going to be watch. So it'll only be like one guy. You'll see. And they go, concierge level, and some guy walks up there, and I go, see, honey, that's Tom. Would you walk up there with that person? She's like, no freaking way. I go, that was me.
Hold it. She just said that to be nice to you because she's married to a loser. If she was married to that guy, she would have been the first one there. Oh, she'd have been all over that. I mean,
I gotta go with Tom.
Right now, she's going. I couldn't have married that guy. She is
one of those.
Yeah. He's a concierge service. I had to marry this loser.
Yeah.
He doesn't even. Yeah. He's not even like a gold premium. Yeah, of course.
I'm with the schlub. I'm with
this schlub.
Yeah, I'm in section 8. Where you know if you have carry-on.
Honey, you know that guy's a loser. He's going on first. I'd rather wait here with you for group 7.
Yeah.
Where they just tell you just leave your bag because it's never making it on. We'll just gate check it for you.
Don't worry, honey. Yeah, group 7. Group 7 turns me on. I didn't want that concierge
we waited
guy.
It out, honey. It's free. It's free to give it to him now. It's good.
Oof.
Go up there and take our bags, baby.
That's funny.
Did you guys have fun just now?
All right, so you think any chance the Bears are getting Parsons from Dallas?
How about this? You think the Bears are going to win 8 games this year?
8.5, sir. I'm going for 9. I just haven't made the bet yet. I'm buying 8.5. Don't you want to go on? You want to sell?
I was telling somebody.
I'll give you 9 for 100.
I was telling somebody this story over the weekend.
Well, 8.5 meaning I win at 9.
There was a guy on sports radio. He was calling in. He's from some other city. He was a sportscaster. And he was calling in Chicago because they were talking about the Bears. And they asked him. They go, "What do you think about the Bears and the over/under at 8.5?" And he goes, "What?" And this guy says this. He goes like this. He goes, "What idiot would buy the Bears at 8.5?" This guy goes, "That's the
these two right here on the."
He goes, "That is the worst." He goes, "That's got to be the worst bet in Vegas." This
100%.
from this sportscast from another city goes. Only Chicago fans would buy the Bears at 8.5.
I don't want to go against you, Scott, because it seems like I'm picking you off. I mean,
You know what? We'll talk. Have your people call my people, although you don't have people and I don't have people, so we'll just talk on our own. I'll buy 8.5. So don't worry about it. Just give me a number.
We're still 8.5 bid.
I'm 8.5 bid. You can't scare me. Wait,
filled yet?
So the rumor is Bears give up first round draft pick next year and the year after for Parsons.
But the rumor is an idiotic rumor. You think they're going to trade this kid for? He's
Would you
a
do it? I would do it in half a
player.
second.
For what?
In half a second, you'd do that as a Bears.
Yeah, they're never going to do it. They're going to the minimum asking price for him is going to be 2 first-round draft picks plus an All-Pro.
Well, the Bears don't have any All-Pros, so we can't.
They got Jalen Johnson. That's about it.
that's where the deal falls apart.
The Bears, on my 8.5 bid Bears don't have any All-Pros.
The other problem-
But they're going to come together. They're going to mesh this year.
I will bet any amount of money.
Jerry Jones signs him.
Any amount of money. Because you don't let.
Jerry Jones can't let him go.
You don't let.
Well, why aren't they signing him?
Because he knows he's going to.
Before the season starts?
He knows he's going to. He doesn't matter. You don't have to.
Yeah, but why do you want that on the public and getting bad blood?
What are you kidding? It's the greatest PR in the world.
Why?
Because you're on the front page of every single sports show now on ESPN, Sports Center. You know, every single talk show, every single thing. Even Chicago sports radio is talking about Mike Parsons. He's on everything. This is the best publicity for free for Jerry Jones and the Cowboys. It's huge. And he doesn't care because it's the same thing as Myles Garrett. They just pay the kid. Hey, what do you want?
Did he get paid this year?
Yeah, he got $40 million a year.
He's good.
Great.
He's good. If that guy was running at you, you just lie down.
Myles Garrett, he's unstoppable. He's a beast.
Not enough with lie down and roll over.
That guy's a ginormous.
He is. But the only defensive player I'm still Lawrence Taylor, the greatest ever, but
no. Sorry.
Ray Lewis? What are you going to say?
Well, I would take Ray Lewis over
Lawrence Taylor?
Lawrence Taylor, just physical size, just the game. It's just different today. You look at Wilbur Marshall, there's safeties that are the size of Wilbur Marshall.
This is
so there's so much bigger, faster, stronger today. No hate on those guys. I mean,
Lawrence
Taylor changed.
He was big.
He changed the position.
You can't compare one decade versus another.
But I'm going to tell you right now, when you go look at highlights of
Lawrence Taylor was a monster.
Lawrence Taylor
the game.
But I mean, Ray Lewis. I mean, that
you
guy.
Look at Ray Lewis highlights. He killed people.
He played. I think he had 2 ripped biceps, and he played in a playoff game.
Literally killed people.
I
mean, I know he killed people. Actually.
He did. Yeah, he did. Too.
But he.
That's a good friend too that goes to prison for you.
He hits so hard.
I mean, but Buckus. I don't remember Buckus.
I mean, I never saw Buckus play.
Yeah.
I saw one time on TV. They had a Bears-Giants game when I was a kid. That was the only time I ever saw Buckus play.
He hit apparently really hard.
Highlights look good.
His highlights look good.
Listen, you two country club kids talking about football. I'm the only one here that actually played the game.
Oh my God, Arager and Ariston, Arister and Aragon. What was
street football in a junkyard in Brooklyn does not count.
And coached the Nutrier feeder system in football for 5 years.
The Nutrier feeder system. What? Hold on. I never heard this one. What age? U8, U9?
That hurts. That hurt a little bit. Right after I was done with the girls' soccer team.
See, that I can appreciate.
Easy.
Yeah, because that.
Easy, boys.
Right.
That's all right. You're going to have one of my star pupils coming in on Wednesday, and you can ask him about our football team. I'll let the kids speak for themselves.
One of your star pupils.
Is this your son?
But you pay for the kid? You pay the kid, fly him out here or something?
No, it's going to be his son. You coached your son?
Yeah.
Aren't there rules against that in the North Shore?
Yes, any other father could have come out there and coached them too, and their kid would have started, but none of them took me up on it.
Oh.
Okay.
That's how it is.
All right. We ready for some business?
Sure.
All right. Wow. Top Top 20 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Tom, for you, number 20, Joby at a 59. For everybody else, PLTR at a 36, Tesla at a 9, NVIDIA at an 18, Amazon at an 8, Apple at an 18, AMD at a 31, Meta at a 4, UNH at a 34, GLD at a 23, Reddit at a 21, HIMS at a 53. iBit at a 31, Goog with an L at a 19, Microsoft at a 4, Hood at a 19, TQQQ at a 21, Coin at a 16, MSTR at a 16, SoFi at a 10, and number 20 for Tom, JOBY at a 59.
JOBY.
That's my college roommate's name.
Joby? Do you know what Joby is?
That was his name. I don't know.
You know what the company Joby is?
Do not.
It's your
helicopter.
It's your little helicopter, your own, basically your own personalized helicopter.
That's number 20.
To take you from point A to point B.
No chance. I won't go in a regular helicopter. Forget a personal.
These aren't really helicopters. These are the ones you just basically just hop in. It's like
the Jetsons.
Yeah.
Moving into that.
Yeah. These they say are going commercial soon.
And you'll be able to, like, how far?
They're like drones.
And how far?
What's it, Tony? 30 miles?
I think it's more than that, but I'm not.
I don't think
so. They'll be good in cities like New York. They'll be great.
Yeah, it'll be like from downtown Manhattan to Kennedy Airport, or from downtown Manhattan to Newark. But it's drone like. There's 4 little propellers. They're
Is there a
electric.
pilot?
150-mile range, Sadnov, on a single charge.
Oh, that's 150 miles. That means 75 and 75, which probably means 50.
Oh,
you got to go there and get back.
Yeah, and if you take it in the winter, you better have
25.
25. But it's, I don't know is there a pilot or is it
I believe it's piloted, Sosnoff.
Is it? Okay. I wasn't sure if it's
how many people.
Carry a pilot and 4 passengers at speeds of up to 200 miles per hour. A company is
When was the last time you were in a helicopter? I'm not for me.
I've
never blew.
Oh my God, I've never had this conversation with men in my entire life, at least not the ones that I'm friends with. You guys fly freaking helicopters around?
I've never.
What are you,
You've never been in a helicopter?
I've never been in a helicopter.
You've never been in a helicopter?
No, I never.
I've been in a helicopter.
Yeah, I've done it a few times. The last time I did it was the Grand Canyon. And I'm like, I'm done. I am like, it's just, not my thing.
No, I've never done it. I don't have any interest.
I took one over Alcatraz. That was crazy. I did one Grand Canyon.
Anybody familiar? Wave to you?
Right.
Familiar?
No, I am not a helicopter person. I would tell you if Elon
You've been
Musk
a helicopter parent, Sosnoff. You've been one of those.
If Elon Musk actually built whatever was called the high-speed underground tunnel, that would get you like New York to Chicago in a half hour, 45 minutes, that I'd do.
That's gonna. I think in the U.S. we're gonna eventually have high-speed trains. I would think we have to.
Zero.
We just had an earthquake in Jersey. Where are we building these?
Zero chance.
Really?
Yeah, there's just too much land. You go to, you're never going to Japan because it's too far. But if you do go to Japan and you get on the high-speed train, the bullet trains, they're unbelievable. It would be amazing if we had these. Amazing.
I can't believe there's not a bullet train between.
Well, they tried building one in California, and
I can't believe I don't have a bullet to put in your head right now. What are you talking about, Sosnoff?
I said I can't believe we don't have a bullet train between like New York and Washington D.C. or something.
It was, I think I want to say like they spent $10 billion, and it was supposed to be like, whatever. There's now going to be like $40 billion to complete it. I think they've given up because there's just too much bureaucracy. They can't get it done. But they're awesome. Though that I would do. But a helicopter, not my thing. There we go. I'll take another means of transportation.
Okay. All right. I mean, I don't want to take a helicopter too, but an electric helicopter with.
That's better?
I think so.
Electric over whatever, helicopter fuel? I don't have a jet fuel.
I like the 4 little things as
the 4 things.
One big.
The 4 little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
I like the 4 little propellers
the twirl.
as opposed to the 1 propeller.
Would you get an electric airplane?
Electric airplane?
Yeah.
Yeah, why not?
I don't know. I assume that's coming.
I mean, I drive an electric car, so what do I care?
Yeah, but you're on the ground at that point.
I know, but I mean, I'm not scared of it.
I understand. I'm not saying I wouldn't. I just feel, for some reason, I'm not saying that it's based in reality. I'm just saying I feel better in an airplane than I do in a helicopter.
An electric airplane. They're
no, just any helicopter. Just I'm not a helicopter
Supersonic planes are coming back. So yeah, they're relaunching those. I don't know. I don't know who the manufacturer is.
I think it's a private company. I saw this. They're coming back in like 5 years or something. I want to say like 2030, 4 years.
Yeah, 4 or 5 years shorter. New York to London, 3 hours and 45 minutes, I think.
That's awesome. There we go, Tony.
There you go.
Well, this has been Rich Guy Talk on Tasty Live. We're going to take a quick 90-second break and come back to Earth with the lovely Liz and Jenny next. We're going to take a quick 90-second break and come back with more of Tasty Live after this.
All day.
Have you been mad all day?
Been really mad all day.
You have?
You know where I've been mad all day, Scott? There was a beautiful article written all about Tom on Bloomberg.
He blames
how
me.
he commanded the stage in London.
I saw it. It was a good article.
A great article.
What's wrong with it?
He's mad because they didn't write about him.
I'm the other freaking guy on the stage. There was 2 people on the stage.
They took a big picture of him.
Hey.
So I told him, I go, listen, if you hadn't been sitting there drinking coffee, eating donuts, and you were doing the interview, you'd be fine.
Got to go with him on this one.
Oh my God, I fixed all his laboo-boos that he made. I did everything good for him.
It is not piloted.
He was supported, like an honorable
Which
mention.
one?
And he was supported.
Joby is not piloted?
It is not piloted.
Joby.
This guy here says it's not piloted. It says it's automated.
Okay, I just went to AI. They said that they have done pilot and 4 of the people up to 150 miles they've gone. I don't freaking know. I'm not getting on it. I don't care.
How about this? I don't think you'd even hesitate.
How about this? Next time you're talking to Bloomberg and there's 2 people on the stage, give me the other person's name. How about that?
Oh my God.
Somebody's a little hurt ass.
I went.
Exactly. That's exactly
I talked to this girl for an hour and a half. I didn't even know she was writing an article. I talked to this girl for an hour and a half. Didn't know she was writing her own. Invited her to our show.
I spoke to her too for about 20 minutes.
Well, yeah, I told
It's gonna be okay.
She told me she didn't
Everyone-
like you. She was hurt by. She was like, "He's so annoying."
You guys are gonna hold hands tomorrow before we start the show.
Thank you, Beth.
We're going to have a kumbaya moment. We're going to take a quick 90-second break, come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this. Beth, please take us away. Unbelievable.
Oh my God.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was
I would
right
say.
there. Right when we
So,
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role
right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer.
Say it. Say it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. Happy Monday, Jenny.
Happy Monday, Liz. Happy Monday. How was the rest of your weekend?
Well, I don't even remember. So I guess that's a sign of a good weekend, right?
I guess so. I saw you Friday. We were together Friday. We went to the Cubs game with the SIBO, which was amazing.
Oh, it was so much fun. Number one, we love the SIBO. We love being down there. That's our background right now. We're down there on the floor on Tuesdays and Wednesdays. And Jenny and I had a very, very, very exciting meeting. Should we jump in?
I know. I posted a picture on Twitter. And yeah, go ahead and show it. We can talk about it. Like, we saw John Cusack. I don't even know what to say. We saw John Cusack, and on the show, we say on a daily basis, I want my $2.
$2. I want my $2. Like, so most people probably know him from like raising the thing up like this. We know him from
raising the boombox.
Yes. So we were at the SIBO seats. John Cusack apparently goes to every game. I wouldn't have recognized him. Would you have?
I mean, probably. He was sitting like 4 rows ahead of us, 4 rows in front of us. So, but then, people pointed out, oh, look, there's John Cusack. And the first thing Liz says is, I want my $2.
Okay, no, we have to tell the story too. He did not want to take pictures. Just a little FYI. He did not want to.
You know what? I kind of feel bad posting this because he really didn't want to take pictures.
He did not, but we did not take no for an answer. And my favorite part about this was he was with a group of people. And I mean, I don't know a lot of celebrities, but when we were taking the picture and we told him the story about how we host a live show and we say, I want my $2 all the time. He's like, yeah, I'll take a picture with you. And he's, going like this. So I hand the camera to some other guy who he's with. And the cameraman, it is almost as if the guy who took the picture was probably more famous than John Cusack, because the guy was like, you want me to take the photo? I was like, yes, I want you to take this photo.
I said it's kind of like on the road shows. Oh, do you remember that road show we were on when some woman handed the camera to Tom and asked him to take a picture of her and Tony?
Yes. Oh, no. My favorite was Mikey's wife when she kept calling Tom Tony. It was so good.
Yeah. So, but it was exciting. And Mikey, Polish Warrior, if you're watching, maybe post a clip or someone post a clip of I want my $2.
Oh, I guarantee you we'll get a clip of I want my $2. But it was very fun. Honestly, though, it was a great game, beautiful weather. So we had a wonderful time. It was fun.
Guess why I'm in this blue today, Liz?
Because you have turned a corner, my lady. You are going to the Cubs game.
I'm going back to the Cubs game tonight. Friday, I had so much fun. Got home, went on StubHub, bought tickets for tonight's game.
I mean, she's not kidding. Like, that actually happened. But it is a great place to be when it's beautiful out, right? It's a lot of fun.
And it's a nice day today. It's a nice day today. No, actually, this is my week. This is my week of like living in the city. Lily's working at the law firm, and I'm looking for things to do at night. So tonight, I said I'll take her to a Cubs game.
Yeah, that's awesome. It'll be a lot of fun.
And so we got her schedule. This is like for anyone interested in law or have a kid interested in law. Like this program, every day like they start at the law firm, but then one day they're at federal court, one day they're at county court, one day they're at Northwestern Law School, one day they're at Kent Law School, one day they're all over Chicago getting like such an experience of what it would be like to be a lawyer or to go to law school.
That's pretty cool.
Yeah, it's pretty amazing. And they run this program. It's for, juniors, seniors in high school, all the way through college. And it's a really nice program that they do.
That's pretty cool. I mean, I can't wait to hear about it, to get all the details and see what she likes about it. Do you know what, Jenny? Do you want to pop in, Josh, do you want to pop us in the platform if you don't mind? Because it's almost as if I sat on my hands. This is what I said. I sat on my hands on Friday. I didn't overtrade because I couldn't overtrade because I always had a beer in my hands.
A beer in your hands. You had what was that drink called?
I don't know. Something tequila. I mean, I'm not a tequila drinker either, but it was delicious. And they went down very fast.
There was something. It had tequila and it had egg whites. There was a lot going on in this drink, but it was delicious.
It was delicious.
It had grapefruit. I don't know.
Yeah, so we couldn't trade you can't trade when you got a drink in your hand. The mobile app that doesn't list that. They need voice activated trading.
No kidding. Look at natural gas. Really like down, open up. That was just, it's on the top of our list. It's the first thing I took a look at. Go to the chart in natural gas. Let's see what it's been doing.
It's been down.
Down.
Oh, wait, what do we, I think, we have the 959. So we're in the middle.
Yeah, but we have 22 days and it's not like that crazy of a trade that we don't have too much risk and there's 22 days. I'm not worried about our trade. I just, every day we're, down $50 in natural gas. So I just wanted to see what it had been doing. I knew we sold a put spread in there. So are we at recent lows now in natural gas?
Oh yeah. Recent lows for sure. Yes.
Well, yeah. I'm just gonna get back to November or lower.
Yeah. Back to November. I'm going to move this over. Yeah.
Would you, and you've got some downside ratio spreads on in there.
Yep.
Have you had the opportunity? You know how you always look for the bounce to butterfly?
Well, I put it, as soon as I put it in, I put a GTC in to buy something, and I have not yet. But I'm lower than us. I think when we have a spread, right? So when you have a spread, in order to collect enough, we had to come up a bit. I think, I mean, I can look at my position, but I know I'm 10 points lower than this in the ratio.
Well, when you have this is the beauty of naked options. If you have the capital or if you can tolerate the risk of naked options, you go much further. If you have to define your risk, your spread is much higher. It's just that's the problems with the smaller account, which is what we have on this show, a smaller account. So we have to have the spread instead of the naked options. But it's just right there.
So here's my question. I mean, and today we can probably do this tomorrow on the floor, but so there's 22 days till expiration, and the boys were doing a great job today. They were talking about how that 21 days till expiration has really changed trading because it takes away all, decision making processes. And I do think that, we can go and roll it out, but I just want to show it. This is a little bit different because if you do roll it, I mean, and today I'm not afraid of this position. I know it's right there, but if we did roll it,
you could look at rolling it again. It's a little different when we're dealing with the future, because the price of the 22 day is 2.9 something. The price of the 52 day is 3. So then you're rolling it up higher. I'd rather leave it.
I would too. That's what I was saying. I know, and I do appreciate everything they're saying, and this is just a little nuance with it. And maybe it is the case, but I do want to say, if you're in a regular equity, you're rolling to the same thing. Here, it's almost as if you're rolling into a different product, because look at all these different prices.
I know. So I don't think the roll at 21 DTE is the strong arm rule of futures, because the different futures have different prices. So I don't think it's the same.
I actually don't either. So we shall see, but that's in there. We'll keep an eye on it, and I appreciate you bringing it to our attention. Anything else? So we took off. Hey, Jenny, oh no, we didn't.
No, we did the ratchet of our UVXY. It's fine. We have $2 in risk in UVXY. We had outlaid $3. We took in another $1 credit. We have $2 in risk. It's a 46-day trade. I would leave this.
Yes.
I don't think we overmanage it. I don't think we need to overmanage this at all.
You know what my overmanagement of these is usually, and I like when it happens, is that if it goes down low enough and I don't have a lot of risk in it, I'll just buy back my short.
Yeah, right.
Only because there's 46 days. I wouldn't do it in an 8-day. I wouldn't do it in a 6-day. I wouldn't do anything like that.
At least we've got crypto getting a little boost, because it took a hit last week. If you take a look at our IBIT, we've got the 4-day 66, the 4-day Jade Lizard with the 66 put. We need another, 76 cents, and we'll be above it.
And this is a weekly position, and I like saying weekly. So I don't want to roll it yet. I want to wait.
No, I think we could easily get a bounce above 66 this week in IBIT.
And what did we? So let's just kind of go back for simple math for this. So we have a Jade Lizard-esque position. We bought the 61 only because it's, I think, cash secured. So
it's using a lot of buying power.
We collected 109. So let's just kind of go briefly through this. We collected 109. So our break even on this is actually 64.99. I'm sorry, 91, right? 64.91 is our break even. Mm-hmm. So technically, if we stayed right here, this would be a winner.
Right. Yeah, I'm not sweating it. And it's a spread, 61.66, and we've been doing well on these weeklies, and I think we leave it. Bitcoin took a hit last week. It's having a little bit of a bounce. If you want to go to the Bitcoin chart, maybe go do the $sign Bitcoin chart, just so we could see the longer.
I have to go slash, right?
Yeah, $/BTC. Here we go.
Yeah, it's trading 115. It's giving up. I mean, this was a big move on Friday. But once again, Friday was a massive move in the markets. I mean, at the end of the day, Jenny with her drink in her hand says, let's guess where the market is, because we were with a SIBO.
I did it every 15 minutes. 2:30, guess where the market is. 2:45, guess where the market is. 3 o'clock, guess where the market is.
And it was always down. And I kept saying, we're going to be down 80. And it was always down 107, 108.
Yeah, it was always down 110.
Yeah.
I didn't expect to be up 77 today. Last night when I went to bed, maybe SPOOs were up 20 or 30, and I kind of thought that might be our range today. I did not expect to be up 77.
I said, what did I say? I think there's going to be a rip your face off rally on Monday.
When did you say that? After how many drinks?
4. But I don't consider this a rip your face off rally. We're not even getting back what we gave. You know what I mean?
No, but I had a handful of bearish positions or bearish hedges, one in SPY, one in Qs, the UVXY, and I only took one of them off Friday. Friday at 2:55. I wasn't going to take any of them off, and then I think at 2:55 I turned to you and I said, I just took off my Qs. I wish I would have taken off more, but
I still think it's so funny. We left the Tasty Studios, which was fun. It was great to be in studio, and we're going to be in this week as well. But so we left the Tasty Studios, and we're waiting for our Uber to go to the Cubs game. And Jenny's like, let me see if I have any red in the money signs. She opens up her account. It was just all red in the money signs.
That was funny.
And all I do is laugh at you, and then I just got in the car.
That was funny. That was.
Yeah, it was all. So what we're talking about is if you take a look at this, just using Webull as an example, it's yellow in the money sign, meaning it is not expiring today. So when it turns red, that means it's in the money and it's expiring. So
Yeah, so Friday. So had I left everything that was red in the money, I would have just gotten assigned on everything and come in with a lot of extra stock today. But all I did on the mobile app was super easy. All I did was quick roll, quick roll, quick roll, quick roll, and I rolled everything out 1 week.
it only took her a couple minutes of Uber and she was done. But it was pretty funny when you were just like, I'm going to see if I have any red in the money signs. Whoa.
That was funny. Okay, so I don't think we have. Did I hear them right? Is HIMS, and we don't even have HIMS, and HIMS.
Oh, HIMS has earnings and PLTR has earnings. Do we have PLTR?
So PLTR has always been one of your bigger positions. HIMS is one of my bigger positions.
We don't have either, I don't think. But and I do want to go to them. But can we jump into Twitter? I want to go to Bob's list, and then we can talk about all the earnings trades. Okay. So I'm gonna refresh. I'm gonna refresh. Hold on. I'm gonna go to Bob. Oh, we'll get to all these, I promise. PLTR, HIMS. I don't know what Melee is. Pfizer, Caterpillar.
Oh, PFE. That's like one of my bigger positions too. I thought Pfizer already came out with earnings. Wait, who came out and said like we're cutting our dividend?
Dow.
Oh, okay. That's another one. That's another one in my account. I hope Pfizer doesn't go down like Dow did.
Dow's cutting their dividend. Yeah.
Caterpillar, BP.
Look at this. Look at this locked and loaded calendar this week.
Tuesday. Yeah. Even Sophie can't believe the locked and loaded calendar.
Yeah, it's a locked and loaded calendar. So I do want to look at PLTR. I want to look at HIMS, and I want to look at PFE. Caterpillar, it's too expensive, and it's not. It's like a slow moving vehicle. So
yeah. I mean, we have to look at those. Now, I'm still bullish on HIMS only because I think I'm targeted because my phone hears me say it, and I get their ads constantly.
HIMS?
Yes. Yes, I get their ads. I get their ads constantly. If I go into Facebook, it's just HIMS ads.
But take a look at this. So it rallied all the way up to 70 and then fell back down to 25, then rallied back up to almost 65. And it looks, and then it's back up. What would Tim Knight say about this?
I don't know, but here's what I say. I had put some collars around my stock. And this morning when I heard Tom and Tony say their earnings, I bought back all my short calls. So I have my stock. I have some long puts against it. I know it's kind of a waste, but I just wanted to protect my stock. But I am hoping, fingers crossed, for a big HIMS rally, Liz. Big HIMS rally.
I don't know if I really don't. So I apologize. I don't know if they're affected with pharmaceutical tariffs.
I don't know, but I'm not sure what to say. Again, it's only because I see it constantly. They're targeting me. And not only do they have the weight loss pills now, they have the weight loss shot.
Ooh, you can get the shot. They'll deliver a shot in the mail.
Yep.
No way.
Yep.
Wow. Okay, so what's a new subscriber to do? What do we do in HIMS? We don't have anything in there. And I don't know that we've been in it. Maybe we have. But I just want to go through some things. I just want to see how much capital it is for me to sell and put at the expected move. Oh, this has got Jade Lizard written all over it.
Buying power is not bad in HIMS. Not bad at all.
So here, what do you think of this?
How much is the
Look at this. Jade Lizard, 51. We'd get back in at 50.
Sure, you can do a Jade Lizard. I'm looking for a little more profit potential than $1, but you can do a Jade Lizard.
I know you are in your account, and I agree with that, but this has Jade Lizard written all over it.
I mean, if you remember how we were in January, like our account was killing it, and that was from diagonal.
Bullish. Yeah, that's what I was going to say. We were killing it because, whoops, sorry, didn't mean to do that.
We had a lot of diagonals. 446.
446. Now here's what also took the account out is diagonals.
Yeah. Yeah.
So what give it to us, take it away too, because it really changed everything.
So we could do whatever you want to do in HIMS.
So that's the only thing is I think you and I, in your account, you want more profit potential. In my account, I want more profit potential. And kind of if we want
But
more.
you know what? I don't know if I want the naked put because you see that chart. Like I don't have naked puts anymore. I have I puts against all my stock. So I don't have the risk to the downside. I don't have the unlimited risk to the downside, which the naked call would give you. Because who knows? Who knows what the earnings are going to be like?
Well, then here is, yeah, I mean, earnings are not. So I will tell you, was this earnings last time? June?
No.
No.
No, because if earnings are now, so July, June, May had to be like early May.
Maybe here.
Early May. Go to that big bar up.
There you
Yeah,
go.
there.
I bet it's that one.
I bet it's that.
Right? Yeah, I bet it's that one.
How about the side and let's see what they were. If you go to overview. So earnings per share, they're actually not negative, which is surprising because they're new-ish, newish.
So, but I mean, if you're long hymns and we're long hymns, getting in at 50 isn't the end of the world. I'm doing it.
Yeah, do it. Just sell a put. Go ahead. Just go crazy. Sell your 51 put.
Well, I'm going to do a Jade Lizard because I want to get a little bit more premium. I want 114. If it goes up and we don't make any money or we make 14 cents, fine. But it's just mechanics of making $1.
I just don't love Jade Lizards on earnings because so many times it runs through our call spread. We took that risk and we're like, well, we didn't make anything because we kept ourselves for 25 cents.
Jenny, we'll make $12.
I'm against Jade Lizards now on earnings. I like just the put. I'd rather just sell the put. I'd rather just sell the put and get 80 cents than make nothing because we had to get that extra 25 cents.
You know what? Then to make you happy, I will just sell a put for $1.12. I'll bring it up to the 53. There we go. Done and dusted. So we've got the hymns put in and then PLTR. And it's not one of my bigger positions. It's just one of my consistent positions. And I have a one lot diagonal in, and so it's very similar to me looking at this chart, to my Robinhood position, in the fact that in Robinhood I have zebras, in this I have diagonals, but I kept them going. So the risk is gone and you just keep going. You can almost ratchet the diagonals up as well, right? So that's what I'm talking about here. And I don't know that we want to do that for earnings either, because it's still that same concept that we just walked through with HIMS. Just because I have it doesn't mean this account can take it, because this would be 685 or 680, whatever, 683. I mean, you can make more money with a diagonal, but if it goes down, you can lose 683.
Right.
Are the wild, wild west. Now, because I've been in it and ratcheting it up, I've already moved my diagonal. And I've got
a new subscriber to do. So like I've been in PLTR, but I'm out now. At some point I got out. I was like, okay, I'm out here. For me personally, I'm not even trading PLTR because it's so high. It's gotten up so much that I'm not even trading PLTR. I'll wait till after earnings.
And it's funny that I'm looking at this now because it's $1,500, and I know for a long time it had a lot more margin than that. That's why I was diagonal instead of something else. It used to carry a heavy margining burden, and now it doesn't.
I mean, if you want just $1.20, like $1, like we got you could go all the way down to the 130.
You can.
Or there's the 133.
And that's the 10 delta for 1,300. It's not bad. But once we're looking at HIMS, we put up $500 to get $1, or you're putting up $1,300 to get $1. No matter what, you have to be able to carry that risk. And we can. We have a lot of buying power at use, but this is up so much. This would bring your break even. It's the 133. That's not bad. It's not bad. But I would almost feel like you got to define your risk here.
PLTR is tricky. It's tricky because it has gone up so much.
But puts are neutral too. So
what if you
So that's what I think is fascinating and sometimes I think the charts can mess with people, mess with traders, because looking at HIMS, we're nervous because it goes up and then it goes down, it goes up, then it goes down. But if you just look at the numbers, it's not that scary.
Now, what if you just did 250 wide, like 250 wide call spread to the top, $5 right calls put spread to the bottom, or something like a skewed iron condor?
I'm gonna
or just an iron condor.
So there's 93 cents. That's not bad either. And then on the top, you can do one. What did I get on the bottom?
93 cents. So you're getting 50 cents on the top.
It's still not that bad. I need $1 in
no, me personally, I'm not playing Palantir for earnings just because I'm a little, afraid of the Palantir moves. Like we've seen it move. It's had some big moves. So I'm just waiting.
Went from 80 to 100 here. That's 20%.
Yeah. Yeah. So I'm just kind of waiting on Palantir, but
I love PLTR. It will always remind me of my son's friend Paul.
Yeah, Paul.
Hopefully,
I hope Paul's a mega millionaire now from all of his Palantir.
No kidding, right? He was 16 when he told me about it.
Yeah. Yeah. Hopefully he bought a lot of Palantir, kept it.
It was so funny. I was talking to his dad, not recently, but the last time I talked to his dad, I was like, is he holding his PLTR stock? Tell him I owe him lunch. And his dad wrote back, you owe him a Wagyu steak for the win of PLTR. I'm in. Okay, so then let's take a look at PFE because I'm not a huge Pfizer fan, by the way.
I don't know why I have it.
So this is, it's only 20, so it's only a 23. Let's just, I'm not using, there's no correlation between Palantir, HIMSS, and Pfizer. I would just like to take the record. They're all very different companies. There is no correlation between them, but just taking a look at PFE, it's a $23 product with a 19 rank versus PLTR, which is a $150 product with a 38 rank, and HIMSS had like a massive rank, didn't it?
Oh, I don't know.
51. Yeah, HIMSS has the highest rank. Now, that means that it's got the highest volatility, and that means it's priced to move.
Well, the rank doesn't mean it has the highest volatility. The rank just compares the volatility to itself. So HIMSS volatility you could see is like 150.
Yeah, like 192 here, 150 here. Then watch when we go to PFE. PFE, it's going to be
it's like
6. Yeah, it's low. And then if you go to PLTR, I bet it's going to be a little higher. So yeah, it's a little bit,
about 100.
Yeah, that's what you should see with these.
But the rank, the implied volatility of the stock and the rank just tells where their own volatility is compared to its own volatility.
But so this is a low rank in a stock that's lower than everything else. You see what I'm saying? Yeah. So that's where I was trying to compare. It's got a 19 IV rank where it's at the low end of its range, and PLTR had a higher IVR and it's at the top of its range.
I know.
Cats and dogs living together. What is going on?
What can you even get in PFE if you go to the trade page? What's the expected move? It's barely anything. You're not getting anything.
I'm gonna close this up.
No.
Did you want to take a look at Caterpillar? And then we'll pop into Twitter too, because there's a lot of stuff going on on Twitter.
No, I don't. We don't need to trade Cat at 435.
I know. Right? I do not want to trade Cat at 435. All right, pop back into Twitter. Whoops, sorry. We'll go top down. Actually, I'm going to go this way first. Let's go top down and make sure we get to everybody, and we know we'll get there. Okay, Jackie, SPX call credit spread. The 63.35, $40 wide. So they're going very wide. Successfully executed profit of $1.39, $1.39, or around 17% of total credit done for the day. So they're going $40 wide call credit spread. Can I take a look at that? I just want to say.
Wait. Can you go back to those numbers for a second?
Yeah.
So they said 17%,
which makes sense because it's $40 wide. So SPX 63.35, $40 wide would be to here. So you're getting $20 right now. You're getting $20 on it, and so 17%, 10% would be $20 or $2.
They collected $800. If they took 17% of their credit was $800.
So I'm going to assume it'd be the same thing. Now it's up on the day. So if you're going to do a $40 wide, now granted, I'm sure it was earlier, but let's say you did. So 20. Here we go. Yeah. So this seems about right. I'm going to shift this down. There you go. The just out of the monies is my guess what they're doing. A $40 wide just out of the monies for $8 and taking it off for 17.
Yeah. Right? Yeah. Right. 9. Yeah. Like the with their numbers, they collected a little over $800.
And that looks. I mean, I just did the just out of the monies for $40 wide, and it seems wrapped around. I mean, I understand it's 7 now, but that means they probably got out of it at the same time with that bounce. So that's good.
It's a big risk. They're taking it out for a quick profit on a quick bounce, but it's a big risk if the market turns and doesn't go your way. Because you see, it was like $3,000 in risk. So 3,200 in risk.
And those are the ones that if you don't get it right away, maybe you would take it off because it's a lot of risk. And those iron flies, the risk is so little, you have to let them work out.
And the fact that Jackie's saying call credit spread, meaning he's selling that call spread.
Oh
He's
yeah,
selling
that's why I went in with
$1
the
wide call spread.
Yeah. Oh yeah. Oh, I went to the put side.
Yeah, I know you were looking at the puts, but it looks like he was selling a call spread.
Yeah. So that's a down move.
He play in the contrarian move, on the up move on the market, play it to the downside.
Yeah, playing the contrarian move. Okay, now this is Frank the Great. This is the man who does our YouTube chat, which we love him very, very much. So he says earnings season continues to roll with a busy week of corporate releases, as over 100 S&P 500 companies are set to report. Thank you very much.
Thanks, Frank. Before I forget, I want to give a huge shout out to Annie. So Annie, who watches our show, she lives in Colorado. She did some crazy bike race in the rain. She's been amazing she's been watching since day one. We've been on the air for 15 years, and she's a real inspiration to all of us.
Wait, what bike race did she do?
In Colorado, somewhere not here. It was in Colorado.
That's amazing.
I know.
I love Annie. Annie's living the life. She's a skier, bike racer. I love it. She's awesome.
Yeah.
Okay, Brad comes in. Quick 50-cent profit on my iron condor. I always seem to get the worst fills. As soon as it fills, the price went up by 20 cents. That happens though because there's so you have 4 legs in the SPX, so you'll see it bounce around sometimes.
And you're already out.
Yeah. And you're already out. $50. That's all we're looking for. It's $50. $50 isn't bad. There is John Cusack again. Now, Ajit, what is this? Trade desk. The trade desk. Earnings. That's not today. Today's the 4th.
Earnings, yeah, it's later in the week.
Okay. So earnings, you're using this week's expiration. You're getting a 140 credit, 16 delta. So they're just
put. Yeah, he's just on a put. 16 delta put.
Yeah, awesome.
Mhm.
Okay, and then I saw this and it was so sad, Fabio. I'm sorry. My thoughts are with my little sweet Rufus. He passed away on Sunday.
Oh, Fabio, I'm sorry.
No, I'm so sorry, Fabio.
Oh, what a beautiful dog, and that is so hard.
No, I
So
know
hard.
it is so hard. So our thoughts and prayers go out with you. We understand not trading today. I get it.
Yeah. Everyone on the network, we all love our fur babies.
We do. We do.
Hmm.
Okay, Ajit comes in with PLTR, AMD, and Lilly. Earnings this week for all three. A good to keep an eye on them pre and post earnings.
Palantir, AMD, Lilly.
Got it. Love it.
Yeah. AMD. Let's take a look at AMD.
I thought, was it AMD?
Thought that's what. Will you go to the trade page? I'm just.
So they're tomorrow after the bell.
50 after the bell. AMD up to 176. I only bring up AMD because I know you have like a foil hat guy in your back pocket.
Yeah.
And was it the foil? No, it wasn't. It was. I thought for 1 minute that it was the foil hat guy that said to buy AMD, but it wasn't.
Oh, it was not the foil hat guy. It was not the foil hat guy.
It
wasn't AMD. It was Baidu. But this was it was not the foil hat guy, and it wasn't AMD, it was Baidu. But yes, someone had sent a website saying this is a huge topic on the network right now, whether politicians should be able to trade or not. I don't know if you've heard Dylan and everybody be going toe to toe, but somebody sent me a website where you can see what all politicians are buying. And my point was, if the politicians are buying it, I can show you how to use way less capital. That's all I was saying.
I put on a zebra or a diagonal or something.
They used like 100, and let's use AMD for the example. Let's just assume it was the foil hat guy, and let's assume it was AMD. And so you find out that some politician or somebody who you think has any influence over anything spent $100,000 in AMD. Okay, so they want to spend $100,000 in AMD, and I'm assuming it's non-margin. So let's say,
yeah. So you're looking at 17,000 for 100 shares of stock.
Yeah, I just went to $100,000 of AMD stock, and that's 600 shares in an IRA. I was looking at this one, not the 52. I'm assuming it's not margined. So you want to be able to control 600 shares of AMD and profit if it goes up. I'm telling you. 50, 70. I was like, there is a better way. You want to control 100 shares of stock and make money with
600 shares. So 600 shares would be like $100,000 in notional value.
Oh, hold on. I got to do this.
Yeah, you gotta start over. Just walk people through what you're doing because you're going so fast. I can't
No,
even.
I'm going to walk people through afterwards. I'm going to get to the
Because when you click the stock up to 600, I didn't even I could barely follow along. I had to really.
When you click the stock up to 600, that 600 shares, what I tried to get to was my max loss right here of $100,000. That's what I tried to do. $100,000 in max loss. Okay.
So I will say, and this is just a note to self, note to you, me, production. I can't see your arrow.
Oh, you can't?
No. So like as you are whipping around the platform, I can't see your arrow.
Wait, why can't? Is that because of Teams now or Zoom?
Well, I don't know. So again, note to self, like we're gonna correct this. We're gonna correct
You
this.
used to be able to see my arrow?
Yeah.
On when we were on the other one. Okay, that makes sense because if you can't see the arrow, that's a problem.
So as you're flying through these trays, I don't even see the arrow. I'm trying to figure out what you're doing, and so that's just we're gonna get this corrected. So
Yeah, we need to get that corrected. So like I said, I'm going like this and circling. I'm circling max loss right now.
Nothing.
Yeah. Okay, this makes a lot of sense. Because so 600 shares of AMD, when I ticked it up, would be $100,000 in notional value. In order to control 600 shares of AMD, I just put in 6 zebras. So I sold 150 Delta call and bought 270 Delta calls to the tune of.
So yeah, if you do 600 shares, you got to do 12 by 6.
Yeah, right. So one of these is $2,700, and if you do 12 by 6.
It's like I'm watching a magic show because everything's just happening, but I don't see any you like clicking anything.
That's crazy.
All right, so 12 by 6. So this is only using $16,000 instead of $100,000. You're amazing, Liz. You're amazing.
So, so I know we went down that rabbit hole, but that was not the foil heck guy. No one was saying to buy it. They were just saying that politicians had purchased things like this. And I really did think like, great, show me what they do because we can do it better.
Right, we can show you how to do it with less capital.
Yeah, we can show you how to do it smarter, work smarter, not harder. You can do it with much less capital.
And you know what? It worked out because AMD has gone up.
It wasn't AMD.
It was AMD.
It was not AMD.
It was AMAT. It was AMAT.
Yes, they're fine, but it wasn't AMD. It was not AMD.
It was AMD or AMAT. It was one of them because when you said that, I bought some. I remember it. I can't remember what the day. Maybe it was AMAT.
AMAT makes sense, but it wasn't. And the foil heck, I didn't say to buy this. It was somebody some.
Yeah. I remember. It's all coming back to me. Can't remember when.
Probably. I'm just kidding.
No, I think it was. I think it was like early in the year. No, I think it was before. It was before the fall. It was before the fall. I was at a dance competition. I think it was January.
Can you see the crosshatch?
Mm-hmm.
You can see that. Okay.
Yeah.
Okay. So you don't know. It is like a magic show. I could press anything and you can't see it. Okay. Well, we're working on it. We're working on it.
You know what? We got a new system.
Ta-da! I'm gonna make sure we got. Oh yes! I knew.
Oh, okay. Matt Mullins, new to the Jade Lizard, and I love it. Okay, good, Matt. Is the big lizard still a thing? From our old videos, like greater than $75, we might go with under $75. We'd go with the big lizard.
Jade lizard. Under 75 jade, over 75 big.
But honestly, I almost think over 75, you could still do a jade lizard. You just change your strikes. Like maybe you collect 250 total and do a 250 wide call spread and get $2 on a put and 50 cents on a call spread. The big lizard exists, but you have to. Let's go through an example of jade lizard, big lizard. We made those videos so long ago, and I know we did say like over $75.
Well, that's because you had to say something. Like they're like, what price point? $75.
It was like I was on the hot seat.
You were. Pick a price point. And I do want to, just because we're watching this, James, I love it. I love it. Thank you very much. There is John Cusack driving the car with the kid that wants his $2. The kid kid shows up everywhere. He's on the bike, he's on the skis. He just wants his $2. It's my favorite.
And so when we were sitting at the Cubs game, and the first time he walked, it was like seventh inning stretch or something. He was going to like, leave his seat for a minute as he walked by. I was sitting on the very end, and I leaned over and go, I want my $2. And he's like, okay, all right, ladies. Okay, ladies, I'm not taking a picture with you, Tim.
Not taking a picture with you. And then we didn't take no for an answer. We found him again. So the thing is, I'm telling you, most people don't know him from this. They know him from Say Anything.
Yeah, or Gross Point Blank, or it's been plenty of 16.
You was in Gross Point Blank?
Yeah.
What was he in Gross Point Blank?
I don't know. There was just like a show about a town called Gross Point in Gross Point, Michigan.
Not the movie?
He's not. I'm not talking about the surfer movie.
Oh, I was like, he was nothing. I thank the Lord. Okay, good. Now let's go. So Matt, we've gone off the rails, the crazy train. We are going to show you what a big lizard is. And you know what? We're just going to stay on our friend AMD.
Yeah. Right. Okay. I know we
has earnings. So let's go. And AMAT has earnings.
Just pick like, I don't care, Walmart or what. It doesn't matter. It doesn't. We'll compare it. And go to September. Do durational. Earnings or no earnings. Let's just do durational. So if we wanted to do a Jade Lizard here, it's a higher priced product. We don't have dollar-wide strikes.
I'm going to IWM. I know it's a high priced product, but I want dollar-wide strikes everywhere. Just to be fair, okay? I'm just going to IWM. Oh, it's trading 217. Wonderful. Okay, so IWM, dollar-wide strikes everywhere. The Jade Lizard is 70 cents. The Jade Lizard is collecting enough premium to cover the width of your call spread. So to Jenny's point, you could take and go, here's a $3 wide. I'm going to bring in a little bit. So you're collecting 74 cents. In order to get $3, we need to get 225, right?
Yes. So
that's a Jade Lizard.
And so I've actually like tweaked the Jade Lizard from my many nights of back testing, and I've tweaked it to the point of 16 delta put.
We're close enough. Like that's what I'm saying. This is covering it. I know what you are going to do isn't, but because you had to pick a delta. So 16 delta put and
like, yeah, right around 27 delta call spread. So and honestly, in my back testing and research, you don't necessarily have to cover the width of the call spread, because if you're getting your call spread far enough away, you don't even need to cover the width of the call spread.
No, you're not getting far enough away. You're getting to the expected move cycle. This is it. That's Jade Lizard is just covering you with the call spread. In a higher price product, you can make it as big or as little as you need to. We just want
to look at your break even to the downside. So even bringing the put up to the 16 delta put, your break even to the downside is 190, 195 and change.
Yes. Versus now here, look at a big lizard, which I just want to be clear. Like, this is what we used to do for a Jade Lizard. That's what I'm saying. Like, you want to talk break evens. Here's your creme de la creme, right? So your creme de la creme is the Jade Lizard break even, brings you down to 183.
And I don't mind. I mean, I don't mind the Jade Lizard in IWM, but when you look at buying power, you're like, okay, making $1 using 1,900, but the return on capital is not amazing.
It's not amazing, but it's really not that bad. So we're just going to go Jade Lizard, just to not confuse people. Jade Lizard. Now we're going to show you what a big lizard is, because the big lizard was an iteration of this where we're saying we like that there's risk definition to the upside and we can't lose to the upside, but we want to make more.
Yes, and after we show you the big lizard, then we're going to show you the spike lizard, and you'll really be amazed.
And it's going to be a magic show the whole time. Okay, big lizard is going to the straddle, right? So start with the straddle. 217. Yeah. And I know that I want to just cover the width of the call spread. So
go $10 up and spend $4, right? Or yeah.
Now we've got 11, so I could actually keep moving it. What I used to do with the big lizard is keep moving it until that bar. Wow, what the heck happened there? Keep moving it until that bar right there, until that bar, the green bar stops. You don't even have to do any math. You really don't. So watch the green bar right here as I toggle back and forth. That's where you know your Jade Lizard is.
So here you have a $12 wide spread and or $11 wide spread, and you're collecting over $11.
Mm-hmm. Yep.
But the give up, so you've got a much bigger credit, but the give up is the break even to the downside. Now we're at the 26 delta instead of the 16 delta.
Yep. Or in the Jade Lizard case, the
10 delta.
The 10 delta. Yes. So then we don't mind this per se. The one thing I don't like about it is the Big Lizard. One caveat is that it does not compute. Like, it does not compute the fact that you can't lose to the upside, even though the grid looks like this curve analysis. Even though there is no risk to the upside, it does add on the width of the call spread in buying power, and it's a wide call spread.
So if you go back to the trade page, and this is what we used to do with these, why if in the higher price products, we were always like trading a smaller account here, make that call spread $10 wide instead of 11, make the call spread $10 wide and use that extra overage, the $1.22 to buy a put. So now we go from using $4,800.
Oh, sorry, I sold it.
Using $1,500. And now this makes a little more sense as far as like buying power and risk reward. Here we've got, $992 in profit potential using $1,500. And that's when we turn to the Big Lizard on these higher price products, and we would buy something and then it would not be using too much buying power.
And so we call this a Big Lizard with a fat tail. So to Jenny's point, we brought it in, we collect. I'm just going to go through that whole process again. I'm going to delete this leg. So here is your Big Lizard. We were up here at this point. And by taking it in by one strike, we collected, we have a $10 wide, we collected $11.24 on, which gives me $1.24 to come buy something. And I went with the 139. I keep hitting sell. So there you go.
And if you go to the analysis page now and look at this,
sorry. There's a little bit of risk because we have 10 cents to the upside.
It is, and this is also a version of a broken wing butterfly or a skewed iron fly. You can call this a Big Lizard with a fat tail, a skewed iron fly, broken wing butterfly. You can set it up to any of those.
Well, yes and no, and I agree. They all are 100% accurate. That's what they are. But when you say Big Lizard with a fat tail, I know what strikes you're using. If you say broken wing butterfly, I don't know what the hell you're doing.
Right. Yeah. That's why we call it Big Lizard. Because if I said, "Oh, Liz, I put on a Big Lizard in IWM," you know what strikes I did.
You know what strikes. You're starting with the straddle. You're capping your risk-ish to the upside. You're buying a fat tail with the excess. That's why the name is the name. Because you say broken wing butterfly, where is it? Are you bullish? Are you bearish? Are you at the money? Are you neutral? So that's why it's named a Big Lizard. And I actually really like that because the trading doesn't have to be that complex. If we know the Big Lizard is always starting with the straddle, you know exactly what you're doing. If you say reverse Big Lizard, you've just flipped it over and you're still using that straddle.
So now keep this in mind, keep this profit potential in mind. And now let's turn it into a spike lizard where we have this profit potential. We have this, $900 profit potential or this big peak, but we're going to move our break even. So our break even is not around 206. We're going to move it and shift it way down. And that is the spiked lizard, which is also an amazing strategy.
It is. And we need that one. You definitely need to know what a spike lizard is, because get your helmet on because you need to use some.
It's 10:47. You got 13 minutes. I'm just going to sit back and watch.
Well, the problem is you have to use some synthetics if you want to do it in one single click, because we know you can do that Big Lizard using all puts, right?
You can start with the Big Lizard that we had and then flip it all. We had the 217 straddle.
So that is essentially the same thing, right? Let me make sure. Yep. So I sold 217 puts and bought one 227. And here you go. Let me show you curve analysis. This is the Big Lizard that we originally had in, right? Here's our Big Lizard. We didn't put the fat tail in yet.
So what we did was take that call. Basically, we had that originally the short 217, 227 call spread and flipped it over. And instead of selling the 217, 227 call spread, we bought the 227, 217 put spread. So selling a call spread or buying the put spread of same strikes is the same trade. So we just flipped that short call spread over to a long put spread.
Yep. So that's the one thing that's like, get your thinking cap on, because we're just using the synthetics, what we know of synthetics, to show you what it looks like on the P&L graph, right? Okay. So Now we've got the puts in, so we know where our break even is. Now to put the spike in, it's go down and complete the butterfly. So it's going to be 07, which is right around where our break even is, correct?
You can, yeah, you complete that butterfly. We've got 227, 217, 207. So now we have a $10 wide butterfly, and then it's real simple. Sell 2 puts to pay for the butterfly.
So, and we're spending $2.30 on the butterfly. So if we're selling 2 puts to pay for that butterfly, I need 115 on each put.
Twice. And make sure you get at least 115 so we don't sell the 191 twice.
I got that in right. Yep. So look at this. We're still using $4,000. Okay.
But the big lizard was using $4,000.
I know. That's what I'm saying. What we wanted was the break even of the jade lizard ish, which we did. We got very close to it with the profit potential of the big lizard. So the break even of the jade lizard, profit potential of the big lizard.
And it's using the same buying power as the big lizard. But you shift the break even, you shift your break even to the downside significantly.
So take a look at this. Same profit potential right here. I don't know. Can you guys see that profit potential?
I can see it. Yeah.
Okay. The profit potential right there. And then
that's $1,000. So $1,000 in the middle because we've got that $10 red butterfly.
We paid nothing for. So you've got profit potential of $1,000, no risk to the upside. And instead of your break even being at 205, your break even is now, where are we? Your break even is now 191.
Yeah. Now someone might say, well, how do you do this? How do you get the $1,000 profit potential and you shifted your break even by, quite a bit from, 205 down to 191. How did we do that? Well, we're doubling our risk at that 191 level. Now we have 2 short 191 puts instead of 1 short put in the big lizard.
Yeah, so keep in mind, we know that the buying power is $4,000, which was the same as the big lizard. If it does start to go in the direction of our break even, it can grow teeth in both loss and buying power.
I think we got to bring back the spiked lizard. Honestly,
honestly, the same thing. It works really well in IWM because it's got solid dollar-wide strikes. It's easy to manipulate with dollar-wide strikes. It gets harder with expensive products if you have to move things by $5 each time.
So it does look good on paper. We've been on the road and we've had people come up to us on the road telling us like all they do are spike lizards and SPY. But again, you have that risk of each one of these trades has this risk of 2 short naked puts. So like wheels fall off in the market. Like we had a day on Friday where SPYs were down 110. How much was IWM down on Friday? Probably
it was down quite a bit because I know well, the only reason I know this, Jenny, is because I always have a 217 put in. And so I know it got down to, I think, 212, right? Let me see it. Yeah. Which is low.
Yeah. Yeah.
So yeah, it got down to 212. But I think I'm going to...
You're feeling pain on this. You're feeling pain. The margin's rising.
Yeah. But I do think I'm going to put... And a 21 rank is... At least it's coming back a little bit. I think I'm going to switch my position into a spike lizard. Looking at this, I thought, yeah, maybe I'll put one of these on. It looks pretty good. So I will tell you, I'm just going to ask you questions because I think I know your answers to these. You say we press the button on this. Your maximum profit is $1,000. What's your profit target?
Honestly, for these big lizards, I'm not sure, Liz. I don't know. It's too much buying power to just take $100 out of it. So a typical big lizard, maybe we would take off for 10 or 20%. But when you've got this spike lizard on and you've got that room to the downside, I'm looking for an up move where I could maybe take one of those puts off and then you just leave it.
Which she's referring to, and I do kind of agree with it because it's a butterfly, right? And they don't open up until the end. So what Jenny is referring to is this put right here, the one we sold 2 on. If you get any type of up move, and you can even play with this to narrow, like if you make it $9 wide, but still keep those puts, then you have a greater chance of being able to take this off and having that butterfly on for free.
Right. If you're, yeah. What profit target on a spike lizard? I think it's kind of like to each his own. If you want to leave it to the end, leave it to the end. It's pretty wide. It's $10 wide in IWM. If you want to, but I wouldn't want to leave that risk to the end.
My management of this would be keeping an eye on the 2 puts because a butterfly is a butterfly, right? If you can get that butterfly on, for relatively cheap, great. All your risk comes from these 2 puts.
Right. So keeping an eye on it, looking for an up move to take those puts off.
I'm going to throw a wrench into a lot of things right now. We've done this before and we do it all the time. Taking a look at these puts. The other caveat is you don't have to do 2 puts. You could do 1 put and 1 call, which would be less buying power.
And I don't mind that either. Because, okay, if you delete the puts, delete the 191 puts. So we're putting on a $10 white butterfly where we're paying $229.
Yes.
We needed $229 to cover the cost of that butterfly. And if you zero this out, all we need to do is find a strangle for
221. So watch this. If I stayed with that same, I need.
I want to get $1.30, maybe keep the same put. No, you're going to have to.
191. No, look at the top too. You can go all the way. So 113. I can go to the one. So now we're only using $2,400.
Right. And that butterfly.
Both sides.
The top of that butterfly was 227. So we've got 207 to 227 for our butterfly, and our strangle around it is the 191 and 237.
Mm-hmm. Yeah. So that's what I'm saying. I know this, Jenny and I are a lot more complex traders than the basics. And I know this is probably confusing, especially not being able to see my arrow.
Let's put, what, do you want to put this on? We could afford it.
We can afford this. I don't like the 2 puts only because
we can't afford the 2 puts, but we could afford this.
So let's do this. I'm going to put the strangle in first, and then we'll put the butterfly in. Because if we did it like this, I wouldn't mind if we did the strangle by itself. If we end here, we end here. But I want to put the butterfly in too. Yeah. So I'm going to put this in first.
Sell the strangle for 233.
232.
Yeah, whatever you want to get for the strangle.
231. I'm just kidding.
230.
And we will replace the, but I'm just going to put the butterfly in right where it is.
And then it was the 217, 227, 207.
I know, but 217 is like down a bit now. So I just made it realistic here, 230, right? So we're trying to sell the strangle for 231 and we're trying to buy this butterfly for 238, right? Conceptually, we're all the same.
Yeah, it's all for about the same. It's all for about the same price. Now, if you want to get to the point where you take your strangle off and you take that risk off and you just leave the butterfly, then to Liz's point, narrow the butterfly, make it $9 wide instead of 10. So you've got a little bit of like then we've got a little bit of money to play with.
That's what I did. So I took it in, butterfly. We're not getting filled in IWM. Come on, man.
Just pay $195 and sell it for $230.
Okay, butterfly on. And then we're going to go, hold on. Wait, there we go. And then
230 on the strangle.
Find one. I'm going to go with 231. There we go. Okay.
Now go to the analysis page and look at the picture of this.
We've got the strangle where we've moved it. So the point is the spike gives you the profit potential of the big lizard, but moves your break evens. So we went from 225, which we wouldn't have lost any money. So I will say in the big lizard with the 2 puts, anywhere into perpetuity is fine with the up move there. So you do have the strangle here, which is, what is it? The 10 delta strangle on both sides?
I know. The only risk I see in IWM, and the IWM stocks seem to be affected by interest rates. Like, let's say we get an interest rate cut in September and IWM really rallies. That's in my mind, like the risk we have here is like a huge rally in IWM if interest rates lower. That's all I could come up with.
But you know what you can do too is take and put this in only to see.
Take 50% out of that strangle.
Yeah, I would be fine with that.
Yes, I agree. And then we paid a little bit. Then because we took in 40 cents over, 45 cents over. And if we're paying $1 for it, then we've got that $9 white on for 50 cents.
Yeah. Okay. We're going to play guess the market.
You know what?
We're done for the day.
Planned it when the show started, but I liked it.
It wasn't. Everybody's got a plan until they get punched in the face. Okay, Jenny, we are done for the day. It's 10:50. It's going to be 10:59 in a second. SPOOs are up 81. Where do you think they're going to end?
I think they're going to end like up 40.
I think, and you were right all day on Friday. I think they're going to end up 107, exactly where they were down on Friday.
We'll see. We will see. Make sure we got to everyone on Twitter. I don't want to miss.
We don't have any time, but I will. We'll have it shown. I'll let everybody see.
Just want to make sure we got to everyone.
Oh,
Spike Blizzard, fun, yes. And then Gross Point Blank. Yeah, there he is. 10 years. Wait.
Going to his high school reunion, Mini Driver, his high school crush, and Dan Aykroyd is competing hitman. Oh my gosh, how have I not seen this movie?
I can't believe you've never seen this.
I've never seen this movie, and I love it. I got to go back. I'm going to go back and watch this. Okay, so there we go. There's more John Cusack.
And what in Florida 7? Back to the kerfuffle about your dealership issues. Go with the Genesis brand. Get concierge service. Okay, Florida 7. That's why I said to my husband, I'm not buying another car until I buy a Genesis. I love those cars. Do you know, Liz, there is a whole full back massager, leg massager. You can get your driver's seat, turn it on. Like it's like you're getting a pedicure. The whole seat gives you a massage.
Are you, is it a driverless vehicle? Because where are you getting a massage while driving? You're gonna fall asleep. All right, Jenny, we are literally done for the day. Good luck with our earnings trades, and everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. Hopefully I'll show up tomorrow at the SIBO because I'm going to the Cubs game tonight.
I know you'll be a good kid. You're with your daughter. You want to be drinking.
Oh yeah, no. All right, everybody, have a wonderful day. We'll see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Little cantankerous, but...
And I'm not cantankerous. Why does anybody ever say I'm cantankerous? I'm not cantankerous. I don't even know what that means, but I'm not cantankerous.
Do you want to know what it means?
Yeah, what does it mean exactly?
Bad-tempered, argumentative, and uncooperative.
They laughed.
I heard laughing.
It's perfect.
I'm not bad-tempered. It's not my design, period. I don't want to be with you losers. All freaking losers. Degenerates. I'm not going to your stupid hat store in Manhattan.
Argumentative.
That's not Empirical Ham.
Well, they say it is.
No, they don't.
You just said she's vegan.
I didn't say vegan.
No, she's pescatarian. Okay.
Pescatarian. Never heard of it. Occasionally.
And uncooperative.
No, I'm cooperative. Yeah, what else you need?
Yeah, nothing.
There you go.
Okay.
Beautiful. I
could be
You're
argumentative.
68% cantankerous, okay? There you go.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Mr. Ryan Grace in the house with us today. And if you want to come join us hop over to YouTube, type in Tasty Live, come to our channel, give us a like and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, strategies, concepts, trade ideas, trade management, crypto, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. Spend it with my buddies, Mike, Ryan. Good morning, gentlemen. Ryan, how are you?
I'm doing well. Nice to see you guys.
Yes.
Likewise.
Good weekends, presumably.
Mm-hmm. Yeah.
Yes.
Played a little golf.
Ooh.
Went to
How
a
was
tiki
it?
party.
Nice.
That was fun.
How was the golf game?
It was good.
Yeah.
I started off double, triple.
So
Then
you know.
the cart girl came around. I got a twisted tee.
Ooh.
3 pars in a row. I ended up with 7 pars and a birdie. And then I was like leaving, and the cart girl came around. I was like, listen, a twisted tee saved my life.
Game changer.
Yeah.
I like a twisted tea.
Yeah.
It gets a bad rap.
I love it.
Yeah.
It was necessary.
It's an easy drink.
But yeah, fun weekend.
Yeah.
Yeah. Beautiful weather.
Our last one before Seattle.
True. Seattle this weekend.
You
We'll miss you.
feeling a little FOMO?
A little bit, guys. A little bit. I'm gonna miss you out there.
I know.
I'm gonna miss you here while you're out there.
We'll
Hey,
miss
we
you
wish
too.
you could come.
No doubt.
Yeah, I've never been to Seattle.
Oh, really?
Did we do Seattle last year or 2 years?
Yeah.
Was that last year?
Seattle was last year. We stayed across from GameWorks, and we went to GameWorks.
Oh,
the
yeah.
following morning.
Yeah.
Yeah.
Made them go to
Our
Have you ever
hotel
been
was
to a
across from
GameWorks?
GameWorks.
No.
It's like Dave and Buster's. You've been
Okay.
Yeah.
But they have like Dave and Buster's is all like little coin games, you know. At GameWorks, they have like the big game, you know,
Like
the
multi-level games.
multi-level games. It was a thing in like
I'm Googling this right now.
yeah. I remember one that was I think it was in Arizona. That when we used to do like vacations, we'd go to the GameWorks, and it had a 3-level shooter that you were like strapped into
and it would lift you.
and you'd like go to like different levels. Yeah, it was.
Yeah, I guess I don't understand what you mean by multi-level games. I thought you meant you progress through the game and there's
No.
different levels. Like you have a boss, first level, you get to
These
second
were like
level.
roller coaster / games, like not roller coasters, but they would like, you know, you'd be like going through the shooter and you'd go upstairs and then it would like slingshot you to the next level and it would be like different enemies. And if you got shot, you'd be moved down. It was very like interactive.
Okay.
So I saw that I thought those were all gone. I thought those were like relics of past times. And there's one in Seattle.
Still there.
We went to it. It was disgusting.
Across from the
I mean,
hotel. So we were like, well, obviously we're going to end up
Yeah.
here.
Have to.
Yeah, we had a couple drinks. And, yeah.
Does Seattle still have the Chaz, I believe it was called?
The autonomous zone?
Yeah, the autonomous zone. Is that still a thing?
I don't know. I have not seen a news
You guys
update
like
for
just,
Chaz.
you know,
Was
take
it
a little bit of
Chaz
a
or
trip.
Chad?
I think it was Chaz, C-H-A-Z. Yeah. See if you can find the autonomous zone. I'd love you to report back.
I don't know.
That's why I was looking forward to Seattle.
No,
I haven't been. There's the fish market and there's the autonomous zone. Those are 2 areas I
those
wanted
are the
to check
two things.
out.
We did the fish market last time. That was fun.
We did. Yes, that's a staple.
We'll do that again.
Always got to go. But yeah, Seattle's a fun spot. It's a smallish city relative to Chicago, but
Here it's beautiful out there.
it is. It's nice.
Quick trip though.
Yeah. But yeah, if you want to join us, August 10th, Sunday, we will be there.
Yes.
Totally free. You can sign up on tastylive.com/events. And yeah, it'll be the second traveling show for us.
Mm-hmm.
But yes, we will miss you. Baby watch is in full effect.
It is. Yeah, I've got a couple weeks left, guys. And then that's it.
Are you doing like the trainings, like where you have to like hold it?
Learn how to hold
like,
it?
Yeah, or like take the baby around. Like, do you have to will we have a little fake baby at the office soon?
No, but I did go to Northwestern and do a couple classes. So my wife and I did a couple 3 hours on a Saturday.
Wow.
Classes past couple weeks. So I've learned how to hold the baby. You have to support its head.
Yes.
Believe it or not.
Yes.
And a couple other basic tips and tricks that they give you.
Good.
Yeah.
That's good. All right. Very nice.
So you're ready.
Excited.
Yeah.
Excited. Another tasty baby joins the fold.
Yeah.
The servitude begins.
From day
It's
one.
an offering to
Yeah.
the tasty gods. We bring you a grace.
Yeah, we'll get him on camera here soon enough.
No problem. 10 years.
Yeah.
10, 15 years. 10 years is a little. Vinny will be here soon.
Yeah, naturally.
Good stuff. Well, we got a face ripper of a market, as everybody thought it would be, right? After the craziness of last week, the market memory gets shorter and shorter by the minute. It seems like it seems like it is a minute now. There's no sort of follow through at all ever. E-minis up 80 here, high of the session, 63.45. We've basically reversed all of Friday's move in just a couple hours here. NASDAQ up 375. It's the strongest of the group. You got some big moves back in Meta to near highs. Microsoft as well was up, $10, $12. Apple catching a little bit of a bid after a little bit of weakness on earnings last week, bouncing off that 200-ish handle. Amazon's really the only one on the downside. You even got Tesla catching a bid today, up $5 and change. Been another little bounce back rally we have here. You got the Dow up 485 and the Russell up 33. So the Russell and the NASDAQ, the strongest of the group, presumably because of the move that you've seen in bonds. We've gone from no cuts to rate cuts to holy crap, we need emergency rate cuts, recession in the span of 48 to 72 hours. It's been very, very quick. The narrative switch there. Bonds are at the highs here, 115 and change. Oil has had about a 2-point intraday range today, but we're back to the mid 60s. It was in the 70 handle. Again, another one of those like recession things, oil coming down, not going to need oil anymore because we're all poor and unemployed. Volatility futures 1850 here, down $1.41, about 7%. They've reversed pretty much the entire vol move as well. The VIX at 18 and change here. Gold and silver continuing their upside move. Gold's up $30. It's bounced about $100 from the low that we saw in the middle of the week last week. Silver as well bouncing back a little bit, not as strong as gold, up 48 cents. And then Bitcoin looked like it was going to be more painful over the weekend with given the Friday move down to like 113, 114-ish. Now bouncing a little bit today, 115 and change here. The spot is at 115. Futures a little bit higher, up 2,100 on the futures. Spot up 600. It's quickly over, it seems.
Yeah, I mean, look, regardless of whatever the backward-looking economic data shows and the revisions there to non-farm payrolls, some of the tariff headline risk that we saw as well. Regardless of all of that, if you recall, last Monday, we basically said we've had a hell of a run into July here. Technically speaking, I'd want to see a pullback to 35, maybe 34. That would present an opportunity. I look at certain indicators. I know we don't talk about a lot of this on the show, but conditions were overbought short term, likely do in ETH and in many other tokens, right? We look at the move in XRP, for example. You were likely due for a pullback. Regardless of what that catalyst is, short time, you got the pullback, and we need to keep an eye on it, but buyers are seemingly showing up here at these levels where we would expect them to show up. Our 1 week, one standard deviation move at the time was roughly 110 on the downside, a little bit higher above 120 on the upside. Right now, I think it's about the same, call it 108 to 120. So I think that's the top of the range there that you might look for on a trade here, get you back up near all-time highs. So I'm not surprised by the price action one bit. Keep an eye on the VIX, right? We don't want to see an expansion in volatility here. If this is truly a very buyable dip, you want to see the VIX break back down, underneath 18, 17 here, not the 22 or so handle that it was just at. I'm not overly concerned, guys. I think you're heading into or are in, again, an economic environment that's just relatively conducive to higher prices in assets. You're looking at a complete repricing of interest rate cuts, and now that's based on this fundamental data that we saw. But if you get that, I do think it's going to be supportive of assets. Not every single day or every single week, but generally speaking, I think the trend continues here. You're seeing that in terms of bond prices. You're seeing that in terms of gold here. You're seeing a little bit of shift in the dollar as well.
Yeah,
and I think
dollar reversed pretty much that whole move.
yeah, I think this is an environment in which you want to own some of those assets that we just mentioned. You want to own crypto still here. You get those scares every now and then, but I don't think anything has really changed from where we were last week, right? Because a number that was reported based on data the month prior just gave people a catalyst for taking some positions after one hell of a run throughout most of the month.
We don't really get to your view on equities, but do you think, are you in the same boat for equities as you are with crypto in terms of like just kind of more upside?
Yeah, I think so. In the intermediate term, yes. Yeah, I don't think that you're in an environment where you're seeing this, at least not yet, and that data could change, right? But given what we know today, I don't think that you're seeing a complete slowdown in growth and inflation here. I think you got, a data point or two, a risk headline, a risk off headline that was a catalyst for some profit taking after kind of going up almost every day.
Yeah.
So I haven't changed my view there. I like to keep a close eye on sector performance, relative performance from that perspective. So if we start to see more defensive positioning outperform, that might be one signal. If you start to see that from a factor perspective as well, right? And ultimately you see positions that are more volatile get taken down, you see more of a risk-off move, then maybe there's more to this. But given the price action that we're seeing here today, as you mentioned earlier, there's no follow-through. I think, again, this was just a dip that presented an opportunity. More so, when I look at crypto, I'm a bit more focused there. But generally speaking, I don't think much has changed in terms of the direction that we're going in. And now you're seeing a bit of a repricing in terms of interest rate cuts upcoming.
Yeah. I know that we'll get to it with the slides, but it's been through the big name earnings of like Meta and Microsoft and we had Apple and Amazon, and as a whole, it's been a lot of upside in those. I mean, like Meta and Microsoft, I think was like 750 billion or something combined between them, which is massive amount of dollars. And then kind of the rest of the market's been kind of a chop fest / down. Like it's really been led by kind of the big name stocks in equity markets. And we've said this for a while because that's kind of been, the story is the top 40 or 50% account for, 80% of the gains in the market. But are you seeing that in the crypto space of kind of the bigger names staying where they are and kind of some of the juice being squeezed out of the lesser names?
Totally. You're seeing the same thing where, Bitcoin and ETH look a little bit better than, let's say, Dogecoin.
They have their day of weakness, a couple days of weakness, totally normal, yes.
Yeah, and we'll go through the signals and you'll see that some of the momentum has gone back to neutral on the daily, on the short term. But when I look at the broader structural trends that are in place here, there's no shift or change in any of the signals there. We haven't seen those trends break down. Now you need to see it go from bullish to neutral on a daily time frame before you start to experience that on a weekly or monthly basis. But I'm not seeing anything that's really cause for concern at this point. Aside from a big move, you had a really large, and going back to equities for a second, really large implied volatility premium in there, right? You look at what the VIX just did versus 30-day realized volatility, and you had a very significant premium in there. You're seeing some of that vol come down. You're seeing a little bit of volatility selling here today. And maybe this is just a one-day bounce and you see, continued selling pressure. I just don't think you're in an economic environment yet, or there's an awareness of that by the market where there's some broader slowdown underway. You should get some interest rate cuts at some point here, and the market is repricing that based on that fundamental information. Yeah. But again, I'm not personally overly concerned for what it's worth.
Yeah, and we were talking about that last week. We hadn't seen a 100-point sell-off in months.
I think it was like 20
long time.
2 trading sessions without a 1% move in either direction, like closing 1%. Like it was just kind of we had some big moves to the outside, but there was no like outlier move.
Yeah, but looking at the last 2 days outside of today, we did see some big red candles, but we talked about last week, we were looking at volatility, and volatility was only up like a point, which to me is like, okay, if vol's not reacting more, then I would not be surprised to see this kind of reverse over time. This is a big move today. But volatility not spiking after the 2-day sell-off we saw last week was further confirmation of an assumption of maybe this is just a little pullback here, but the trend continues unless something else unravels. But the unraveling should be paired with a bigger volatility spike if we're to expect it to continue to the downside. We'll see. If you want to join us on YouTube, we're streaming live there. Pop over to the YouTube chat. You can throw in your trade ideas, questions. I've got the Cherry Picks newsletter in there. I'm going to put the Tasty Crypto newsletter in there. Both free resources. Absolutely. But yeah, let's walk through the slides and we'll get back to the questions in the chat.
Cool.
All right, crypto update, August 4th, my friends. Let's jump into the first slide here. You'll see exactly what I'm talking about. So we've got that weekly pullback that we were looking for. Smaller market cap tokens are down more than the big ones. No surprise, that's typically what we see. Bitcoin has been outperforming. So really not much has changed week over week. If we look at those momentum price signals, so I use these exponential moving averages, and when they cross over different time frames, use those as buy and sell signals, bullish, neutral, bearish signals. This a week ago was pretty much all green, so not surprised to see on the size of the move. You know, if you look at where we've come off of, call it 120 or so, with Bitcoin down to 114, 113, we're a little bit higher here. You do get that shift in momentum short term. It's more so the weeklies that I always focus on. If we see those quickly, and that's the other piece to this, it's how quickly do you shift from one market environment to the other. If we were to see a big move that would push these averages in a way where you went from bullish to immediately bearish, that gets your attention. First on the daily and certainly on the weekly. And then the larger structural trend that I want to pay attention to, just to be on the right side of it more than anything, is that monthly trade. I'm not seeing any real changes here when we look at the weekly time frame. On the daily, you've got a little bit of a pause in that upward price momentum. Ethereum has been an outlier. We haven't seen price breakdown as much. Solana is a little bit weaker. But aside from that, you know, nothing really stands out to me too much here. I mean, when you look at where we were on a 3-month basis just a couple of weeks ago, you know, in some cases we were well up over 100% for some tokens. They doubled in price. You're seeing a little bit of a pullback along with the rest of the market. There is less of a correlation recently between equities and crypto markets. But when you do get that volatility pop, you expect to see it in all, you know, volatile risk assets. And that's certainly what we saw here. I don't think they're all the same thing. And so it presents a little bit of an opportunity. Certainly, if the view is in that 3 to 6 months, we're going to be in a very different interest rate environment, a more stimulative environment. I think that kind of gets some of the juices flowing. I think that ultimately is supportive for crypto prices and where we could go in this cycle, as we've talked about, right? We have all these shows where we're saying, yes, and interest rates are still 4.5%, whatever they might be. They could come down. That's going to fuel them higher. Well, and now we're seeing a shift in the probabilities of that, and we're all worried.
Yeah.
No.
It's finally happening. We've had this question for quite some time, and now it's like basically set up.
So don't freak out. Stick with the trend. When the trend changes, when you have new information, react to that information. I don't think anything has changed here. Model the volatility and trade those ranges accordingly is the way that I'm approaching it. And I think that in the short term, you know, the bid that's come into the market is encouraging in that we're not seeing, you know, going back to equities, a lot of follow through here today. You're not seeing that move lower in rates coinciding with selling pressure across everything else and strength in the dollar. You're just not really getting that broader risk off move that you might expect when you do see these things kind of play out. So I think for now, you know, I'm still comfortable buying dips, have been active in things like ETH, a little bit of Solana, even though again, that's a little bit weaker on a relative basis, Bitcoin, and looking to trade still some of those volatility levels in ETH-A and IBIT could present some trades. So if we just keep going through here, you'll see, to answer your question earlier, Nick, are we seeing, more weakness outside of some of the majors? And absolutely, that's what you see. So as we go through to the next slide, a little bit different picture here. Your 1 week moves are more volatile to the downside as they tend to be to the upside as well. You've got some stuff that I just absolutely stay away from right now. Now, if you want to try to pick a bottom, sometimes you can get it right and you time it and you do get that move in Aptos from $4 to $5 and it feels good. But I want to stick with what's working, and there's been a couple of these Shiba Inu, Aptos. If we jump to the next slide, you'll see a few more that I'd probably just stay away from right now. But that's been the theme, at least up until this point. I believe that most alts have bottomed. That's the way that I would trade this market. But it doesn't necessarily mean that you get completely out of something like Bitcoin, which I would never do personally, and jump into a smaller market cap token.
Those are like this is how you trade around your Bitcoin holding, is via these smaller ones. Like they're just like little trades. And we've talked about that before, of like kind of dabbling in a lot of them and taking profits as they move.
Yeah, they're fun to trade, but I don't have a large, let's say, investment position in them. Whereas I might with Bitcoin. And if we jump to the next slide, you'll see the same thing. It just gets worse as you get into some of the smaller alts that are, again, a bit more volatile. I would stay away from Polkadot, Polygon, Compound has been weak. On the other side of that, Hedera, HBAR, has been relatively strong. And so as long as you're not seeing a complete breakdown in momentum across multiple time frames, I would have a bit more confidence in buying the dip in some of these things that are going to be very volatile, both on the downside and then again on the upside. You're going to get that 20% pullback. You could get that 40% bounce off of there. Probably want to keep those positions a little bit smaller, depending on how you you tolerate risk.
Yeah, you got 125% implied vol, so it's telling 124%.
And that could go a lot higher.
Yeah, especially into the up moves.
Exactly.
The up moves, it gets even bigger.
Jumping to the next slide, guys, this is another important one that I like to keep an eye on, and that's our relative performance. And so what we're seeing here is we've had Bitcoin market cap dominance around 61, 62. You did get momentum start to break down there. Before I really would call, full-blown alt season, I'd want to see that weekly shift to red. I'd want to see the monthly breakdown, and then I think you're kind of off to the races and, again, can feel a little bit better about buying some of this other stuff. ETH BTC, relative outperformance has been great over the last 1 and 3 months. You can see when you do get these pockets of volatility, you see outperformance in Bitcoin, at least you have historically, right? There isn't a rush to buy the more volatile, smaller stuff. You kind of see a shift or kind of a bid to, if you want to call it bid to safety in some ways. You see a little bit of Bitcoin outperformance, which is what we saw over the last week. And what we've seen, generally speaking, year to date, Bitcoin's outperformed just about everything. But you have some pretty strong signals now that I think you can, again, feel confident in a broader rally in ETH, as long as these structures remain. Solana on the other side versus Bitcoin, we got a quick kind of bounce there, and that's quickly been sold off as well. Solana versus ETH is underperforming. So the way I use this, how is ETH performing against Bitcoin? Better. Okay, then how is Solana performing against Bitcoin? How is Solana performing against ETH? Right now, if I had to pick how to allocate, it would still be largely in Bitcoin and then ETH. Or if I have to make a decision between ETH and Solana, it's probably going to be ETH at this point. That doesn't mean there won't be some oversold conditions.
Basis.
Absolutely, right? I just want to stick with what's working. There's not a ton of fundamentals to go off of here. You're not looking at this as, it's going to report great earnings, or we're in an earnings cycle, we're going to see accelerations.
ETH and Solana. Solana's what is it, 50 billion, 40 billion market cap right now?
Yeah, it might be a little bit bigger than that. I'll have to double check here.
I mean, so it's still, can't you make the argument that, it's the underperformer of the batch, and maybe there's more, like if you're bullish on the space and the big names in the space, there's a little bit of a catch up there.
Yeah.
Contrarian aspect to it. I know that we look at it momentum wise, it's certainly not the one.
Yeah, and I think you could absolutely see that. I would use then on the next slide here, I would use those 1 week expected moves. So if you
Yeah.
get down to that level there, and you don't see a change in volatility, where volatility is breaking out and possibly on a downside move implying more downside, I would look to kind of wait until you get to that 150-ish level. Well, maybe it's 155. You know, you're never going to be able to perfectly tick the bottom, but I think that's where I look for the trade setup.
Mm-hmm.
And then additionally, when I look at Doge priced in Bitcoin, that's really underperformed. And so it's not giving me any signal that, okay, you're seeing a lot of outperformance or any outperformance in many of these meme coins, smaller market cap tokens. So for now, the trades that have worked continue to work, but you will have some trade ideas at times in some of the smaller cap stuff. But the stuff that's been working has been Bitcoin and ETH here recently. Looking at our volatility dashboard, vols come in a little bit. You've got some slightly higher IV ranks as we've shifted on a 3 and 6 month basis into timeframes where vol is lower and lower. So even though those low volatility levels that we were measuring against higher ranges in the past were low, those same low levels are going to give you a higher IV rank now that our ranges have tightened up a little bit. That said, realized vol is just
nothing.
Zero for Bitcoin. 25% annualized based on the last 30 days of price action.
Need that big green candle.
We do.
The big one, the God candle.
And
the 20K candle.
We might get it at some point. There's been a lot of positive stuff that's been happening in the background. I think especially on the regulatory front that I guess you can't price in every single day, but we shouldn't ignore regardless of what kind of short-term risk-off headlines pop up. That said, vol will come higher at some point, but today your volatility levels are still pretty low. Implied vol at 37%, regardless of whether you get a slightly higher IV rank now off of that range, is where it was last week. Could go much lower for sure, but on a 1 year basis is almost zero. Your expected moves here give you some slightly lower ranges and slightly smaller 1 week expected moves. Look at Bitcoin. We're closer to 6.5. Now we're under 6 on the 1 week, 1 standard deviation move. But those are your expected moves. And again, that's the way that I would kind of trade some of this stuff, right? For Sui, for example, was buying some around 350, even a little bit earlier. If we get a move back up to close to $4, probably take that trade off. So I've got some that I own closer to 4, some that I own closer to 350, but just looking at it as a trade.
Yeah, and IBIT has been, we talk about Bitcoin's realized volatility and how low it is. When you look at IBIT for premium selling stuff, you're still getting 50% IV, which is low, but it's not nothing, especially relative to other products that are $65. So it's still been a great trading vehicle and short premium vehicle for the last couple of months for sure.
Yeah, you get the theta decay in there. You've had the implied premium. So even though it doesn't do much, day to day it burns off, and you've been very profitable selling premium.
Yeah, I'm playing both sides.
Yeah,
and playing into that skew, you have that massive upside skew. But just thinking out loud here, the implied volatility difference that you're seeing in Bitcoin versus IBIT is that it has to do with the longer duration kind of options that you have in IBIT, I imagine, right?
Yeah, this volatility that we're taking is just coming from Deribit.
Okay.
So you could do the same analysis, and we can pull that in here too. Going forward, I'll pull the IBIT in there. So this is just looking at Deribit implied.
Yeah.
But we can look at the the IBIT options as well.
Do you know how liquid their markets are? Like, do they go how far out in time it goes? How many strikes? I know it's like spot based, and so it's kind of like a cash secured market, right?
Yeah, I don't know how far out in time they are. Pulling it up right here. Let's see if I can get you an answer.
Yeah. My guess is it'll be.
I think it's very liquid though.
Yeah, I would guess that it would be shorter duration because the longer duration stuff probably pumps upside volatility into IBIT options. Like you can go, IBIT has December of 2027 options, and so all those options, the vol of those options is so heavily skewed to the upside that it's naturally going to bid up the actual implied volatility of the product because it can only go to zero and 3 or 4 years out options. What is
Yeah, from what I can tell here, it looks like Deribit lists options out to June 2026.
Okay.
So that might be, per your explanation, that might be the
that
reason
probably
there.
was part of it. Okay.
But yeah, I mean, the IBIT December 2027s are big juiced.
Yeah, that's what I'm saying.
$800 for the furthest out of the money strike.
Yeah, yeah, which is a double.
Yeah, I mean, maybe that is the trade. If you have a long-term view, you put on that position, you own the underlying. Now, you do have an expense ratio, but that's more than covered by the premium that you would get from selling that, I guess it's the farthest out.
135 strike. It's a double in Bitcoin.
Yeah. But then again, we're talking about Bitcoin possibly going to
$1 million.
Right. And so, yeah, you never know. I've got a lot of people that are on the desk that I talk to that complain at times about the good trades that they have with covered calls, but those short call strikes being $20 in the money as the stock goes higher and higher after earnings.
Yeah. But IBIT's like a volatility product. Like I wouldn't sell those options unless we saw a 20% move to the upside in a week.
Yeah.
Like, because then you're really getting, because you'll get the pop and vol, and first of all, they'll open up more strikes. So then you could sell the 200 for $800. Like if that's what happened, you would get the premium boost to the upside, and now it makes a lot more sense to sell those into the rip versus now selling a long-term option right now into this low vol environment. You're asking for, the situation that we hear all the time. I have this losing trade, but it's really not. It's just you hedged to it.
You haven't made as much as you could have.
Yeah.
What is the per strike vol on those longer dated options? I think that's the other way that people should probably look at this is look at per strike vols versus just the smooth
55%.
Yeah, so that's really low, right? So now exactly like you're talking about, obviously it's higher than the at the money vol, or it's higher than your smooth VIX style calculation of 30-day. But if you get a move, like we could easily see short-term volatility go to 60, 70%.
Those are going to go to 150.
Yeah, and those
are going to 3x.
Absolutely. So it's a cheap option.
Yeah,
it's probably better to own it, honestly.
Yes.
Right? Do you think Bitcoin can double in 2 years? Like it costs $800.
Yeah.
Put that, and then you might see that $800 double on a much smaller move.
Yeah. I think that's kind of the way to approach these sort of
buy it all.
Yeah, buy them all. Buy them all. I think going that far out is a little tough because you also have a lot of risk based, like the options, the gamma on those options is not that great because it's already priced in that that probability is relatively high. So like the December 17th option, when we look at a delta, so your 50 delta option in December of 2027 is at about 100. So, and that's just because of the pricing of the options. And this is a good discussion because the market is pricing in higher prices. And so you're paying for that pricing in. And when the underlying asset moves, you are already buying that delta. You don't have a lot of gamma on that option.
Yep.
The 1 year options are going to be those 2 or 3x increases in prices. These ones will go up. They're just not going to explode like you'll see with shorter dated options that might be at the same strike. The volatility is priced into that, which is
and you can see a similar structure in the VIX. If you look at the furthest dated cycle in the VIX, it's the same structure. It's obviously different, but your 50 delta is at 25 or the spot price is at 17.99.
Yes.
So the market is pricing in upside moves and the volatility to absolutely be to the upside in IBIT.
Yes.
I've been trading 95 calls in IBIT out in November. Just out towards the end of the year when you get these pullbacks and they kind of cheapen up a little bit as one way to do it. They're trade under $1 right now.
And but you're trading them. You get that pop back.
Yeah, you buy it at 75 cents, it goes to $2, you sell some, you wait for it to come back down to $1 to 90 cents, whatever, rinse and repeat. If you get it, doesn't mean it's going to work every time, but you've seen a little bit of an opportunity in there.
Yeah, we've all been talking about that as just the paper cut that you get on the sideways moves for a couple days is far less than that one. You know, you get that 1 day move, that pop in volatility, more than accounts for it. So,
yep,
I'm with you in that sort of trade.
Cool. A couple more slides, guys. Last one is just a look here at short-term cross-asset correlations. You know, a lot of noise in the 3-week or 15-day period there. There is a positive correlation. It's nowhere near the highs that we've seen. What we've typically observed, as you guys know, is that when the VIX spikes and you get that broader sell-off, we'll use April as an example. Those correlations tend to go 50, 60, 70 even. When we look at the correlation between Bitcoin and the SPY, you're at spot 2.7 right now for a 15-day period. Long run average in there has been about 40% correlation. And then with volatility, you know, less of an inverse correlation right now. But if you do get sustained selling pressure, you easily see those back up 70, 80%. No correlation to gold at the moment, no correlation to the dollar, no correlation to bonds. Short-term, low positive correlation to equities. That's kind of what we're seeing. And then finally, one more time, stablecoin funding now available. Yes. Development team on the Tasty Trade side has been hard at work over the last couple of months, grinding away to make this possible. And over the last 2 weeks, it's been a great launch. So if you have stablecoins somewhere, you want to deposit them, it's instant funding, 24/7. That buying power is immediately available, whether you're in the U.S. or you're outside the U.S.
Saturday, Sunday, midnight,
round the clock, baby.
1 a.m. Doesn't matter.
Fund whenever you want. It's a beautiful update to the platform. So if you do have an account that is eligible for crypto trading, that's an individual cash or margin account, looking to expand that as well. But to start with, individual cash or margin account eligible for crypto trading, enable crypto trading, enable crypto transfers, and then you can deposit one of 4 stablecoins: USDC, USDT, Ripple, Ledger, US dollar, and PayPal USD, PYUSD.
Awesome.
Yeah, especially beneficial for crypto available countries internationally because you avoid the wire fees and all that stuff with this. So smaller fees, we should say.
Anything fun in the crypto world coming to us soon?
Still working on adding more tokens to the broader offering. I think recurring purchases go into testing this week, so you'll be able to set up recurring purchase. We have recurring deposits today at the brokerage, but let's say you want to buy $50 of Bitcoin every week, every month, whatever it might be. You'll be able to set that up every day, every hour. Put it on autopilot, and that'll just run for you. And that's the precursor to recurring purchases for equities at some point here. So a lot of work that's being done there. You'll see some changes to the interface, the order tickets. We know that there's a lot of work that needs to be done on the broader user experience for the crypto trading side of the business. So that's all in place, and working on some other things as well that should be nice additions to the service in the near term.
See it.
Very good.
Beautiful. Popping over to the YouTube chat now.
Yeah.
I see it is.
I love this one. Got to get the crypto guy a posture chair. Absolutely. I don't think anybody realizes like what kind of setup this is over here. So this looks like, I don't know how well you can see it. It looks like a bar or something, right? This is like a, I don't know, like a bookshelf back here. It is a bar.
It is a bar.
A bunch of
it has shelves.
So like my knees are smashing up against these shelves. I got my feet on like the second shelf in here, and I'm in this like Quasimodo, like hunchback position. Like, hey guys, look at the expected move.
We'll work on that.
I should just stand up.
Yeah, Thomas has the same problem too. Yeah. I mean, it's just tough.
This is so much better. But then I'm in this chair that's got like this U shape. So it's just like crushing my back.
Yeah, we got to work on that. We got
to get the chairs where you're just like laying down with the 8 monitors. That'd be amazing.
Yeah, thanks for the shout there. See, then it's like I got to pick up the microphone to talk into it. I can't sit too far back.
Voice, you want the mic.
J Grad, thank you for that.
We'll work on that. We're gonna work on that. I'm gonna talk. Hey, we love you.
Got injured at work today.
Yeah.
Hey, that could be a nice little bonus for you.
Don't even speak that into the air because it will start happening. My back's like a 70-year-old.
I'm just gonna sit here and just hold this microphone like this.
Yeah, that view. I don't know. I don't know about
that. Too funny. What is the correlation of Circle and crypto markets?
Oh.
I can run it for you real quick. We want Bitcoin Circle.
You can you could do it with the stocks.
Oh yeah, I got all sorts of programs over here.
I love it. You got a team of nerds working on all your.
Oh, this is just me using different software.
Yeah.
So Circle probably hasn't been out for more than like 30 days, right? I don't have a 90-day. Let me see what the 60-day is.
Yeah, it was June, middle of June was the.
Okay. All right. So on a 30-day basis, I've got really no correlation. We just don't have enough data here.
There's so many other dynamics.
Yeah. Negative 0.04.
Yeah.
So 15 days. 15 days is probably more relevant. 43% of the time it moves in the same direction.
Yeah. Okay.
But one is a stable coin issuer. And crypto is crypto. Bitcoin is Bitcoin, right? This isn't even like if we were looking at a gold miner and gold or a Bitcoin miner and Bitcoin. I think a fair correlation or comparison would probably be Coinbase. Coinbase has really never had a negative correlation to Bitcoin, right? That would be somewhat unexpected. If I look at the last 252 days, trading days for Coinbase, the correlation between Coinbase and Bitcoin is 66%. That's over a 1-year period. On a 30-day basis, it's about 50%. So most of the time, it's going to be moving, or the majority of the time, it's going to be moving in the same direction. But again, you have company-specific risk with Coinbase. They could have an earnings announcement and the stock price could sell off regardless of what Bitcoin's doing week to week.
Mm-hmm. Yeah. Were you surprised at the move in Coinbase on earnings, despite numbers being good?
Yeah, I saw that it was a little bit lower. I honestly don't follow the company that closely in terms of, what were estimates, what were expectations for revenue, trading activity. Sometimes it's one number or another that just sets off some of that selling short term. It also could just simply be that
market dynamic
thing just ran up so much. Now you get your answer. Okay, it wasn't any better than expected. There were no upside surprises, and selling begets selling. It starts to feed on itself. That is a big move, though. 400 down to 300. But
I mean, it went
quite a gap there off.
It went 250 to 400. To 300, so like if you held for 2 months, you're up, 20%.
Exactly. Yeah. I mean, this is similar vol at times. I think it's more volatile. It's got to be more volatile than Bitcoin
for sure.
Right?
It acts as sort of like a MicroStrategy. I mean, MicroStrategy has far less of an actual business compared to Coinbase, but they both act as volatility proxies for the Bitcoin space.
Yeah, I've got a 60% implied vol for Coinbase. Let's see what the realized is here. Just 1 second.
Yeah, Coinbase took a beating on the
minis high of the day, up 83. We've almost reversed the entire move.
Yeah.
So wait, what was yesterday?
Yeah, 30-day realized for Coinbase is 92%, and your 10-day, just to kind of encompass that earnings move, to give you a sense of how volatile it was, 10-day vol is 104 if you annualize it. So a lot more volatile than the 25% 30-day annualized that we're seeing in Bitcoin right now.
Scramble everything, saying ape-like posture.
Yeah.
Hodler.
Like I walk on all fours. That's gonna be the only way I'll move around the office after this.
Fun fact about Jay Grad is it's my girlfriend's cousin.
Oh, awesome. Yeah. Awesome.
He's in here smashing the like button, smashing the hearts.
Supporting the boys. Yeah, I love it.
Yeah. We're both excited for the Bears season this year. Things are on the up and up.
We get Hard Knocks this week.
Oh, tomorrow. Yeah.
He's got a countdown on his phone, I'm sure.
Yeah, I'm taking the
You
day
taking
off.
the day off, yeah. Wednesday, the Grace brothers come in a little loopy.
Yeah, juiced.
Yeah.
I'm excited. I think it's Hard Knocks is always fun. I love all the players, regardless of the team they're on. They've got great personalities. They have fun. I mean, you got to have fun. You're playing professional football. You're making millions of dollars to play a game, right?
Yeah.
You can't be pissed off about that.
No.
It's like us on here, not making millions of dollars, but we get to do a show. We can't be pissed off about that. We have fun on here.
Beautiful life.
Yeah. Let's see. H-bar is the future.
Oh, yeah.
H-bar is the future. It's hashgraph, not blockchain. Speed, security, scale. Millions of TPS security possible. It's amazing. I'm not sure if that's an ad or...
Yeah, did you just read a free ad?
I have done that before.
I know you have.
Yeah. I've made that mistake.
Pump it. Pump it.
What do we got? What would you do if you could sell a leap option to finance something like enough to pay for a cortado?
What? I got a question for you. I'm gonna ignore whatever that was.
I think I'd go the other way. I'd want to be long, like an in the money. I'd do the poor man's covered call, long something with more duration and sell short duration against it to finance it.
Yes, for sure.
Yeah. If you're selling near term premium, that's great. But if you're in a crypto product, buying the leap, you have a much higher probability of making a good amount of money if there's a rip.
How much liquidity comes in? Are you okay? I think because they brought it up now, it's really bothering. We'll get that. We'll
conscious of this now.
Yeah,
You're right. My back does hurt.
Yeah. Don't think about it. It gets worse. How much liquidity has to get pumped in on a day to really move some of these things? Like, what do you see? We can promote my friends at H-Bar. Like, what comes in to pump that 100%? Like, what kind of liquidity? Is it $1 billion, 500 million, 100 million, 50 million? Like, what kind of moves stuff like that?
Yeah, I mean, I guess to start off with, we can just look at, and this is why they're so volatile, right? Their market caps are tiny. The whole space is tiny. There's not much money in it. You could trade futures and other derivatives, but it's kind of long only, or everybody sells at the same time and unwinds those positions. So it all moves together. So I think if you look at Coin Market Cap or CoinGecko or anything that's going to give you the market cap, right? I mean, these are really small stocks in the S&P 500. Once we get outside of the top 10, number 10 right now is Cardano, has a market cap of 26 billion, if I'm reading that right, 26 billion. So once you get outside of that, top 2025 here, Monero, 5 billion. Like $1 billion, if you were to get that in there, is going to absolutely move this thing. On the other side of that, I think we could use the flows that we've seen into Bitcoin and Ethereum ETFs, right? You look at the recent performance and just line that up against the inflows. July was one of the best months on record for ETF inflows. I think Bitcoin and Ethereum combined, it was like 11 billion into those products, which is not a ton, but ETH is only 445 billion. So you can get a bit of a squeeze given a couple of things, right? So the money coming in needs to be there, obviously, but you have auto liquidations on short positions that occur in the perps markets. And so you see some of these moves amplified or exasperated in some ways. You have a lot of illiquid supply too, right? To Bitcoin this time, we don't really see a ton of sellers. We've had some larger whales in terms of what you can track on chain. We've had some larger whale wallets that have liquidated some positions or have moved to exchanges, presumably to liquidate. We talked about Galaxy, the OTC desk, facilitating some trades there. But generally, a very large percentage of Bitcoin's supply doesn't move.
Yeah.
You know,
so
people...
the liquidity on the sell side isn't there.
Yeah, and then on the buy side, there's no sellers,
Yeah.
right? So like you've got to buy it at higher and higher prices if you want to get a big order done. And I think that again, that has an outsized impact on some of this stuff. So what size move has to come in? Tough to say exactly, but you go back as well to the selling pressure we saw when we were like, the Germans are dumping on us.
Yeah.
And this was back when you had crypto that was seized by different authorities.
Confiscated when the
Right?
Germans are
And so we were seeing 10 to 15% moves, if I recall correctly, like within a week or 2 weeks, where it was maybe 2 billion in assets being sold. I think
it's a drop in the bucket.
yeah, we have a different market environment now, especially the one we're in currently, where you've seen this gobbled up, right? The market can absorb some of that. We saw the Galaxy sale, estimated 8 billion, 9 billion, whatever it was. Market ate that up pretty easily. But it's a few billion here, a few billion there on a short-term time frame can swing this around a little bit.
And then a lot of it, do you think is like on the smaller stuff? You think it's like just piggybacking? You see some, in some coin that's $4 billion, $3 billion, and you see somebody come in to buy 5 million. It's just a small little. I mean, it's something, but on a $5 or $6 billion coin, then you have the people that see that they get a notification or whatever happens. That's kind of like a piling in.
Yes, I think it's the same thing with equities and meme stocks at times where
get some social capital.
You can catalyze a pump, but you're not going to be able to turn around and sell size into that without resetting the price back down to kind of where it was or where it came from, right? The thing goes from $10 to $20. You can't just turn around and unload everything at 20. If you do that, you're going to send it right back down to 5 or 10 or whatever, where it started. But it's fun in the meantime.
Yeah. As long as you stay small, it's okay.
Yeah.
Oh, no mortgage payments,
Well, it's just if you're a larger institution, a bigger fund even, you're probably not in this smaller stuff because what are you going to do in there?
Yeah.
You want to do things.
You don't have the liquidity to put 10 million.
Right. I want to do a bracket order or a contingent order where I can come in here and I can unload on a time series where I'm not going to move the price much. So I can get the desired price I want by selling or buying little chunks over a defined period of time versus I've got a $2 billion order. You might work that in the market for a period. It's not just going to be, one trade, obviously. And that's the same thing in equities.
Would you consider selling a put in MSTX? Daily target 2x long MicroStrategy ETF.
I forgot that we were doing that.
There's a suite of MicroStrategy stuff now. I can't even keep track of all of them. There's like multiple different funding sources. It's become there's a web of liquidity outreach.
Yeah, I don't personally use a lot of leverage. This stuff is volatile enough for me.
Yeah.
If you're rip-roaring bullish, sell a put in a levered ETF and then buy the calls too.
Yes, you do.
With the proceeds.
We call that the stupid.
Yeah,
my favorite.
It's an IV of 72.5% right now. Realized is probably up there. I don't trade that stuff.
Yeah.
But if you're super bullish, I would consider it. I think it's, for me personally, it's easy just to not use as much leverage.
Yeah.
You could go in there and load up on, that's the other thing. Like, I think people focus too much on some of these ETFs or the different companies that are now buying this stuff. You want to go balls to the wall, go into the futures market. See, they're like, get into one of those big CME contracts if you have the capital or even the micros. Like, I think it's, probably 3x leverage.
I think even more.
Coinbase Exchange does 10x intraday perps now. I mean, if you want to swing it around, the levered ETFs are 2x, like, sure, but let's go higher, man.
Yeah. The Bitcoin I don't even know if they still do the ETH one. Do they still have that one?
Bitcoin's 5 coins.
Yeah, it's 5 coins. So it's a 500K notional. You can, you get about 50, 60% leverage. And that's in my Reg T account. If
Right? Like, I mean, let's do it. If we're going to do it, let's do it.
Yeah, you're putting up 25, 50K for that.
So ETH is like...
ETH is 50 coin.
Yeah. This is big.
So
the max loss on a short put's 170 grand in ETH. So it's around there.
Yeah, I don't know if you sell it. Yeah.
So yeah, 10,
just buy
20,
the contract.
30, 40. Yeah, that's a lot of coin.
I mean, you got to get your kicks somehow.
Yeah.
Right?
Right.
Yeah, there's a lot of ways to get exposure.
Yeah.
And on
Stay
that
small
note,
out there, despite.
Yes.
Look, man, I got one rule: trade once, trade huge.
And then
you guys are all over here like trade small, trade often.
When he hits his one trade, that'll be the last show we have with.
There will be signs.
There will be signs.
Love to see it.
Yeah, you guys were like 7, 8 years old, walking around with those shirts from JCPenney. It was like "Go big or go home." You know, if you don't practice, you don't deserve to play.
Yeah,
and all those things on there. There was like the "and one" shirts.
Uh-huh.
Yeah, man, go big, go home.
Yeah.
Swing for the fence.
Only winners get trophies. That kind of
Right.
thing.
Yeah. Oh my God.
Well, another lovely Monday in the books. If you want to reach out to us on Twitter, you can certainly do that. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan's at Ryan Fred Grace. We're gonna get him a posture chair ASAP.
Yes. Might need a chiropractor too.
Yeah.
Well,
you got one.
I got one.
Yours is a spicy one.
He's a spicy one. He's very little kooky.
Give Tasty Crypto a follow as well. I've got the links in the YouTube chat. The one pinned at the top of the YouTube chat is for the newsletter for tastycrypto.com. Sign up for that for free. Also got the cherry picks in there. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. Been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We're back. It's still Monday, August 4th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. Keys Ilya Spivak. Ilya, how was your weekend?
Excellent. Besides the fact that I tweaked my back yesterday, everything has been going great. It's been sunny. The kids have been in and out of a pool. It's been magical here.
I took my back yesterday too, but it's because I loaded up on dollar longs, and it's quite heavy now as this trade continues to move in the wrong direction over the past few sessions.
Welcome. Come on in. The water's fine.
Yes. Well, we have to figure out whether or not what we're seeing in the market today is resumption of the rally in equities, which are finding a strong move off of support, which was reached at the end of last week, or this is just your garden variety dead cat bounce, which, as producer Josh has a lot of questions about the physics of cats and concrete. Feel free to opine in the YouTube chat. But Ilya, on Friday, we had a chance to talk about the non-farm payrolls report. So we didn't have a look at the week ahead. As is often the case, we will do so here at the start of the show on Monday. It's a much quieter week. Last week, we had this week of acronyms, GDP, FOMC, NFP, Wednesday through Friday. We also had those earnings releases, Amazon, Apple, Meta, Microsoft, that really saturated the second half of last week. But as we make our way into the beginning part of August, this first full week of August, the earnings flow is decidedly lighter. And I'm looking at a calendar here that doesn't jump out to me whatsoever.
No. I guess we'll get a little bit of data this week. We're going to get probably the only sort of notable piece of U.S. news on this calendar is the ISM services report. We will get the BOE rate decision. That'll be something for the British pound, and it'll factor into a conversation about how to trade the dollar, at least in that space. But other than that, it's a very quiet week as far as data. Something we don't see on the calendar here is there's a set of trade numbers out of China this week as well. Obviously, as we approach this deadline with them, if it even is one, it seems like it maybe got kicked down the road again. But ostensibly, we have something of an inflection point next week with China on the tariffs front. And so the trade data may be interesting. Obviously, we just got second quarter U.S. GDP numbers, and they had all kinds of shenanigans with imports and inventories again around the sort of U.S. corporate and business world first front running the tariffs and then spending down those inventories. But yeah, on the whole, it's a quiet week as far as data. Certainly nothing like last week. And on the one hand, maybe that gives the markets a bit of time to digest, but on the other, maybe it lets them find a path of least resistance without event risk hanging over everybody's head. And if that were to happen, and if that were to find some clarity, that would be certainly very helpful after all of this jumpy volatility.
Well, as we look at this week, we have a few items, I suppose. We had factory orders come out today, which, as far as I'm concerned, didn't really move the market whatsoever. Down by 4.8%, was expected 4.9% month-over-month decline. In the days ahead, there's really not that much. Tomorrow's ISM services PMI is perhaps the most important thing. I don't know if we're really caring about a Bank of England decision on Thursday, or maybe Canadian jobs data, because Canada still would be disproportionately impacted by our new trade agreements, or lack thereof, that we have with Canada, the tariffs that have been imposed. And given, as you've rightly pointed out, you have a relationship with the US and Canada where Canada is kind of the loony in the coal mine, for lack of a better phrase, where when their economy starts to go south, it could be related to something to do with lack of demand coming from the United States. So I think that's worth keeping an eye on. There's some crumbs for the tariff impact here over the next few days. But before we get to any of them, we have to talk about a market that's proving very resilient here at the start of this week, of which
one way to look at it.
Certainly not participating right now. No long equity deltas in my particular portfolio. S&P up 1.36%, NASDAQ 1.69. Your Russell is the leader, up by 1.71. I think the notable development here is not just that stocks are rallying, but this complete reversal in volatility here, Ilya. We've given up 2 points on the day, or at least 2 points from the highs that we had at the end of last week. Which is why the question here at the start of the show is this a dead cat bounce, or are we seeing legitimate signs that the rally is resuming? It's a 3% decline from the high on the NASDAQ that we had immediately after the Microsoft Meta earnings to the lows on Friday, and it's where the market had found support 22,800 or so numerous times in July. So why shouldn't traders be looking at this and saying that the uptrend is still intact?
I think you have to look at this in the sort of ticker agnostic way that we typically like to look at these types of things. And yes, people have all kinds of emotional attachment. I know, because being bearish, I get their comments, to being long stocks. Just absolute disbelief in the possibility that stocks could ever go down. And indeed, if you started watching markets anytime, basically over the past, I don't know, let's call it 18 years. 18 years. Yeah, give or take. Well, I mean, let's say the bottom in 09 was around when people might have started to get engaged. Anything from then after, even COVID, though that was a scary spill. The general lesson being taught to markets is that you just buy every dip and everything's okay. And obviously we know that history doesn't work this way. And so when you look at it and you look at it in context from what happened in the past several days, I think there's a number of things you see. Number one, you had a very clear level of support here. You've marked it off. It looks the same in the S&P. There hasn't been any catalysts. Nothing has changed materially today versus Friday. It's very logical that there is a correction, even just tactically, even just in intraday. The violence of the sell-off belies what might have happened with a bounce. It's a violent bounce. It's only erased about 50% of the sell-off, but more importantly, it sits directly at the range support that the sell-off broke, now acting as resistance. And it's holding those levels. It's holding them in the NASDAQ. It's holding them in the S&P. It's interesting that the Russell probably has the cleanest hold of all, and it has the most impressive rally. I mean, it is squarely at the bottom of its range. Retesting it now, having broken on the downside. So who knows if this is a thing that finds lasting momentum? What you don't know for sure is that it will, because you've not crossed any Rubicons that would suggest that the bearish bias you established last week has been overturned. Now, maybe it will be, but it hasn't yet. And so if you look at the pure ticker agnostic view of just looking at a price chart and going, what is this chart saying? This looks like a mulligan.
Yeah, I mean, I see that here. 23,300 in the NASDAQ right now is effectively where we're pinned. I wouldn't call it exactly the underside of support, but we do have a pivot low here.
Take a look at a daily chart.
Yeah, July 30th intraday.
Or even a weekly.
Yeah. We're almost there, right? You can see it on the lower time frame. The Russell's a little bit more apparent because you have that swing high here on June 11th, where you break through on July 2nd, support, and you're running into
S&P is a similar story off the July 3rd high.
Right, and you can see that running into the support from that we had on that Tuesday.
Yeah, for NASDAQ, you're not quite there. To your point, if you wanted to take sort of the most immediate range, that's probably the July 21 high at 23,425, something like that. But it's a similar story across the board, whereby maybe the NASDAQ has a little bit more room to keep correcting, whereas the S&P and Russell are a little bit more pinned at what is immediate resist or support become resistance. But the architecture of these moves, if you will, is about the same.
You know, it's so interesting that you said that, you know, people have an attachment to being bullish, and, you know, you see it in the comments. Maybe you and I should switch audiences, because my comments are like,
they're yelling at you. The other
for being an arrogant bull, Listen, Okay. So
never please anybody.
So I haven't seen this in a while, but I remember in September 22 reading a survey from Market Taker Trader. I don't know why I remember this, but it always jumped out to me because one of the stats that I like to cite is that Bank of America, every few years, they produce a survey about experience of investment professionals that work on trading desks. And the average years of experience that a junior trader has in their surveys typically resides around 7 years.
Yeah.
And so when I think about like, oh, what happened 7 years ago, that was 2018. So the average junior trader on a trade desk right now may have some academic knowledge of the global financial crisis, but they don't have any experiential knowledge of what it was like trading through those conditions. And so I remember this survey from a few years ago in September 22 about retail traders, like what's the average retail trader experience? And retail traders on average have around 1 to 3 years experience. If they're just slinging stocks, when you get into the options world and futures, people have advanced and progressed where they've survived and have decided to take on a little bit more complexity in their trading. So the stats are a little bit better there. But I think that, by and large, if you forget the Tasty audience for a quick second here, if someone were to go onto YouTube, who's your average retail trader, and stumble across one of our videos, there's a high chance that they weren't even trading during COVID.
That's right.
And that to me is like says a lot. So when you get these comments like, oh, incredulously, how could you even think about being bearish? I know I give you a hard time for that, but that's kind of like our old Fox News Hannity and Combs shtick that we do.
Yeah, that's a thing we do.
It doesn't belies the very deep conversations that we have off air. But I think it's difficult for newer traders, particularly when your time view is, Ilya, if we say it's 3 years, if you started getting into the market in August 22, you got in 2 months before the low. And so it's been nothing but—
You've had an amazing time.
It's been like 4,400 to 63. You've seen the S&P 500 go up by 50% in your limited
And this
experience.
is why I don't— You're right. And this is why I don't begrudge people their bullishness. They've been right. Those of us in the macro world that have been doing it for long enough, and you and I have been at this for nearly 20 years.
For half my life. It's crazy.
There you go. So we look at this and we say, right, so this works until it doesn't, but we've traded through when it doesn't. And so we have, on the one hand, an appreciation for the price action, and as macro-minded people, also the understanding that macro tells you nothing about timing, even if you're right. And just because you might be ultimately right, I mean, go watch The Big Short and appreciate as Christian Bale's character hits his head against the screen, and we know that he's going to become very right over time. I mean, obviously, the Michael Burry story is, at this point, very broadly understood, but nevertheless, none of these things, being right doesn't tell you that you're going to be right now and that it's going to work now or even soon. And so as kind of macro-minded people with a certain degree of experience, you look at this and you go, okay, well, maybe I'm right, maybe I'm wrong today. On one hand, that doesn't change my conviction. On the other hand, it makes me want to trade in a very defensive, risk-reward minded way, because you have to be very aware that you might get overrun and be right eventually.
At these levels, Tom was talking yesterday on First Call how he could see that you're going to get good two-way action this week and you could get a bounce to start.
Yeah.
The levels that I had written down were 23,300, Russell 2210, and S&P 6365 as my kind of lines in the sand, where if we rally into them and we start to progress through them, one might surmise that the 3% correction we've seen, and in the Russell, it was more than that, right? From the highs that we had in July to where we bottomed out last week. Maybe that was the correction. And the bingo card for July was, is it feasible to see a 3 to 5, maybe more 7% correction over the next few weeks? Why not? Maybe that was it.
It could be.
Can't dismiss that. But the levels haven't been crossed. 63.50 here in ES for me. I'd like to see us get back through the low that we had on July 30th of 6366.75. That's where that number comes from. The NASDAQ, it's 23,356.50. And then the Russell, I just have right 2210 because it's effectively the high that you had here on June 11th, 2210.90. It was support back in July. In accordance with that, Ilya, we tried getting this filled on Friday. I couldn't. It's been filled now. I'm not going to call the top per se, but if this is a market that is dead cat bouncing, and given what I see to be the preponderance of quantitative evidence about how August tends to be a little bit more two-way, and there has been this historical tendency for volatility to rise, if I'm going to take a directional shot, I've got to be short here. So up against 2225, 2250 in the Russell, I am now leaning some short deltas.
Welcome. We'll see how it goes.
I won't be here for long. I'm keeping on my shoes and my coat.
Rightfully so. Me too. In fact, in all of my kind of rhetorical bearishness, right, there's the conviction that one has, and then there's the execution of one's ideas, where you look at it and you go, you know what? If this market is rising and it's not giving me any evidence that it's attempting to top, I'm not going to take any shots. If I'm bearish and I have conviction in that view, and I don't want to be long, but the market is rallying, what I'm not going to do is fight it. So you look for evidence that maybe something is changing. You take a shot. I've been building lots of duration into my positions as a means of risk management. I've been keeping size very small as a means of further risk management. I've been using verticals and buying puts because vol has been so cheap, all as a way of risk management, all as a way of saying, you know what, worst case scenario, I have at least 2-to-1 reward to risk, and the risk is small because vol is cheap and size is tiny, and if it works, great. I'll scale in. And this was the story in the first 6 months of the year. I did not obviously scale into my stock shorts because they didn't work. I did scale into my dollar shorts because that did work. And so the way that ended up looking was a big dollar position and a small stocks position. Stocks went the wrong way by about 6%. Dollar went the right way by about 13%. Net, that's a profitable 6 months. That doesn't mean the stock idea worked. It didn't work at all. And so I'm looking at this and saying, okay, well, maybe this won't work, but you trade the market that's in front of you. And right now, that's what this looks like. The dollar looks to be on discount. It ended Friday looking very much the way stocks are looking now, where we've backfilled to former support, become resistance for a lot of the major currencies: euro, Aussie, pound, Canadian dollar, Swiss franc, you name it. And so I've laid out a ton of extra long dollar exposure, though I've already been long since the beginning of July, because it looks like an opportunity to add on cheap. And while I'm not adding to my equity shorts today, the moment that this gives me any kind of sense that it's stalling at these levels, give me a 4-hour doji candle or some such thing. I know I'm invoking Josh's favorite market discipline, so hat tip to him. He's our resident candlesticks fan. I think that's where I'm adding, not going the other way.
So we got that bounce off of support here in the NASDAQ channel. Scope and scale of the sell-off on Friday brought us from channel resistance effectively all the way back into support, which interesting how long it took to get up there, right? But we're now in the lower half of the channel. Does this mean the bounce is dead here? Maybe, maybe not. But this is a really interesting turning point if it were to continue. We start seeing those 23,300 and okay, we're now recovering back outside of the breakdown ranges, and you have something a little bit more to work with. Volatility here, that front month, back month spread in the term structure has really compressed in the last few days. It's actually under 5 points again, 4.96 points, as it were. So it's going to be 4.94 points. Either way, though, it's no longer the 7-point spread. So the market here and the change in pricing, it's not like everyone still has their head buried in the sand. There certainly has been that shift across the board. In terms of market leadership today, before we go over to bonds, it's widespread. Only 4 sector ETFs are in the negative, and they're all tied to energy, which I don't recall being a problem for the broader market. If energy prices are going down and energy stocks are suffering, everything else is looking good today. And it's led by telecom, XTL. That's up a whopping 5.64% and breaking out to a new all-time high. So that's not something that you can really hate on or dunk on too much. SMH, one of our other leaders here, finding support right near its 1-month moving average, again recovering through their area. So there's been weakness, perhaps in some of the tech names last week, but recovery, holding of some trends, some stability here, even in the Russell. This 2150-day moving average envelope, it's catching us for now, just like it did in June and it did in May. So this is the deciding time.
Yes.
We could be ready to try to make another attempt higher over the next week or two, and maybe that's the one that fails. But I'm going to take my short stab here.
It very much could be. And all of this waxing poetic that I do about risk management and position sizing and sort of tactical execution of one's ideas versus the ideas themselves is because there's absolutely nothing that says that it can't bounce now and keep going and retest the highs. It absolutely can. But you have to trade the chart in front of you. If this thing goes and pierces the levels it's testing now, you have a different sort of trade than you thought you had. If what you were looking at was a dead cat bounce kind of a scenario here, and so you get out and you wait.
You know, I can't help but think, knowing that last week we had the largest short position in the futures market among hedge funds, large speculators, and then we had the sell-off on Friday, maybe because there was no significant follow through overnight. And I think that's perhaps an understated view of what's happening in this market here. We sell off and we don't really go any further as Asian hours open up. They didn't panic, right? It'd be totally different if Asian traders then kept punishing the market. I think the US cohort would have responded a little bit differently today. But the fact that Asia doesn't keep selling after everything that happened on Friday here in the US, from the jobs report itself to the revisions leading to the firing of the head of the BLS, Asian European traders did not look at this as a reason to do anything. So here in America, we're picking up the baton. This is actually fairly, I point that out as a really important occurrence. I'll pull up the chart later on overtime, Ilya, but I did see a research report over the weekend, I think it was from Goldman, where they showed since April 2nd, how the S&P 500 has traded in US hours versus non-US hours. And basically all of the stock market's gains have come in US hours. Right. It's foreigners are using the opportunity, the rallies, to unload their U.S. equity positioning. So let's just conceptualize this here. If this is a bounce, people didn't get follow through overnight. If you were already short, you just had a chance to reset your book a little bit. You just got a 1,000-point sell off in the NASDAQ. Doesn't hurt. And we will find out on Friday, because the positioning data for the Friday move will not be released until this week. The COT reporting window closes tomorrow at 5 Eastern. Ilya, let's move over to the bond market here, knowing that you and I are a little bit suspicious of this move higher in stocks.
Yes.
Bonds are continuing to push up, which is delightful and perhaps frustrating in another sense, which I'll get to momentarily. But if the jobs data that we saw last week is to be believed, why do we care so much about those revisions? The revisions that we saw, Mr. Spivak, are revisions that we typically don't see outside of when? Recession, which is why I'm going to pull this chart up onto the screen right now. A bunch of numbers from our friends over at Bloomberg. Okay, when the revisions that we just saw over the past 2 months, what what periods have we seen something like that?
Yeah.
Well, during COVID, okay. Oh, the depths of the 2008, 2009 financial crisis. That's no bueno. So all of a sudden, when we think about the bond market's move on Friday, one stat that I continually like to bleed on about is if you look back to 1980, the top places to hide during a recession have been the long end of the curve and gold. And the long end of the curve certainly started behaving like recession was coming on Friday.
Yes.
There's follow through today to the upside. I'm questioning whether or not, one, being directionally neutral is still appropriate. Two, if it is, do I need to recenter or adjust my strikes given the change in environment following last week's jobs data?
In fairness, I have had a directional bias here. This is certainly one of those things where I've tried to build a bunch of duration into my exposure because it's taken so long. And at this point, I mean, I've been sitting on the long side for 26 days and I've got 46 days to expiration left. So I put a ton of duration into this idea because of how choppy this has been. But I do think that we're looking at a breakout now. Now, if you want to be strict, we have a swing high from the last time that we tested the top of this range. And if we sort of do the math here and just eyeball this real quick, we have that big sell-off in April. That's the Sell America Liberation Day, oh my God moment. Since then, we've kind of consolidated in a choppy range once the market's concluded that that's not what's going on. The administration is not immune to market discipline when the bond market gets quote unquote yippy. The administration does pay attention and backs up. And since then, frankly, the tariff conversation has been, for the most part, moderating, not the other way around. And so you get this break now, but strictly speaking, you do have this swing high from July 1st directly in front of us, essentially at 116, a little bit over. And so, strictly speaking, you might say that the risk reward here to be directional is not ideal until you crack that level. Okay, fair. But in my mind, I think the close on Friday, the continuation today after a retest to try to reestablish some kind of a foothold underneath July's closing highs, that didn't work. At least it's not working so far. And I think vol is still so cheap here with IV under 15 that there's probably a very attractive setup here, even though you don't have perfectly ideal confirmation, just because the risk reward can be sized up so cheaply that you can lock in a call vertical, get directional, and if you're wrong, it's really not very painful.
I'm trying to play this both ways. I think in June we were discussing how could the bond market play out over the summer, and directionally neutral with an upside kicker was more or less where we landed. So the directionally neutral, right, in ZB, are we going to be breaching 119 or 121 anytime soon? Something could go wrong, right?
Yeah.
Something could go wrong here in August. That would challenge it, right? The data gets really, really bad. So just a quick gut check here. What does the data tell us? Atlanta Fed GDP Now growth tracker sitting at 2.1% after Friday's data. For Q3, the New York Fed Nowcast is sitting at 2.12%. All right, so we're not screaming like we're careening into recession right now, at least at the top line levels. Core GDP is probably decelerating. So getting to 119, 121 in quick order, it's going to require a real panic, really, to get people's juices flowing. So I feel like this is acceptable. I'm more concerned about notes, though, because at 53 DTE, when this is put on back closer to 110.5, 111, everything seems reasonable, basically wrapped around the one standard deviation move. Another point here, and I'm starting to find myself in a little bit of trouble territory right now. So this is why I'm curious, right? We're thinking about these markets breaking out. Certainly ZN is running up into that July 1st high. But if the tail risk is no longer tail risk of a recession and it's moved more towards something that we have to consider to be part of the base case, because again, we look at those revisions from the jobs data on Friday, and those are the scope and scale of revisions that you typically don't see unless you're already in or careening into recession. I feel really good about being a little bit more heavy-handed on the long delta side of this equation. Yeah. Even if directionally neutral is still a prime part of the approach, it's less directionally neutral with a long kicker. It's equal parts both. So yeah. Iron Condor and, take a little bit less, take the shot. We have less than a 20 IVR here in notes. Long deltas would also work.
Yeah. I mean, I think when you look at this, you start to get a sense that in April, you get a high. Going into May, you get a high. Going into July, you get a high. And those highs are getting lower. Now, you can attempt to draw a triangle here, but obviously it's not the cleanest. But you do get this compression. And the compression has been broken. So although strictly speaking, you're in this world of, let's call it, where you're squarely at range resistance, if you go back to the bounces from May, the compression is broken. The sequence of lower highs has given way. And so with vol relatively cheap, taking a stab directionally, you can probably size it up and make that work.
The bond market and its movement the last few sessions has really changed, right? I don't think we have a clear buy America, sell America narrative making its way through the market like we did in April and May. There were hints of it coming back into play, right? Gold up, dollar down, bonds down, stocks down. We had that one day last week. We had the complete inversion of that another day last week. But today, dollar's down when bonds are up. Stocks are up. Gold is up. Kind of, you can't call it reflation. Makes me wonder if there's something else emerging as a storyline that we need to be having around in the back of our head. But until then, it's an 18.5 IVR in notes. It's a 14.8 IVR in ZB. I'm thinking here in notes, Ilya, that, given what we see in front of us,
and it looks like maybe
put spread side of this.
There you get. There he is. You froze there for a second.
Excellent. No, I'm thinking about rolling up the short put spread side of this. I think that's would make the most sense around these levels. Continue to ride the short call spread side, as Tom would do, but the short put spread side, it can be moved up because I'm not going to squeeze much more juice out of it.
Right.
It's still 53 DTE. And so patience here is required, but understanding that the game may have changed, leaning on the longer side as opposed to more neutral as a kind of roadmap moving forward until data proves otherwise seems appropriate.
Yeah. I mean, I think at this point, you don't want to get too cute and over engineer this. If this, and I mean, to my mind, it looks like something has changed and the bias has rolled over. So while this vol is cheap, some level of participation makes sense.
Let's move over to the world of metals, which are continuing to take back their losses. Metals here are up on the session. Gold of 0.8%. And Ilya, I know, like our producer Josh, are a horizontal man, but I can't help but notice the diagonal person in me is seeing that this uptrend here is starting to come together a little bit more. We're getting back above that uptrend right now. We're back through the 1 week, back through the 1 month, back through the 50-day. Has gold reasserted itself here the past few sessions following Friday's news and events?
I can't help but think that we have a similar story in gold here as we do in stocks and as we do in the dollar. That we had a break and that we're correcting to the site of the break. We're basically in that congestion that we cleared out from early July into the second half of the month, where we attempted to jump higher and then it didn't work. It seems like we're retesting here as well. And so I'm watching it. I'm a little bit short on that break by selling calls. So if vol contracts here, okay, cool. That's going to be fine. And as long as it doesn't rally up a storm, then everything's okay. But I'm watching this closely. I think if I were to be laying out an incremental dollar and I didn't have exposure, I would not be initiating something new in gold, but my bias would be to initiate it on the short side because I think the dollar rally isn't done. I think this looks like a similar rebound as you might see in the euro or in the pound or the yen. Probably the euro or the pound mostly. And with that in mind, I think it's not the kind of thing where you can clearly say, oh, yes, there's a breakout. Now, take me back over 3,500 and then the series of lower highs that you have outlined here in the bluish line, that's been overtaken. And then what we have is a continuation, pennant, flag, something. And you have a breakout and you have a clearly bullish view. Now, because you and I are both looking for these rate cuts to materialize, as the reality of what's going on with the economy finally starts to crystallize, I think your bet on gold then becomes a bet on the dollar more than it is on yields. And starts to become a conversation of, you know what, this dollar is going to rally on haven grounds. And the long end of the curve is going to rally on haven grounds. And in that environment, gold is not going to be the kind of thing that you would expect to really build lasting momentum. It's why I'm looking at this more so in terms of selling vol, because I'm not necessarily looking for gold to crash, but I don't think it has the wherewithal for a big rally right here. Though, generally speaking, were we to really go to, oh my God, we need these rate cuts urgently, you probably do get a breakout in the dollar and in gold and in bonds at the same time, because at that point yields stop mattering and it's just a scramble for safety. So we'll see, but it doesn't look like that level of hysteria is on the immediate horizon. And so instead, I'm just looking for gold to kind of get stuck, lost for catalysts.
Getting stuck, this is a good place to put on a range trade. I think about the recent swing lows near 32.60, the highs up near 35.50 in the GCZ5 contract. Pretty darn close to that midpoint. Difficult to argue with that, Ilya. I couldn't help but notice with stocks, by the way, ES and NQ covered the gap fill from where the markets fell off on Friday morning during the European hours. So once European markets open up, then U.S. equity markets begin to fall, and we've rallied back into those levels. So, a gap. I'm not a gap-filled kind of technician, but it does stick out of my head sometimes when I see the market move up to those gaps and then just get pinned. I digress, though. We're here talking metals. Silver prices are up a little over 1% today, 1.21%. They fell back into their 50-day moving average, which they hadn't touched since the start of June. But as we saw into the end of May, beginning of June, that 50-day was pretty prime support, and we've now caught it for 3 days in a row. I don't know if we'd call this a morning star cluster or anything like that, but it's still a nice little bounce here insofar as we have the former resistance turn support in the recent trend, and we're still holding above that area for now. Below 37.70, as noted last week, this thing became a really ugly chart. No reason to be leaning long. You've lost your 1 month. You've lost your uptrend from the April low. You get back down to 36. Seems reasonable to lay something back on the long side. I would just point out here that if we're above 37.75 or below 36, you get a little bit more directional here. It doesn't feel like a good risk to reward to put anything new on.
Agreed.
But it's a 5.3 IVR, and I think that that's the most notable development as volatility is our guiding light around here. Silver, gold, contemporaneous relationships, right, with volatility. So if silver vol's in the dirt, it doesn't exactly scream like this thing wants to rip higher. We can see in the lower time frame, just another point to this, maybe vol is starting to edge up. The IVRs were negative on July 30th, but they're also falling off over the course of today. It doesn't feel great.
No.
Having long deltas on right now in metals is my point.
Yeah, I don't think there's anything here that's so convincing that you go, oh my God, I'm gonna find capital in my portfolio. I gotta get this on. This is a high conviction idea.
No, not right now.
I don't have any high conviction ideas in the metals here.
What's your feeling about gold, rather copper being a reliable indicator moving forward? I heard this on Bloomberg today. Given the amount of political interference in copper and oil, OPEC on one hand, and then the tariffs for copper, we had the move on July 8th. We had what happened last week. Is Dr. Copper not really going to serve that role anymore as an indicator that traders can follow?
At least not in the immediate term, I don't think. We probably need some time for the price action to kind of stabilize and for the market to start finding a new normal. Obviously, markets evolve. The thing that makes copper a telling economic indicator is its industrial use, and that hasn't changed. The tariffs don't make that case any different. But in the aftermath of what is an absolutely dramatic reval here, I think you need probably a couple weeks of price action that feels normal, where you have, let's say, stocks go down, copper goes down, bonds go up, dollar goes up. You get a sense that, oh, dude, okay, we have some growth dynamics here that make sense. I think now watching copper is probably more interesting than doing anything, just to see what happens, just to see whether it finds some degree of price action response that you can sort of look at and go, okay, I can understand which market I'm trading now. Because if you thought you were trading a risk of supply disruption, a risk that demand is stronger than expected or weaker, or you thought that you were taking a view on sort of a global macro cycle, none of those things have really been the catalyst. It's been erratic response to the nitty-gritty details where the administration goes, there's tariffs on copper, but not refined copper, and then all of a sudden copper markets go bananas back and forth. So I think you just have to let this dust settle and for the price action to show you that it's normalizing to some sort of reasonable historical dynamics. We clearly don't have that here yet. It's only been, 2 days, maybe 3 tops?
Yeah. And I was looking around and seeing if there's a potential trade in here that piques my interest, because Tom yesterday on First Call was calling copper untradeable, which is interesting because he's usually out there saying copper. I think copper futures are a great product to trade. In fact, they could be better than silver in many cases. So why would he say that? Well, you look at the market right now, the margins required are quite high. The risk to reward on these trades, not fantastic.
No.
The liquidity really not there. I mean, look, if I wanted to do this, 67% probability of profit, risking a little bit over 3 to make 1, buying power twice of my prop potential, doesn't check every box. But if I wanted to do this, there's literally nothing doing in the strikes that I would like to operate in. Maybe the 4, maybe I have to go out to the 5, but there's not a ton of liquidity right now. So do I want to risk Hotel Californiaing myself into a position where I get in and then something big is happening again, and because so many other people are scared away, I have no ability to exit? It doesn't seem worthwhile, particularly in a month like August, where for me personally, I want it to be a little bit stress-free, right? Yeah. I got my own concerns with stocks coming in, and I certainly want to be there to catch the save the buying power so that if we do get a real 5% sell off, I can start to layer back in and, well, buy the dip because it works so well. Ilya, oil type prices today are moving a lot. Your favorite cartel in name only is making waves.
Ah, yes.
What say you about OPEC's latest announcement?
I mean, it's generally as pointless and as absent of substance as OPEC plus announcements go. That doesn't make it any different. I would say, if anything, the thing that you want to take away from this is restricting supply has been much easier to do for OPEC members than ramping up production. Now, they don't like to sell cheap oil. They're not in the business of doing that. They're in the business of selling expensive oil. And they dance a delicate dance because oil too expensive, and that's demand destruction. You do want to sell the oil. You don't want to not sell it. And so when you look at this and you say, okay, it's easier for them to restrict supply, and they tend to follow markets, not lead them. This idea that OPEC cuts or output increases do anything is suspect at best. They tend to be market followers, not market leaders. And that's all well and good, but the real thing they've had a hard time doing is increasing production. And that, of course, is because, number one, they don't want to make oil prices cheaper for the most part. Number two, they haven't been able to get consensus that the balance between demand destruction and reasonable prices for their break-even points justifies increasing supply pretty much ever. And so they never really get there when they set new quotas. Getting the membership to actually increase output and meet those quotas hasn't been realized ever since this grouping came together in the wake of the crash in 2014, the oil crash. So with that in mind, I don't think that there's anything to look at here as far as OPEC. Like, yeah, they announced an output increase. Are they going to actually deliver on it? I mean, maybe, but history would suggest almost certainly no. Does anybody care what they say then? Probably not.
Well, they did announce yesterday 547,000 barrels a day coming onto the market in September. An accelerated output hike to help regain market share. The U.S., of course, is leaning on India to stop buying Russian oil, which India has said our economy's decisions aren't going to be run out of Washington or out of the White House, I think is the exact phrase they use. As Reuters points out here, quote, this marks a full and early reversal of OPEC Plus's largest tranche of output cuts, plus a separate increase in output for the UAE amounting to about 2.5 million barrels per day, or 2.4% of world demand. So we have this deadline coming up on Friday for Trump and Putin. This is the 10-day window. I think it's August 8th for Russia and Ukraine to come to a truce. We know that Trump moved some nuclear subs into the area, although doing further reading into it, the United States always has 2 nuclear capable subs deployed in the area. And so Trump may have just been talking about a normal rotation and highlighting it to, saber rattle. Either way, though, the question again in front of us, as is often the case in oil, do we just keep doing what's working here? It's 44 DTE. It's directionally neutral. We're getting pretty close back to the midpoint of the trading range post-Liberation Day after the Israel-Iran war, Ilya.
Mm-hmm.
I mean, 33.1 IVR, hard to say no to it. So if I had to put this trade on again today, would I do it? Yes. And directionally neutral tends to work in oil outside of periods of geopolitical risk. So stay on it.
Yeah. I mean, as I look at this, I want to be directional on the short side because I think there is a growth thing that invariably takes hold. I don't think it's because OPEC's going to increase output, but if you're going to be directional, you have to wait here because you don't have confirmation. You don't have good risk reward. So either you trade it sideways or you wait.
Natural gas is a different animal. Now breaking
very much so
below
is.
its November low begs the question, what are we doing here? Well, I needed it just to last a few more days. But we're now at 22 DTE and we are beginning to poke the downside of this market. You know what, Ilya? This is such hot trash. And this natural gas for the past few weeks has just not been, it hasn't just been sitting well with me. I haven't been able to make money in it. I got to get out of this. I was talking with Tom yesterday on First Call as we think about how the market was behaving. Is it worth getting out of the position? He's like, well, you know, if you're still within the bounds of your strikes, basically, you could always roll down your short call spread side because the existing strikes effectively aren't going to work for you. You're not going to be able to squeeze much more juice out of that. If it bounces back, the short put spread side is in better shape and you can, you know, close it out, if not at a loss, but maybe even at a small profit. I get it. Today we have a 5.58% loss. So it blows through the bottom side of where the short strikes were in the put spread, and now we're even beginning to challenge the long put side of the short put spread. So this is another trade in natural gas where if it was a timing thing or two in a row, I'm done with natty gas until September. I'm going to wait until Labor Day. I don't like taking too many positions in the market that doesn't go in my direction. I'm just misreading it. And whatever my misread is, for whatever rhyme or reason, I can't wrap my head around it or get away from it. So I'm just not going to trade it. Sometimes the easiest thing you can do, Ilya, is just not do something.
Yes.
Right? What's the old joke with the doctor? Like, doctor, like there's a sharp stick in my eye. It keeps hurting. And the doctor's like, okay, well then stop poking yourself in the eye with the sharp stick.
Yeah.
I'm putting away the natural gas sticks for a little while.
That makes sense. And that market in general is not one that I participate in very much, other than looking at it as an indicator, just because, as we've talked about at length, of course, at this point, my strategy calls for laying out small, carefully risk-managed positions when I initiate exposure, and then if the macro timing is right, I add. But natural gas doesn't lend itself neatly to that kind of execution. It's a big contract. There's not much to do on the micro side. And so standing aside makes perfect sense to me for a whole host of reasons.
And now natural gas, I will see you when school's back in session. Ilya, there was a knock-on effect in currencies from Friday.
Yes.
Whereas the U.S. equity market didn't see any further selling once Asian and European traders, really Asian traders, had a chance to react. There is some London-New York crossover after NFP on Fridays. But when the rest of the world really has a chance to weigh the data and register their votes, the dollar keeps going a little bit, right? The Aussie didn't have a great Friday, but it gaps open higher. Narratively speaking, the pound closes higher on Friday, then gaps open higher here today. Same thing for the Canadian dollar and your euro and even your Japanese yen. But the one thing that stands out to me throughout all this is, absent the yen's continued rally, perhaps in part due to lower U.S. yields and weaker oil prices, not much is being made of that gap. The pound is a doji candle up here. The Canadian dollar, I think that's an inside day technically. We're looking at a euro that's an inside day technically and actually red since the gap. The Aussie has given up all of its games after the gap and it's technically red since the market opened.
Yeah.
How do we square the circle of what's happening with the dollar? Because if it's this is an overtime conversation, but it feels like maybe the dollar's demise and this having been a dead cat bounce, that is overstated. And there is still rhyme or reason to hold on to long deltas in the greenback.
That's the way I'm approaching it. I think what this looks like is as garden variety of a breakout, retracement, hold at former resistance turned support, extension, as you can possibly imagine. I mean, this is textbook. Now, of course, we don't know that it's going to hold here. Maybe we're just getting indecision at a former resistance turn support level before we break back down. Maybe. but that's not what's occurring. And so, as I say, I've been long the dollar, building a position since early July. I started with the pound, then I added the Aussie and the euro. I've already taken this pullback on Friday as opportunities, for example, to get short the Canadian dollar, because I think that one gave you a nice mulligan here. I think similarly about the Aussie, about a lot of these things. And so as you look at all of this, I think what you end up with is a situation where you trade it the way that the trend is leading you until further notice. And right now, what you have is a dollar that's attempting to bottom after an absolutely horrendous 6 months, which you and I participated in on the short side, in the first half of the year. I think a lot of those headwinds are spent. There's room for a bigger correction, and the price action is telling you that correction is not over.
Yeah, when I'm looking at a lot of the moves here in the market, pound, for example, highs that you have in early April become support here in May, and we're bouncing from there after last week. All right, thinking about that real quick, we look at the euro, the Canadian dollar. Have we crossed the thresholds that produced the sell-offs? No, in fact, we're failing near them today. 63.9 IVR, Ilya. I have a short call spread on here in the Canadian dollar. I'm not a top caller, but this seems like a good place to trade into former resistance, perhaps former support, rather turn resistance, and take advantage of that high vol we see in the futures, currency futures. Next on the calendar, tomorrow's ISM Services PMI in the U.S. There's U.S. and Canadian trade data, some tariff news perhaps in the morning to rile the market up. In any event, all out early, 8:30 a.m. Eastern, and then at 10 a.m. Eastern time. Ilya, you and I are done here for now, though. We'll be back later for overtime. Up next, after a very brief break, Dr. Jim Schultz is here with From Theory to Practice. So get some coffee, grab a sandwich, come back, keep watching Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract.
Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible.
Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do, man. Welcome to the post-apocalypse edition of what it is that we are trying to do, man. After Friday, if you were on the internet at all, if you were on the old Twitter, the new X, whatever you want to call it, man, if you read through any of the comments, any of the tweets, any of the posts, you would be certain that we were going to trip every circuit breaker in the building here today. And we are now only about 100 basis points away from all-time highs again. So welcome to the show. I'm glad that you are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show, man. You can celebrate if you are a bull. You can commiserate if you are a bear, which if you are a bear, much like myself, that is what we do best. We commiserate with each other. And of course, you can get your questions from me in the chat box. The earlier you get your questions in the YouTube chat, the higher the delta that I will get to that question, because the expected move on the number of questions I get through per show is between 0.1 and 0.3. So Josh, bring us into the market. Let's have a look here. Yeah, it's looking pretty good, guys. You know, I mean, this is how we do it, man. This is how we do it. Give me S&Ps, Montel Jordan style. This is how we do it. The S&P's up 80, up 83. A little Montel Jordan reference for you guys to get your week started off strong. S&P's up 83. You got the risk-free instrument doing risk-free things, up 390 on the day. That would be the NASDAQ futures, which, for the record, is an extremely high-risk product. The Boomer's up 498, and the Russell 2000 Futures Index up almost 37 on the day. You got bonds pretty much unchanged, up a little bit. You got notes pretty much unchanged, I should say, up a little bit. You got oil down, $1. You got UB40 up a titch. You got, man, look at the shifties kind of getting their mojo back. Got gold up 27. Look at the silver bros. Got the silver bros up 43. Hunt Brothers, right, taking a bit of a break from the cheese and pepperoni and saying, man, let's get back to business in the silver pits. Silver up 43 cents on the day. And so volatility obviously getting smashed today, down to $1.60 on the futures. And then the spot volatility, I mean, we can look at it. We all know what it's going to show us. It ain't going to be pretty, right? If we go around to the VIX print, yeah, man, that is not looking too good. Let's grab magenta. Happy Magenta Monday to you guys. Went with the magenta polo here on this Magenta Monday, which I don't always do. In fact, it's actually quite rare. I usually do like a magenta polo on like a Tuesday or like a Thursday, just to kind of keep you guys guessing and kind of shock the muscle a little bit. But VIX, VIX down 252 on the day. Back to the 17 handle. And so that's a little bit like, all right, that's kind of slowing some things down. It's a little bit of a bummer, whatever. But it has been a while, at least a few weeks, since we've been able to say, hey, VIX down $2.50, down into the 17 handle. Like, okay, maybe this is the start of something. Like maybe we are going to live, instead of living between, 14 and 17, maybe we're going to live between 17 and 21 for a little while. Like that would be pretty nice as premium sellers looking to take advantage of, high volatility, high implied volatility rank, and all the things that we talk about every single day here on the network. And we've been talking about for many, many, many years. And so there's your market commentary, which is it going to help you? I don't think so. Is it going to make you a better trader? Most certainly not. But is it on par with anything you would hear anywhere else? Absolutely. So let's go ahead and let's take a look at I want to take a look at a couple of the positions in the portfolio. And then, of course, I want to get to you guys, man. I see you guys in the chat. Man, Ash Finn in the house. Man, Emmett Morrison in the house. David Gallimore's in the house. Bert Earp's in the house. Man, Sam L., Brian Dowdy, Weiss, Andrew Cortado's in the house. Daniel Perkins. Man, look at you guys. I'm going to get to as many of you guys as I can, which is probably about one or two. But that's maxed out for us. Like, we know our limits. Like, we understand. It's like, all right, we've already taken a couple sets to failure. Let's slow it down a little bit. All right, let's go to the portfolio. So I'm not going to do a top-down deal because I don't want to go through every single position. I want to be a bit more efficient with our time here because we do have. So I was actually taking a look at Caterpillar has earnings tomorrow morning. Man, I haven't traded Caterpillar. It's been a while. Like, it's been a long, long time since I think I've traded Caterpillar. But I was like, you know what? Like, let's get a little something started this week. I mean, I think later this week you've got, if I'm not mistaken, AMD is tomorrow after the bell, and then Disney might be Wednesday. I think, let me double check that really quick. I think that's right. I'm pretty sure about AMD. I'm not as sure about Disney. I think it's this week, but I'm not sure. Let me go to AMD. So we've got AMD. We go to the overview. I mean, boom, there it is. Yeah, there it is. There it is. 8-5 after the bell. AMD. I mean, man, you got to be there or be square. Like, the only place you can trade this is on the Tasty Live Network. You can't trade this anywhere else. Like, you can't trade this at just your regular brokerage. You can't trade this at just some other, whatever. Like, you've got to trade this here. You've got to trade this with us. And so tomorrow, obviously, we're going to do something for AMD after the bell. But again, it's, when you walk into the gym, are you going straight to overhead press? No. You're doing a few light sets of laterals. You got to get some blood flowing in the joints. Same thing with Caterpillar earnings tomorrow morning. So we're going to do a little something for Caterpillar earnings tomorrow morning, which will give you an opportunity to fade my play and make a little bit of money for you and your family. So AMD, let's we'll do that tomorrow tomorrow during the show, of course. And so, but we might do some Caterpillar here today. But looking at the portfolio, there actually Autumn texting me again, say, hey, what are you doing? It's unbelievable. And so she did text me, but she didn't say that. And so I do want to do a couple of things. So number one, let's take a look at our Google position. So this Google position has worked out quite well. I believe this was an earnings trade where we sold both sides of the market. And, this is pretty much how you draw it up, man. We sold the 170 put. We sold the 220 call. You've got the stock out now at 194. And this is a pretty good trade. I mean, there's not too much to say about this trade. I'll find a few more minutes, of course. But, I mean, if you go to a chart of Google, when did we do this trade? Let me bring up my trusted chains. The old Allison chains. Yeah, we did this trade on 7/22. So about 2 weeks ago. Yeah, we did this trade about 2 weeks ago. That must have been Google earnings, I would imagine. And so 472, we did this trade. 7/22. Let's go to the chart of Google. 7/22. Where is 7/22? 6/24, 7/22. All right, hold on. I gotta minimize or maximize. I've got to stretch out the y-axis. Whether we're minimizing or maximizing, I'm not exactly sure. But we stretched it out just so you guys can see. Like, a lot of times we have to kind of mentally extrapolate out to where the strikes were because you can't see them on the screen. But I was like, let's just go ahead and take the 5 seconds and let's kind of stretch out that y-axis so you guys can see it a bit more easily. But 7/22, we did the trade, which is right here. So the price action that we had to endure is basically just this stuff, right? So it's just, these couple of weeks of trading action. Our strikes are up here and down here. And so, we could do this on the analysis tab. We could do this on the curve view. Like, there's a number of ways you could do this, but I actually like to go straight to the chart because A, we get to use a Final Jeopardy pen, but also B, you can more clearly see, like, did you take heat? Did you not take heat? Were you tested on the position? Whatever. And you can see right here, I mean, we have not even come anywhere close to being tested. Like, we haven't even sniffed one of our strikes over the course of this trade. And so that's part of the reason why it has worked out so well. Like, you get the volatility crush from earnings, of course, but then you start to get, the extrinsic value just decaying so rapidly because the strikes are so far out of the money. And why does the extrinsic value decay so rapidly when you're out of the money? Because it's not sticky. Why isn't it sticky? Because of the charm. This is all the stuff that I tried to convince Tom of this morning, but I wasn't that successful. Which that puts me on par as a pretty average Monday morning for the skinny on options abstract applications. I mean, Tony was on my side. Tony's always on my side. But Tom was not super impressed about what we brought to the table there this morning. But again, he's not arguing with me at this point. He's arguing with math. And whenever you argue with math, you are going to lose. And so if you look at the 220, 170 strikes, it's like, this is a great trade, man. This is a great trade. If only they were all like this, of course. But sadly, they are not. So, all right. So for Google, let's go in here. Let's highlight the strikes and let's just shut her down, man. Shut her down. 238 on the mid price. That sounds good to me. We can free up a little bit of buying power for Caterpillar, for AMD, whatever else might kind of strike our fancy in the coming minutes on the show here today. So let's do, we'll do 240. That's fine. So let's get filled. All right, no takers at 240. Let's see here. I guess we got to do 241, which is the offer. All right, we got filled at 241. So there you go. So Google, we're filled at 241. All right, so we're out the door on Google. Okay, so let's cross that off the list. The other thing I wanted to do was I wanted to look at well, hold on, look at Chipotle, man. Look at Best Buy. Man, hold on. First of all, look at Chipotle up 20 cents. Like, this could be the start of something to come. This could be the start of big things in the near future for Chipotle. Like, yes, we're probably going to take the shares. And again, you see, look, no extrinsic value left. We have not been assigned. I mean, I guess it's bound to happen any day now. But I still think with so much time left, if we get any type of movement towards the strike, the extrinsic value is going to fill up, and that extrinsic value is going to be sticky. Again, a la this morning with Tom and Tony on the skinny. And so if we get any type of uptick in Chipotle, the extrinsic value is coming back. And once that extrinsic value comes back, the likelihood that we are assigned on the position goes down significantly. Now, because right now you can see it right there. I mean, there it is right there in the, let's mix it up. Let's go purple. Look at that purple. You can't really see it, so I won't use it too often, but is that lilac? Yeah, let's go lilac. So if you look in that lilac circle, you can see that there's not much extrinsic value there. Maybe it's lavender. I don't know, either way. If you look inside that lavender circle, you can see there's only a couple bucks of extrinsic value. Well, again, I mean, the other side of the contract, the long side of the contract, he or she is giving up the extrinsic value if he or she decides to, exercise the option and assign us on our side, the short side. And so when the extrinsic value goes down to zero, when it does go down to some essentially, minimal amount is what I was gonna say, modest, but that's not right. Some minimal amount, like only a couple of bucks, then you're in a situation where the likelihood of assignment is going higher. It is moving up. But still, with so many days to go, I still think there's a good chance we're able to kind of, just hold on the razor's edge here for maybe a while until Chipotle catches an uptick. Now, what if we do get assigned? It doesn't really matter because I've already kind of made my peace with this position. And I'm like, hey, I'm going to hold this position. I'm going to kind of, just be a Chipotle investor. Like we'll have to be on investor relations calls, and we'll have to like exercise our voting rights and things like that. But it'll be fun. It'll be something new for the show. But that's Chipotle. But man, look at Best Buy. Wow. Man, do we have something for the P&L Open Bros today? Like, again, don't look at that. Look at that. Man, we're up a couple $100 today. Doing a little damage to the P&L Open Bros. Oh, yeah, I almost took Best Buy off. And so we're going to leave it on for a wee little bit longer and see if we can't get, the Geek Squad to bail us out just a little bit more here in this position. So Best Buy and Chipotle, there's some quick comments. The only other thing I wanted to mention is Starbucks. Up a couple dollars, and we have our 100 shares here. We're going to sit tight and do nothing. I don't want to sell calls against this right now, just because let's wait and see. Remember, our entry price here is $92. Now, our basis on this is far below 92 because we've whittled this down so effectively over the last, it's been like 7 or 8 months. Actually, it's been like 8 months because we did this trade in December of last year, like the end of December. So it's like 7.5 months. And so it's like, man, I have every intention to hold this at least through this year. What a great case study for those of you out there that, you want to do things that are a bit more active. You're used to holding shares. You're kind of overwhelmed with all the different things that you could do or should do or would do in the options world, and you don't really know where to start. Hey, I would start with a covered call. I would 100% start with a covered call. And so by looking at the things we've done in Starbucks, I mean, I've talked about Starbucks basically, almost every single day for the last 7.5 months. And so if you're watching the show for the very first time, hey, welcome aboard. Go back. Let me flash the activity page really quick. I know I've done this before, but so many new people find us every single day that let me just do this really quick. So you go to Starbucks and you go back, all the way to December of last year. So take a quick, if you're new to the show and you're like a long-term investor, but you're like, hey, I kind of want to do some new things. I want to, expand my horizons and maybe bring some options into the mix. I would encourage you to consider starting with a covered call, A, and then also B, if you want some, some suggestions, some guidance, just some different things that might happen to you along the way, then I would actually encourage you take a screenshot of what you see on the screen right now and go back and you can watch every one of these shows. right? So 731, 720, every single one of these shows. This is one of the huge benefits of my only trading on the show. Now, there's some earnings trades in there too that aren't related to the investment cover call, but I'll clearly, point that out and outline that when those things, kind of come to fruition here along this timeline. But take a screenshot of this. If you go back and watch all the shows, they're in the archives. They're very easy to find. You will actually see all of my thoughts around this Starbucks position from the very, very beginning. I think it's a cool little case study. So I know we have so many new people that find us every single day. And a lot of people are coming from a stock world. A lot of people are coming from, index funds and mutual funds and, whatever. And they want to do some more things. They want to be a bit more active. This could be a good start for you. So all right, that's all I really wanted to do today. I mean, Apple's hanging in there, Amazon's, kind of getting beaten up, whatever. Let's go into Caterpillar. So I'm going to do a little Caterpillar. And I see you guys actually, I see some people in the chat. Well, actually, hold on. I see Brian actually. I like the second comment. Brian, I see you mentioning Palantir. I'll do a little Palantir. And so let's go into Caterpillar first, because I was looking at this guy earlier. And, I think we go to the trade page. I think we go to the 4-day cycle. I'm not going to do a butterfly, believe it or not. I know you guys are waiting for that. I know you guys are expecting that. But again, in the spirit of shocking the muscle, I'm going to keep you guys on your toes. I think we are going to do an at-the-money call spread. We're just going to buy an at-the-money call spread for a clean, simple, directional play in little old Caterpillar. Now, I don't even know what they sell. Don't they sell, like, equipment and stuff? Don't they sell, like, not lawn equipment, although maybe it is lawn equipment, too. But isn't it, like, construction equipment? I'm pretty sure it's construction equipment. And so how could you not be bullish on construction equipment? Just generally speaking, it's just a philosophy. And so when I think about Caterpillar, I'm thinking we got to play this thing to the upside. Now, again, if you are new to the show, I hope you took a screenshot of that previous thing that was on the screen there. But the next most important thing you need to remember is you should do the opposite of all of my earnings rates, every single one of them. Because again, you would be able to retire at least 6 to 9 months early if you just fade me across the board, sight unseen. So I'm going to be bullish on Caterpillar. So that means you should be playing this thing to the downside. So I think you've got Caterpillar at 432. I think we buy a 430. I think we sell a 435. There's not a ton of thought involved. It's a very simple directional play. And, I think it's kind of fun. I think it'll be a little something to kind of grease the wheels for the rest of the week from an earnings standpoint. AMD's, Disney's. I didn't look at Disney. Let me put this on really quick. And then let me look at Disney. I think Disney is Wednesday. But I need to double check that. I'm pretty sure it's Wednesday. So let's go to, we're not a Disney family. We're a Legoland family. We're actually going to Legoland in September, which is going to be super fun. And I'll be out for a few days when we go to Legoland, but it's not coming up for like 6 weeks. All right, so we got filled on Caterpillar for $2.50. My kids love Legoland. It's so much fun. It's super expensive, of course, but it's not as expensive as Disney. I mean, Disney's crazy. And so Disney, though, I think it's Wednesday. So there's an upside call spread in Caterpillar. Again, you know what to do. If you've been watching this show for more than a day, you know what to do. If this is your first day of watching, let me tell you what to do. Do the opposite. I can assure you. And so if I go to Disney, though, it's August 6th before the bell. So that is, that's Wednesday. Okay, so let's go to Palantir. Man, what Palantir? Palantir. Aren't they doing like that 1984 technology stuff where they're just going to like track all of us? Isn't that what's in the news about Palantir? I caught wind of that. Now, again, it just floated, through the ether along my way. It may have been complete rubbish, but I trust Johnny Pools 47 in the subreddits. And so, I mean, who can you trust in this world? You can't trust the news. You can't trust your doctor. Like, you can't trust your dentist, but you can trust Johnny Pools 47 in the subreddits. He's going to tell you how it is. He's going to 100% tell you how it is. And he told me that Palantir is coming to get each and every one of us. So I think we're going to go into the September cycle. I don't know if any of that's true, but let's go ahead. I think you got to play this thing to the downside. I don't really think you need to overthink it. I think we're going to go, but we're going to try to be a little bit strategic. I'm not going to unleash the butterflies just yet. We'll probably start doing that for maybe AMD tomorrow, maybe Disney on Wednesday. Right now, I think we just sell an out of the money call spread in Palantir. It's not that sleek. It's not that sexy, but sometimes it can get the job done. So you've got Palantir at 160. If I sell, oh man, that call skew is crushing me. Brutal. Oh man, if I sell a call spread right on top of the stock price, I'm not getting paid at all. Wow, look at that. That's brutal. I kind of like this lilac. It's darker than I thought it would be, which makes it show up a little bit better. So this guy might be a keeper. I don't know. So $1.97, and I'm right on top of the stock price. Wow. So for those of you that might be listening to the show, accessing the audio only version of the program today, Palantir is 160. I'm in the September cycle with 46 days to go. I'm looking at a 165, 170 short call spread, and I'm only picking up $1.94 for it. I thought I would be closer to like 220, 230, even 240. And the reason why is because most of the time, you have put skew in the indexes and in a lot of equities too, but you get kind of these high flying names like a Palantir, like a Nvidia, whatever. Then you can have significant call skew that can kind of mess up the pricing, where you actually get paid on the vertical spread side, on the put side, not so much the call side. And so let me see though. Let's do some investigation here. So if I go to the implied volatility, yeah, there really isn't that much call skew though. Yeah, I don't know what's going on with this pricing. I'm just not getting paid. I mean, what I'm looking at here, by the way, if you're wondering, I'm looking at the implied volatility as I move from one strike to the next. And normally, if there's significant call skew in a market, you'll see the implied volatility increasing as you move further out of the money. Like stocks or products that have the potential to really do explosive things to the upside will oftentimes exhibit call skew. You will see it in like Bitcoin. You will see it in like Nvidia around earnings. You might even see it in like Tesla around earnings, whatever. I expected to see it in Palantir here. I'm not really seeing it. And so for whatever reason, we're not really getting paid on this call spread. So I kind of think I'm just going to do an at the money put. I'm going to buy an at the money put spread. So what if I buy, let's buy a 170 and sell a 160. Wow, they're getting me there too. Man, what's going on? So that's 577. I thought it would be $5, but it's not. Wow, man, they're getting me on both sides of this trade. Now it's personal, which is good because they're going to have all my data anyway. 170, 160. Ah, man, I thought that would be about even money, but it's not. It's 577. What if I do a 165, 160? Wow, 275. All right. I don't like this trade either. So now I don't know what to do. I kind of think, hold on, wait a minute. It's only $160 stock. What if we just sell both sides and do a strangle? Maybe that's the move. Yeah, there is a good amount of call skew still. I mean, the premiums are really hanging in there. I mean, you've got, there's a couple different ways that you can look at, premiums. Well, are they though? No, I guess it's really not. There really isn't. I thought there was, but there really isn't. There really isn't that much call skew. So the thing we looked at first with implied volatility is correct. There just really isn't that much. But if I sell, what do I have? 12 delta put, and I sell a 12 delta call. Buying power, yeah, I think this is your trade. Because now, again, it's personal with Palantir. And we're a little bit bearish. I mean, you couldn't even be closer to neutral, but still slightly bearish. And so the buying power effect's only $1,600, and I'm picking up $4.50. And so I like the trade. I did not like the call spread for the reasons I mentioned. I didn't like the put spread for the reasons I mentioned. I mean, the main reason was the pricing did not look super favorable, in my opinion. And so usually when I'm buying an at-the-money put spread, I like to be around even money. When I'm buying an at-the-money call spread, I don't mind paying up a little bit for it because that's typically what you find with positive drift and the natural skew that's in the markets. Caterpillar was actually about even money, though. And so the fact that there was such a huge markup on the at-the-money put spread just kind of, it didn't leave me feeling, it left me feeling a funny way about that. And so I'm like, well, let's just walk away. And this is a good teachable moment. Don't forget, you can always walk away. Don't forget, if something is not setting up that you either A, don't understand, or B, don't really like, just walk away. There's plenty of other things to trade. I mean, there's Caterpillar tomorrow morning, there's AMD tomorrow night, there's Disney the following morning. You could just say, I'm not going to do any earnings this week. I mean, these are all kind of, these are kind of your B-level earnings calls. I mean, we're not talking about Nvidia. I mean, we are talking about AMD, but, we're not talking about, Tesla, Apple, Meta, things like that. And so, all right, yeah, let's sell both sides on Palantir. I actually like this trade now. And we'll ship it. So I sell both sides on Palantir, filled at 451, and boom, there you go. All right, so there's my Palantir trade. All right, so let me get to you guys, though. Man, let's see. Look at you guys. Man, I appreciate you guys. Man, I appreciate you guys so much. And so let's see. Let me surprise and delight somebody in the middle. Where are we at? Where are we at in the middle? This is good. Oscar Martinez says, "Thank you for the humor. It is B minus, but the best teaching, it's A plus. A plus. I appreciate you, Oscar. I appreciate you 100%. And I mean, the teaching might be a B, but the humor is really solid at a B minus. But it's consistent, right? Like you know what you're gonna get. We don't. The standard deviation around the humor is very, very tight, very, very tight. And so apparently the implied volatility rank is extremely low. And so let's see, where are we at? Who can I surprise and delay in the middle? Well, I'll just say, Rancher just said I closed a put spread in Google for a scratch this morning. And I'll just say, I'm glad you brought that up, Rancher. You didn't even have a question, but I'm plucking you out of thin air, man. When you have a trade on, and you didn't even share this in the context, but I have a feeling maybe you were taking some heat on this trade. I have a feeling maybe, this trade wasn't working out so well for a little while. And now you're able to get out for a scratch. Man, is that not like a breath of fresh air? Is that not like, man, what a weight has been lifted, right? And so remember, whenever you're in a trade and it's not working and things are not like the Google trade that I posted a couple minutes ago, like going through the chart, we didn't take any heat, like everything was perfect. It was all just, strawberries and sunshine, everybody's happy. It doesn't always work that way, right? I mean, a lot of times in trading, you're not so happy, a lot of the time. Well, when that happens, don't ever forget that just getting back to a scratch oftentimes is basically a win, right? And so, Rancher, the fact that you were able to get back to a scratch on your Google position, again, I'm assuming that you took a good amount of heat on that trade. Even if that's not true for that specific trade, you know well that will be true or is true for another trade that you have or have had or will have. And so for everyone else out there, just remember, like we're set up, right, to have a good amount of winners and have a high probability of success and all that kind of stuff, but it's not going to happen every time. And the ones that get away from you, if they just come back close enough to, the dance floor, close enough to being green that you can scratch them, man, there's a lot to be said for just scratching them, getting them off the board, and then moving on, with your day, moving on with your life, moving on with the other things that you want to do. So, Rancher, thank you for sharing that because I think we were able to maybe extrapolate something out that's at least a little bit helpful for a couple of people. All right, let's go to the beginning. Show's almost over, so let's try to get at least one or two. And so Daniel Perkins in the house. Happy Sock Sweep Monday, Dr. Jim. May all your uniforms be yellow. Yes, the Sox are on a heater. They're on an absolute heater. Swept the Astros at home. Unbelievable. 11 games over 500. 3 games out of first in the AL East. 3 games out of best record in the AL. Like, I can't believe it. You can't believe it. And so Craig Breslin, man, just let him cook. Just let him cook. He didn't do anything. Like, he wasn't even in the kitchen, but just let him cook. Like, just let him go for it, man. If he's heating up mac and cheese, he's heating up mac and cheese. Apparently, it works. And so just let my man do his thing. But thank you there, Daniel Perkins. Brian Dowdy, yes, you were asking about Palantir. You said, I need to know which direction to choose. Well, there you go. Well, actually, no, I guess, well, okay. I was obviously going to play it to the downside. So if you want to be directional, you got to play it to the upside. But we ended up settling on what is something that is at least remotely strategic, that has an ounce of strategy behind it, selling both sides, it's premium collection. So I wouldn't get crazy and start buying strangles. That doesn't make any sense. But if you were going to play it directionally, obviously you got to play it to the upside. So Weiss, Dr. Jim, what's the charm left in this market today? Yeah, I don't know, man. Charm is kind of it's a case-by-case thing, and it's an individual strike and stock type of thing. I mean, I've been saying since day one, if we want to differentiate the platform, you got to give me some second-level Greeks on the platform. Give me some charm, give me some vama, so I don't have to crank them out by hand. Like Dr. Data doesn't have to crank them out by hand. I mean, what do you think he's doing all day? He's cranking out these expected moves by hand. Right. And then he's putting them on the platform. Right. And so, we've got to get technology on our side here. Like, we've got to get to a spot where these things are just right there for us. Right. I mean, it's like we've got the final Jeopardy pen. The next step, logical next step, charm and Vama. Give me some charm. Give me some Vama. Give me some Vanna. Right. Give me a little Vanna on the platform. That'd be nice, man. It'd be super nice. And so, but I've been trying, man. I've been trying. I don't think we're going to get there. I believe the clock is going to run out. So Andrew Cortado is in the house, says the chat sound. What's going on there, Andrew? Sam L. Doc, the king of full ROM to failure, flawless technique. It's all about the bandana. Yes, it is. I have to wear the bandana now with the flow, with the lettuce. I mean, it gets all in my face, gets all in my eyes. And so we got to go with our junk bandanas. The barefoot stance, love training barefoot. Like watching Pumping Iron, the Doc Jim edition. Yeah, I appreciate you, man. And so, yes, you're obviously commenting on the videos that I will post on my Twitter feed, which is at JSchultzF3 if you want to see some very, very underwhelming training videos. But they're mine nonetheless. And so, yes, I've been trading barefoot now for, man, it's been a while. I guess it kind of happened when we moved here into Florida, just because I don't put shoes on. I mean, it's once or twice a year, and usually it's on accident. And so, but training barefoot, man, I love it. I love it, love it, love it. And the gym I train at, so I split up my time between my garage and the gym. It's about 5 or 6 minutes away, because he's got a lot of great equipment, and I only have a garage. I only have certain things I can't access, like pec decks and row machines and other things that I want to use. But it's an awesome gym. Like, he caters to hardcore bodybuilders and powerlifters and people that are super serious. And so I train barefoot, you train shirtless, like you can do whatever you want in there. Like, it's really, really awesome. And great group of guys and gals that train there. And it's really, really awesome. And so if you've never trained barefoot before, and you can, because of you train at home or your gym allows it or whatever, I would 100% do it, because it really is. Arnold's right, man. He used to say, I like to feel the floor. 100% right. 100% right. Like, it makes a huge, huge difference. And so let's see. Bert Earp's in the house. What's going on there, Bert? Appreciate you, my friend. Samuel, the underappreciated Doc Jam. Again, I don't know about that. I don't know about that at all. Like, Monday pre-workout for the brain. No jitters, just pure P&L swings for the P&L bro haters. Yeah, we got them today, though. I think they still got us, because the P&L Open is not looking great, but the P&L Day is looking pretty good. So Best Buy really came to play today, which is super, super nice. And so let's see. O'Brien says, I bought my Apple put back this morning when Apple went up before it went straight back down, tempting to get back in. Yeah, that seems reasonable from an Apple standpoint. I'm just hanging tight on mine, but you could zig and zag for sure. David Gallimore, Dr. Jim, last Friday I bought to cover 30 short SPX puts to lower buying power used. Now today, the same puts are marking at about half of what I paid. Whipsaw markets are not fun. No, they are not, my friend. They absolutely are not. And I know that this is your game. I know this is the game that you like to play. And I think, from what I can gather, based on your comments in the YouTube chat and even some emails we've exchanged, like, you know what you're signing up for. Like, you're clear of the concept. You know what you're doing. So that's the most important part, in my opinion. Days like Friday are really tricky, right? Especially when it's like a Friday, just because you got all the weekend risk that's baked in there, and nobody knows what's going to happen. And again, if you were on Twitter or X or online at all, like in the subreddits, again, circuit breakers galore today. Like, everybody was convinced, like, this is it. This is it. And here we are, man. NASDAQ 400 points higher. Like, here we are, cancel crash again for the 19th time in the last week. And so, the markets want to go higher. They want to go higher. Not necessarily to the tune of, NASDAQ up 400 points or whatever. But, the markets do want to move higher over time. But Friday can be really, really tricky for you, because I know that you're selling a lot of further deep out of the money puts. Sometimes a good number of them, to try to generate P&L. And that's going to be amazing when the market is either A, not moving, or B, just grinding higher. Or, of course, C, skyrocketing higher. Any of those scenarios is good for you. Even down a little bit is going to be okay for you, as you know quite well. It's going to be the down significantly days where you're going to have to make some difficult decisions. And it sounds like you had to kind of pull the ripcord on at least some of that buying power, on Friday. And that's essentially, if your buying power expands significantly and you find yourself, where you don't have any margin left and you kind of have to do something, you don't really have a choice, at that point. And of course, had you been able to hold on to them to today, you'd be in a great spot. But it's always obvious after the fact. Like, it's always, the rearview mirror is batting 1,000. Like, Roman Anthony's batting 800, the rearview mirror is batting 1,000. Like, that's basically, kind of the hierarchy. And so I'm sorry to hear that, David. But again, I think you've done quite well the last year or two, I think. Ash Finn's in the house. What's going on there, Ash Finn? I appreciate you, my friend. Andrew Cortado, what's up? Again, I think, or maybe for the first time, not sure. Daniel Rooney in the house. Dave Nico in the house. What's up? What's up? What's up? Rancher's in the house. Thank you again, Rancher, for posting about the Google spread. I think that's something that can help a lot of people. At least I hope. Emmett Morrison, what's going on there, Emmett Morrison? Greetings, Dr. Jim. Can you talk about setting up a poor man's covered call and what IV environment you would implement them? Yes, I can. So a poor man's covered call, I like to do them in low implied volatility environments. So this environment could be a candidate for a low implied volatility environment. You could actually make the case that it's actually a better high implied volatility environment strategy. And I would not necessarily put up a big fight against that. My counter to that, though, is when implied volatility is high, there's so many other things that we can do. Like there's so many other things that we can do, strangles, ratios, verticals, even iron condors, whatever, that's like, the poor man's covered call is kind of down on the list. Like the poor man's covered call is not really going to be something I'm going to turn to like right out of the gates when it comes to, volatility is high. I'm looking to do something, man, give me a poor man's covered call. Like that's not really going to be something that I personally am going to be looking to do, especially when volatility is low. It's like, man, a lot of those other strategies are kind of off the table. At least, in the way that you would normally do them, or at least in the volume that you would normally do them. The VIX is 14. We're not looking to sell a ton of strangles. The VIX is, 13 and a half. I'm not looking to sell a ton of puts, right? Because again, it's like if volatility spikes like it did on Friday, like kind of what happened to David Gallimore there, it's like, man, you're going to be in the lurch. Like it's going to be really, really tricky. So when volatility is low, that's when I tend to turn to strategies like, diagonal spreads, poor man's covered calls, at the money vertical spreads where you buy them, of course. That's kind of my go-to philosophy there. So let's go to like if I'll just go to like SPY, right? I mean, the IV rank is 17 now. So it's, I don't know what it was. Hang on, SPY.IVR. This is how you can kind of look at a chart of historical implied volatility rank. So yeah, so just on Friday, it was up to 27. But a few days before Friday, it was all the way down to, -6, which is pretty low, obviously. Now you've got it at 17. And so, I'm kind of thinking that this is a good candidate to talk through a poor man's covered call. So generally speaking, you're going to want to have at least 1 month, oftentimes multiple months between the option that you buy in the back month or one of the back months, and then the option that you sell that's usually in the front month. So right now, because August has 11 days to go, I'm not going to sell an option in August. My front month, so the long option, is going to be September with 46 days to go. So what I'll probably do is I'll probably buy November at 109 days to go, and then sell September with 46 days to go. Because what this is going to do is it's going to allow me at a minimum 2 opportunities to reduce my basis on the trade. The first opportunity comes right now where I sell September. The second opportunity comes when September expires and I have October. Now, you have a minimum of 2. You could potentially squeeze even more out of that with weekly options and being even more active and whatever. But just generally speaking, as kind of a base case, I am looking to give myself 2 opportunities at a minimum when it comes to a poor man's covered call or a poor man's covered put. Now, you could go even further out in time. Instead of buying November, you could buy December. You could buy January. That's going to cost you more. The buying power is going to be greater. And, it's going to, essentially the big gotchas there are buying power and overall debit on the trade. But if I go into November, so what option do you buy? Well, again, this is going to be, it's a bit of a judgment call, but usually you're between 80 delta and 90 delta. So actually, let me delete that. 80 delta. Yeah, here we go. So 80 delta and 90 delta. So my 80 delta is right here, the 560 strike. My 90 delta is way up here at the 495 strike. Now, the reason why you want to choose an 80 or 90 delta is because you want this to simulate long stock. Right? You want this to feel mostly like long stock. And remember, delta, one of the interpretations of delta, I should say, is as a share equivalent. It is going to give you the directional bias of the strategy. And so 80 delta is going to feel like 80% of what 100 shares would feel like. 90 delta is going to feel like 90% of what 100 shares would feel like, and so on and so forth. And so which do you choose, 80 or 90 delta? Well, as you can clearly see, there's a huge cost difference between the two. Of course, ceteris paribus, all other things being equal, we would all choose the 90 delta because we would want to have as close to 100 delta as we can, so we have what feels just like long stock. The problem is that's going to cost you another $6,000 in buying power. So instead of paying $8,000, you'd have to pay $14,000. And so you have to decide if the extra 10 deltas are worth it. For me, they're usually not. For me, I'm usually looking at 80 delta, maybe 85 delta on a poor man's covered call, but I certainly have seen it work between 80 and 90 delta. And so I would go in here and buy an 80 delta. That's a great question, Emmett, because we haven't talked about this in a while. It's definitely been a minute. So you can see the buying power is about $8,000, which again, that makes sense. I mean, it's $81 times 100. So it's going to be $8,100. Now I minimize November. You go into September with 46 days to go. And just generally speaking, right, I am going to be looking to sell around 20 to 40 delta. Right now, how do you decide which one to sell? It's very similar to a covered call in that regard. Like, how much upside in the stock/index do you want to leave for yourself? If you want to leave more upside because you think it's going to run, you like the macro landscape, you like the technical setup, whatever you're using, then sell a lower delta, sell 20, sell 25. If you want to lean more on extrinsic value and lean more on kind of, something that's less directional, then sell a 40 delta. I probably wouldn't necessarily sell like a 50 delta, just because that's going to trim your directional bias by a significant amount, even though the strikes are obviously very different because you have a back month and a front month. And so what I would probably do here, Emmett, is I would probably sell, right around the 30 delta is usually a good starting point. And so you can see that, it takes my overall buying power on the trade down by whatever I sold the 645 strike for. And now my profit potential is essentially, it's going to be, with a poor man's covered call, it's a little bit tricky to figure out the poor man. It's a diagonal spread at its core. It's a diagonal spread at its roots. And a diagonal spread, the maximum profit on a diagonal spread is the width of the spread less what you pay for it. So like in this case, you can see, the width of the spread is $85, right? 560 to 645. What I'm paying for the spread is $75. So is my maximum profit here $10? You could make that case, but because you have multiple opportunities to reduce basis here, I think the maximum profit is going to be greater than $10. And so when you bring in multiple expiration months like we've done here with a poor man's covered call, I don't think it's as simple and as seamless as it even is with a diagonal spread, where it's just kind of a front month, back month type of deal. And so this is how I would set up a poor man's covered call there. Hopefully that helps a little bit and gives you at least a couple of things to think about. And so great question though. Very, very good question. And so let's see. Man, I see Ash talking about Montel taking me back. Man, I appreciate you taking me back as well, my friend. 100%. Joe's in the house. What's going on there, Joe? iPod Touch back in the house. Says, Jimmy, August 7th. You wrote it down. I did. That's Thursday, right? Apparently that's the day when it's all going to crash, boom, bang. You are on record, my friend. You are 100% on record. And so, but man, I'm like done with the show now. That poor man's covered call question was so good. It was so good that I wanted to spend a few extra seconds on that guy. And so I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
What's going on, everybody? Markets are up big, and we're here to talk about it. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler, and it's Monday. And everybody's favorite guest, Josh Fabian, is in the house. Josh, what's happening?
I want to go back to the "we're back, we're bad, he's black, I'm mad." I liked that last. I liked that last week or whenever that was. 2 weeks ago.
Yeah, the old. It was two. It was what's the name of the movie? I'm blanking.
Lethal Weapon.
I wanted to say Major League, but no, Lethal Weapon 2.
Yeah, I like that. I think
I was watching that the other day. It was on TV.
Which one? Lethal Weapon 2?
Yeah, you know, Cougarans and all that.
That's a great movie.
Yeah,
it's a great movie.
Oh yeah.
Yeah, one of the few sequels that actually stood up to the original, in my opinion.
Yeah, it's true.
Yeah, it's good.
Yeah, he's he's not that old now, but I see a lot of stuff recently that shows like Danny Glover, and it shows a picture of him back then and said, "Remember, Danny Glover was 50 years old when he was getting too old for this shit."
Yeah,
we're 50. I mean, I'll be 50 next year. You're already 50. We don't look like Danny Glover did in that movie. Like,
I'm not 50.
People, I was actually watching some with my son, he's my oldest, and we were talking. I can't remember what it was, but the age come up, and the person at the time I said, "Dude."
50's different.
Yeah, people look different
I mean,
now than they did back
kidding aside, just think about it. Like people, like life expectancy, just the way we take care of ourselves. It's, I mean, like look at this. Look at this.
What am I looking at?
It's like, I mean, I look like I'm like 35. Don't just moving on.
Wait, before we move on to markets, I know you watched it. I just started watching. I'm assuming you've watched. I know you're a huge Billy Joel fan. I'm assuming you.
Yes, I watched it.
First of all, why are all the goddamn episodes like 3 hours long?
My son. So I'm watching it. My son's watching it with me, and I'm like, it's a series, and he's like. We're watching the first one. He's like, "How long is this? This is not a series. He's like, 2.5 hours. That's not an episode. That's a movie."
I am watching it like a series. I watched the first 30, 40 minutes.
It's great.
Pause. I watched another 30, 40. Pause. I'm only like an hour and a half, an hour and 20 minutes through the first episode.
It's great.
That shit's long, man.
So so true story. So I'm a big fan, and when I was, I think I was 16, saw him in a concert with somebody that I knew his main roadie. And so we sat front row at the concert. And so I'm sitting there on the edge, and there's a fence right next to me. And I'm sitting there and I'm just watching, I'm kind of just enjoying the concert. And I see somebody stand next to me out of the corner of my eye.
Christy Brinkley.
Yeah.
Oh, what?
Yeah.
Oh, really?
Yeah. And I see that and I do this. And it's like, and she goes, and like, I sat next to Christy Brinkley for the duration of the concert. And
pretty cool. Did you get her number?
Yeah. When I went, she's like, "Do you want my number?" Special boy.
You could have played that card. She
yeah.
You know what I'm saying?
Yeah. So I sat next to her for the concert, and it was pretty cool.
I mean, she looks like she's 35.
Yeah. Yeah. No, she's. I'm not saying anything. I'll get myself in trouble. You know?
I don't know about you, but I thought market was going to be down big today. Or at least down.
You know, when we opened up last night, I was like, I'm a little surprised, but then I started thinking, okay, to go down further, this is kind of what we need. You know, you need to open up higher, you sucker people in, turn around and sell off. Now, Friday, we all know that I like to scalp, and that my ideal trading period is about 15 minutes. Well, it's a bathroom trip. That's ideal, right?
Yeah. Your average holding period is like 15 minutes. Yes.
Yeah. So I got short Friday towards the end of the day, thinking this looks pretty ugly. I think it could be an ugly open. And so last night when we opened up a little bit, I'm like, oh, I think I'm in a good spot. Turns out I was not in a good spot at all. I violated my mechanics by holding over the weekend. I really didn't see this coming. I mean, I covered. I mean, I took the loss, but I don't know that I believe this. Just the volume is a little sus, as the kids would say. But outside of that, I mean, vols come in quite a bit.
I mean, do you sell it here?
No, I'm not. I haven't, and I won't.
Yeah, I don't think so neither.
But I'm not convinced. I'm also not buying it. Let's put it that way.
Yeah, no, I agree with that. We talked about and we looked at the idea of a zero DTE trade today. I know we were thinking about it, talking about it this morning.
Grumpy Mike looks like he's 135
on a good day. I did not. I know you did not, but you said you wish you did.
I wish I had done the SPX trade.
That's what I was talking about. Zero DT. You were talking about zero DT, right?
Oh, yeah. Because we were sitting at, well, where are we right now? We were at, I'll tell you exact. Let's see. This is going to make me mad. Yeah. We were at 63.20.
Mm-hmm.
And I said, maybe I should do the zero DT and make myself feel better. And they're like, nah, we were up 70 something at that point. And I'm like,
were you going to do 25 wide?
20.
Oh, 20 wide?
Yeah. I'm like, nah, we're up so much. Like, I don't like doing it on a day when we're up this much.
Mm-hmm.
And so I didn't.
Because there's a good chance it could move even more.
Yeah. Yeah. Well, my biggest concern was we were going to reverse and pull back. And then at around, I want to say noon, I looked at it again and it was trading like 10.50. I was like, maybe I do it now and break. You know, I've already broken all my rules with holding the short position over the weekend. And maybe I just break everything as long as
sounds like revenge trading.
Yeah, that's exactly what I thought. I'm like, yeah, do that, Josh. Just dig yourself a bigger hole.
Well, good job. You didn't do it.
I didn't do it. Yeah, and it probably would have come in really well.
Andrew Cortado. Jamal, do you consider yourself a bit of a contrarian?
In life?
It depends on the situation. At times, I saw somebody mention natural gas. This is a perfect contrarian trade. I'm not interested in it though. Like that, but that's definitely something, you know, I definitely consider myself a contrarian. I also saw somebody mention Reddit. Damn, look at this thing, man. I worked out at an earnings trade on here. That was nice. I should.
Oh my God.
Kept a couple of them on.
Oh my God.
Because where did it close on Friday?
Oh my God. I got out of this.
Closed at 188. I think I had I closed the 185 and the 190 calendars too early. I made money on it. It worked out fine. Usually that's the thing. If I do an earnings trade, I'm usually going to get out of it the next day, especially if I'm up money on it. It's just, you know, it's a one-day thing. It's not like I'm married to it, but
I owned stock at 40 and got out at 70.
Yeah, I remember you said that. That's, that's.
I'm such a loser.
Yeah.
Thanks.
Yeah. Somebody brought up in the chat. I didn't bring it up. Somebody brought them in the chat.
For telling me I'm a loser. Where's Fig?
The 220s. Somebody's trading these. 2,000 of those have traded.
Wow.
Yeah. 20 vol. Is it worth selling call spread in here? Probably not. That's probably not a good idea. In this damn name. That's probably not. 20. I just want like, I want to sell things with IVs in the 30 range. You know what I mean?
Yeah. You want the premium to be worth
Yeah. I just don't like, so I am a contrarian, right? But like at the same time, I don't feel the need to sell upside call spread in here just because it's gone up to big 2 days in a row.
You know what's interesting while you're on because when you said Reddit. I thought IPOs. FIG has options trading already.
Yeah, I just saw that today. Yeah, FIG has options trading.
Those markets aren't horrible for a first.
No, they're not. But again, what are you doing here? I mean, is it about to like go crazy again?
I was looking to see how far out of the money on the put side I could go. Not that far, as it turns out. Not far enough to make me comfortable.
What was the other IPO name we were looking at recently that had some crazy? I was trying to remember. On it.
Did it start with a C? Was it a?
I don't remember off the top of my head. But it was something that was was it
CoreWeave? Was it CoreWeave?
Was it CoreWeave or was it Circle? Can't remember.
It could have been Circle.
Because one of them was moving crazy in the beginning. I think it was Circle, right? Yeah, it was. Yeah. Circle was moving crazy in the beginning. So that's my whole thought, right? Like, is FIG gonna make that type of move? I got trades for that type of move. But
if you know in advance.
Yeah.
I got trades for that kind of move too.
Hey,
if you can tell me.
I got trades. You boys got trades now. But is it going to be worthwhile?
Yeah.
You know what I'm saying? Like, this is one of my favorites when I think a name is about to go moonshot, selling one to buy two.
Yeah.
But it can be expensive, and I don't know if I want to do it there. Palantir. We can talk about that one. That has earnings coming out. That's after the close tonight.
Yeah.
So I think we both started with the same thing. We did different kind of things, though. I did the 130-200 strangle.
In what month did you do it?
I did in September.
Yeah, okay.
26 days ago.
130-200, yeah.
38 IVR. I usually don't sell earnings, but this is a high-powered name. I also could see a scenario where this takes off, too. That's my biggest worry.
Yeah.
And so as a result, I decided to do a couple calendar calls, too. The 180, 185, 190. I always like doing a couple. That's how I'm playing it.
Yeah, I did.
Expected move here is what?
For this week? I think it's
$18 for the week.
Bucks. Yeah.
It's gotten a little vol pumped into it since we put it on this morning.
Yeah. I did September also. I did the 110, 210. I've been trading this like 2 or 3 times recently. I, like you, have the same concern on the upside. But, I gave myself a bit of breathing room. I don't necessarily consider it an earnings trade because I did it in September. So if I was doing it as an earnings trade, I would be doing, either this week or next week. But, the IVR is decent, and I closed a bunch of stuff last week. So I had some capital that needed to be put to use. So looking around is just, okay, this isn't a bad trade.
Yeah. I don't know that much about this FIG to make a trade. People are asking about it. I just...
I don't feel comfortable yet.
First of all, I don't really know the company. I don't really know what they do.
What do you do?
So I can't necessarily be bullish or bearish on the strategy, I guess. I don't care enough to learn either.
They make software that... for apps and websites, I believe. Tools to build apps and websites.
Really?
Yeah. Adobe was looking at buying them.
Gotta be some AI shit involved in it.
Probably.
No?
Probably. Adobe was looking at buying them, passing it up.
That's right. They were for $20 billion, and I think it's currently at $40 billion.
Oops.
So there's that.
There's an oops.
But they couldn't, were they not allowed to buy them? Is that what happened?
No, I don't remember, but.
I mean.
It's just, trading stuff like this, I get the desire to trade it. I totally get it, but.
Look at this implied vol.
Like, if I'm going to trade, this is the type of thing, like, if I was going to take a shot, I'm not selling premium in this.
No.
I'm like, no. I'd rather.
I mean, fortune favors the brave, though.
Yeah, well, yeah, but I'm gonna
because I'm with you. I would not sell vol in here.
It doesn't have any trading history whatsoever.
But when it doesn't have any trading history and the implieds are this high,
I don't have the kind of capital to mess around with something like that.
I'm not selling vol in here. I would not.
I mean, I can't take a chance of getting. It could wipe I messed around and something like that. It could wipe me out.
That's interesting.
What's that?
Earlier, I thought earlier in here it wasn't fully marginalized yet. Yeah. So maybe that's just for near term. I tried to sell downside. If you sell August put, it's to the letter, right? $7,000 or whatever. But if you try to sell because
the stock's marginable.
Hold on.
Stock's marginable.
Hold on. It's doing weird things, I think. because it's a new issue. Because literally, I was just trying to sell the 70 put in September, and it was showing me a buying power of $500. Now it's showing me, like if it were, like it's not margined. You know what I'm saying?
Oh,
Like,
yeah.
you know what I mean? Yeah, like basically
Fully cash secured?
Yeah, exactly. So it's fully cash secured.
I mean,
which makes sense. It's a new issue. I mean, that's,
I'd rather buy some stock if I was going to do something here and just, have a floor in mind that I'd get out at. Just if, I don't even want to
trade
trade
on this
it.
thing if it gets below like 50, 60 and people are like, oh my God, look at the stock is tanking now. Maybe I
guarantee you next Monday, we're going to be sitting here and this thing's going to be like 170.
I know.
And we're going to be like, why didn't we buy it?
That's what's going to happen. That's what's going to happen. I know. I'm telling you, that's why I'm like, if there was only one trade that I would do, I just don't know if this is the time yet. Like, is it going to drop another $30? Maybe I get interested. This is the trade I'd want to do. I'd sell the one and buy the two. But nah.
It's not how I take my shots.
And for those wondering why I would do it like that, because these calls are expensive, man.
Yeah.
So instead of just buying one, you sell at least one, buy two. It's a little, it's a little more expensive in a way than just buying the call. But at the same time, you're a little short, a little downside. Play for the upside shot. If it does take the moonshot, it works out nice. But I'm gonna wait.
It's just not.
I'm not selling no premium though. That's for sure.
If I want to take shots and gamble, so to speak, that's where the scalping comes in. Like that and get this type of stuff. It's like, nah, I'll do my Palantir 100-point wide strangle.
Yeah,
I know.
Andrew's asking what exactly trade you did. You can tell him.
Oh, the 110, 210 in September.
110, 210. Yeah, you went wider.
Yeah, I went 100 points wide. I think I collected $3. So I don't know.
By the way, I have a vested interest in this thing going to 200. Not in this position situation.
You shut your mouth.
In my long-term account, I do.
You shut your mouth when you talk to me.
I'm long a pound. I've actually rolled it up. I was long the 20 strike, and then I rolled it to the 60 strike maybe a month ago. And I think I just rolled it to the 100 strike last week.
Well, I hope it goes to 200 after I get out at $1.50. Okay.
Sure.
Yeah, it's it's one of those stocks that because of the IV, not the IVR, but because of the IV, you can collect a decent amount of cap. Yeah. You can collect a decent amount of capital on the trades, and then with the IVR being slightly, I wouldn't say it's ridiculously elevated, but it's up there right now.
No, for a company of its size, I mean, and this is where it's always interesting to do comparison things for those who are still trying to understand vol and how things work and all of that, right? Like, let's just take, for example, Palantir is a $378 billion company. Let's look here. Market cap. Yeah, it's down here, right? So if we sort by market cap on the S&P 500, NVIDIA, Microsoft, Apple, right? Let's look at so let's just look at September vol at the money. 160 for here it's like 60 vol, right? And this is $200 billion. I mean, that's kind of wild in a way. NVIDIA obviously is, what is it, trillion, whatever it is, 40 vol. How much? 4 trillion?
4 trillion.
4 trillion, that's right.
40
vol.
4 trillion. Yeah, whatever.
Yeah, whatever.
Trillion there, 4 trillion there.
There's a couple of trillion between friends.
Yeah.
Apple is like 29 to 20, let's call it 27 vol at the money in September. So that just tells you a lot, man. First of all, hold on, let me see. What's a really close comparison? Palantir, I said, is 300. Okay, there's one surrounding it are HD Johnson & Johnson, Procter & Gamble. I can promise you they don't even have vols above 30. I mean,
probably not.
Right. You know what I'm saying? Like, that's the comparisons. I mean, this is 25. Johnson & Johnson's in the teens. Always.
Oh, God. Johnson & Johnson. It's got to be. Yeah.
I mean, this one, too, is probably 20-something. So there you go. Just to show you, like, to your point, how this is an elevated vol for a name of its size and its market cap. That's why I think we feel comfortable selling these vol in September without it even actually being an earnings play. You know what I'm saying? Like, I like that.
Yeah.
AMD, somebody asked about that. Is that later in the week?
Yes. I think AMD is Tuesday or Wednesday.
Yeah. Yeah, I mean, I always make the determination on earnings. This could be one I trade, but I don't know. I do have a penchant for wanting to do calendar calls.
You did a good one on Apple last week.
I did not do one in I don't know what you're talking about. I haven't traded Apple in here in a while. There was no reason to. It was Reddit, okay? It was Reddit and First Solar. Those were the two that I did calendar calls in. It worked out really well. Talking about losing it. Do anything.
Did you notice that Tom was?
CL.
You see that Tom was wearing the same shirt today that he wore last night?
Did he? Really? You're hopped up on dew or something. I don't know.
Yeah, I'm drinking.
This is 32 IVR. Oh, I didn't realize that oil got back up here. You know what? This is one where maybe it's worth trading.
I just sold an NVIDIA 150 put, in case you're wondering.
Did you?
Yeah.
How'd that
I don't know why, but when you were looking at that list and I saw NVIDIA, I'm like, I don't have an NVIDIA position. And the IVR is not particularly good, but I want to do it.
Decided to do it anyway.
I did.
You know what?
With the stock up 540. So that just goes to show you that I don't really care what the stock has done on the day. There are a lot of people on the network that will not do something like that. If the stock's up, they won't sell a put. I am not one of those people. I just don't care that much. I mean, if it was up like $30, I probably wouldn't do it, but I needed to put some money to work.
59.57. I think.
What are you looking at? Oil?
I'm looking at oil. I'm looking at the brackets in which I want to sell an iron condor.
I hate oil at this level. Oh, you're gonna do neutral?
Neutral. Yeah, I'm not buying. I don't think. I haven't traded directionally in here in a minute. I mean, I tried to short it. What did I try to do? I don't even remember. I tried to go directional somewhere around that big move and didn't work out for me. But this has been the trade, I think, for the most part in oil. Yeah, maybe I'll put this on.
I bet you've traded oil and bonds neutral all year. I bet you've done really well.
Yes, I think that's accurate, right? And you just had to live through the wild moves that happened once or twice.
Yeah,
but yeah, it's been the trade for sure. It's been the trade. Who lost audio? You guys hear us? Anybody hear us? We're good, right? Just making sure. They said something about losing audio on the chat.
Oh, now he hears us.
Cool.
They hear us.
Cool. I mean, look, this could potentially be a quiet week, or it could be a week where we get another big down day. I don't really know.
Yeah.
I still think it makes sense to have capital ready because this has been a wild market. It's been proven so. Oh, I didn't talk about my trades. I think I talked about it a little bit last week, but I'll mention it again. I was basically staying out of the moves on Friday. And then finally I was like, well, let me just look around for names that are down on the year, down a decent amount, and that maybe could bounce back if we eventually start to move up again. And they were big. I want them to be big names. So UPS is, for example, UPS stock is getting.
Oh, UPS got crushed.
Yeah. And so I decided to do some zebras in names like that. UPS was one of them. I did them in October because I want to give it time because clearly these things are down and they're down for good reasons probably. And it might take some time for them to bounce back. So that was one of them. Fiserv is another.
Yeah, I mean, these are, you say good reason. I mean, UPS.
Hamster's going. There we go.
UPS because of tariffs, and Pfizer, same thing. They're both like news-related events that are driving them lower. Yeah, I think they're good plays.
Pfizer Forum. Isn't that where Milwaukee Bucks play?
Yeah.
So is this going to be in trouble if Giannis leaves or something like that? Am I going to be in trouble with Pfizer?
Yeah, I'm sure they'll shut the place down.
It's like companies like that with like names like that. Do you know, what do they do?
Pfizer?
Yeah, Pfizer.
Fiserv?
Yeah.
Aren't they finance? Aren't they finance?
Pfizer is the drug company.
Yeah, that's what I thought you said initially. Aren't they a finance company?
I have no idea.
I don't know.
I used to care about stuff.
They make
like
a stadium where the Bucks play. That's what I know about them. I have no idea.
Fiserv is another one I did. I did Robinhood. I forgot. I used to say I usually say
what?
Those we don't speak of. But
the hymns?
No.
Hood?
Yeah.
Oh no, sorry. Somebody in chat said hymns.
Oh, what about?
I'm long hymns. Weight loss loss medication.
Okay.
It works. Look at this. Look at svelte.
Okay. 30. It is another one. This actually was not in the same strategy, obviously, as the others.
Yeah.
I just stock has just been on the move.
Yeah.
So that's been one. I think you ever have
global fintech, Fiserv, global
you ever
fintech.
have that where you get like a strategy in your head and you see a bunch of names that fit it?
Yes.
You just want to do like a whole bunch of them?
Curve fitting.
Yeah, I try to like...
Curve fitting is what that is.
I did it in a few, and there was plenty of more I could have done it, but I was like, let me stop for now. And I just made the list, and I was like, okay, if we keep going down, then I'll add more.
Yeah.
I've gotten better with that. I used to just...
Yeah, that's curve fit. That's like cup and handle patterns.
Yeah.
I can find them everywhere.
Yeah, I can find them everywhere. It works for all of them. It works for all of them. And that's what I'm sitting on for now, man. I was actually, I don't want to say hoping, but I was planning on the market being down.
Yeah.
So I could have gotten the SPYs and the Qs and the IWMs, get some short put spreads in those, and didn't happen.
I'm with you. I think we have, there's a lot that's going on, even though the calendar, the economic calendar is kind of light this week.
It's very light.
You do have Thursday, there's a tariff deadline again, and I've lost track of what it's for, but I just know that there is another deadline on Thursday. So you could have the potential for a binary event on that front. You have a lot of earnings, and even though they're not, Amazon and, those names, like you could have a name that all of a sudden spooks the market based on something that they say. So I was expecting the market to be down and that I would be able to do something, but that's not to say it can't happen this week. And we're at the 1 year anniversary of that yen unwind from last year. Nobody saw that coming. So even though there's nothing on, you're looking at it going, it could be a really quiet week. Well, all of a sudden there could be like a repeat of something like last year, and you find yourself busy.
Yeah, I mean, totally could. And it's really, I think, like you said, it could end up being, the catalyst could be whatever the tariff goalpost is now. It could be earnings, but I don't know. We'll see. I mean, maybe we get an idea tonight from Palantir.
It could be this is the first weekend of preseason football.
Yeah, we're getting there.
Yeah, it's first weekend.
Yeah. Almost there, man. It's going to be fun. I can't wait for it. The year's going to start soon.
So psyched.
Drafting is coming up soon. I got to talk about drafts.
Yep.
That time of year, folks.
Bears are going to pick up Micah Parsons.
Real quick, what? Can you look at UNH? This is a danger show, right? You're damn right. And
yeah, we're all about the danger.
Guess what? I got a zebra in here. So that's the trade. That's what I'm doing.
I don't have a position in UNH.
It's not particularly a vol play, but I'm playing it for a bounce. I mean, this thing is taking a heck of a haircut. If it goes lower, well, that's fine. But
I refuse to trade insurance companies.
This right here is exactly the kind of chart we saw with Tesla.
Mm-hmm.
Year and change up. Remember
you
that?
see the deal they gave Elon today?
No. Oh yeah, something. Yeah, in stock.
Yeah. Because he's hurting for cash.
Rich kid richer. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Good afternoon, everybody. Tim Knight here, and it is the Revenge of the Bulls today. We had a nice drop on Thursday and Friday. I think I was pretty clear that the expectation was that we would bounce because we hit some really important support levels on the NQ, on the ES, and on the RTY. The NQ and the ES hit the same levels they were at late last year when they were at lifetime highs. So for some funny reason, what used to be the lifetime high is now acting as support. And the RTY also did that, except for a different reason. It hit its Fibonacci because it wasn't at lifetime highs late last year, nowhere even close. But it had its own line, and they all just about to the penny hit that line, went kapoing. So had lightened up some on Friday. Still not super aggressive right now, but definitely in position, about 100% committed. That is to say, using all the cash, no margin at this point, and giving back part of what dropped in my lap on Friday. That's okay. These are meant to be longer term positions. And even in the midst of all this green, there's some red sprinkled here and there just to keep it interesting. Earnings season's gonna be winding down, but there's still some cool stuff coming. Let's jump in and look at the charts together. I've got them all loaded up for you. We begin with a spider. And I talked a lot about gaps last week, and that is exactly what's cooking. The ideal for any bears out there at this point would be for these gaps to be respected and to fall away from them. These gaps were established between Thursday and Friday. That is to say, Thursday's low and Friday's, well, basically it's Thursday's low. That's the anchor point. So this was Thursday. It was a down day in general. Gapped down hard, hung out here. And then today, we've completely wiped out all of Friday's damage, and we're in the vicinity of where we were at the lows on Thursday. But the gap, be it an individual equity or an ETF, what have you, those gaps are the key at this point. And if we just go blasting right by the gaps, then the gaps don't mean anything anymore. At the moment, they do mean something, and that's our point of resistance. Here's the diamond. Now, in this case, the gap has been sealed. And so that's less clean from a technical standpoint. The only thing in the way of the bulls right now is whatever overhead supply exists, which is not nothing. Basically, all these weeks of trading were at levels above where we're at right now. So that's the one barrier to prices easily slipping higher. The cubes, NASDAQ 100, zooming in here, gap is still intact. So we've got the spider gap is fine, the cube gap is fine, diamond, not so fine. It's already sealed, and here's the gap like so. So as you can see, today's high very close to Thursday's low. So that's what I keep yammering on about. And then IWM, in this instance, the gap's been sealed by a little. The gap itself is down here, so we've got a little bit above that. But as with the diamond, the barrier is whatever overhead supply, whatever purchases have taken place in the several weeks prior. Because the narrative right now is pretty easy to grasp. And it's sort of a contradictory narrative. Part of it is, well, these numbers coming out of the BLS are just fiction. They're made up for political purposes. There are these evil people there, and I fired them. I'm going to bring in good, honest people who give good, honest numbers. Yeah, right. And therefore, you'll see how the economy is really growing. So that's part of the narrative. Interestingly enough, the other part of the narrative is interest rates should be and will be a lot lower. You can't have them both. Let's just say that they start making up really good numbers for jobs. We added 1 million this month. We added 1.5 million this month. And now 2 million this month. Everybody's working. This is terrific. So they just make up numbers that look really, really good and are meant to be politically popular. Two things will happen. One, fewer and fewer people will believe the numbers, and they will basically rely on private data services because the government is just junk. It's just in the fiction section of the public library, so why bother? So they'll become meaningless. You know, it's like Soviet Union numbers, like, okay, whatever, you know, it just doesn't mean anything. But what also happened is that if the government's supposed to use these as the basis for interest rates, it's like, well, the economy's doing great, jobs are adding by the millions. We should increase rates, actually. You can't have it both ways. You cannot make up fake booming job market and simultaneously have interest rates plunging, unless you decide, inflation, who cares? 10% inflation, 20% inflation, go get them, because fill in the blank. So interesting times we live in, but that is a big part of what's driving the rally today. It's like, this whole bit from last week's going to blow over. Don't you worry, little head, about it. So it does make sense for getting this bounce, because that was a very sudden and very government data driven sell-off. Overseas, I'm still short the FXI, that is China. China was pretty hot coming into the day. FXI has settled down to some degree. The FXI is up 1.75%. We still have, in my estimation, a failed bullish breakout here. So as we look at the FXI specifically, its own gap, which matter a lot less, because as I've mentioned before, things like FXI are going to have gaps almost every single day, just because they're trading in a different part of the world and a very different, is kind of out of phase. But for what it's worth, my stop on that is 37.75, which is just about that gap right there. I used the term robust last week to describe semiconductors, and that they are. I didn't hang on. I got out of my SMH short early on Friday, and good, because not only was its breakdown very, very brief and didn't even close below this line, it's zipping higher today. So all Friday's damage is done, and we're pushing into Thursday's activity, up about 2% on the SMH. However, my one big champ today is a semiconductor stock. God bless it. We've talked about it before. On semiconductor, ON. I don't track earnings that closely except for the monsters. So it didn't even occur to me that they were reporting this morning, but they did, and to good effect. You and I have talked about this chart a lot, this topping pattern, and we are down on this around 14%. So it's a nice tumble, and huzzah. Some welcome good news on a very green day like this. So on semiconductor, big winner there. Some of the bigger stuff in NASDAQ land, it's not all green. Amazon has continued to sink after its big hit down on Friday. Jeff Bezos, of course, famously sold hundreds of millions of dollars, billions, I think, actually, of stock before all this hit. But yeah, down we go on that. Adobe also down about $10 almost. This is a nice one. I kind of wish I had stuck with it. It just keeps kind of burning up. Adobe's fallen quite a lot. The lifetime high was back 4 years ago, long time ago. And then this most recent inverted, just this rounded top here, we've been breaking down away from that. And we still have, I think, easily a trek down to that major supporting trend line. Meta, however, doing great. It had a sensational Wednesday, of course, after their report. Gave back some of it. So let's get this straight. Wednesday evening, they reported. Thursday, they exploded higher. Friday, they gave back some of the gain. Today, nope, pushing right back higher. So we are a very good day for Meta, and a lifetime high close coming from Meta. Another smaller but very hot stock now, Joby Aviation, GOBY, up about 20%. Lifetime high on that one. I think that's I just call it the fly. It's like a drone, but you can sit in it. It's like a flying car company. Very cool stuff. Microsoft, a little similar to Meta. Explosive move on Wednesday. Gave it up, then gave it up more on Friday. So big push higher on Thursday. Friday slipped. Today undoing Friday's damage, and we're hanging out in Thursday's bar. But Meta is much stronger than Microsoft now. It's just a tremendous. While we're talking Mag 7, I'll just say on the Tesla, the old fibs still have their sway on this tremendous amount of magnetism. There's the Fibonacci pair there, and you can see, the price action is getting tighter and tighter and tighter and tighter. It's just gripping those prices. So it's kind of getting some very dull activity here compared to this mayhem before. Over in precious metal sand, gold having a terrific day. Front month, so about $32 higher. Pretty close to lifetime highs on gold. And in turn, the miners are having a good day. And they are looking like a lifetime high close coming up on GDX, and maybe even pushing past this multi-month resistance that's been in place. And a couple of the individual miners we've talked about here positively include DRD, which is up 7.5% today, and Skino at SKE, which is up, though not as much, about 3 2/3%. A couple of just short charts for you. Short charts, ELF Beauty, ELF up a little bit today, but I do like the shape of the breakdown here on ELF Beauty. And then Fluor, this was the big winner last week on Friday, and I'm pleased to see that we're continuing to sink away from that. So this chasm right here, nobody seems to want to venture into that canyon. So still holding that short right there. The VIX is kind of reflecting nicely what's been going on between Friday and today. So the VIX have been grinding around as recently as Thursday in the 14 zone. So went from 14 to the 20s, almost got to 22. And then today, all gone. Basically just wiped, sort of like firing the BLS person. We've deleted Friday from history. It's not real anymore. So VIX down to the cheap zone. Some earnings are coming out, even though we're past the big ones. Axon, I believe, is reporting this afternoon. This is the taser/body cam outfit, AXON. Of more note is Palantir, PLTR, which is currently trading at lifetime highs. Very richly valued company. PE in the 600s. I actually came into the day short this, and you know what? I just got a funny feeling. I mean, I got out. I feel like I'm playing with fire, so I don't want to stick around. Just watch, it'll fall $100. But yeah, no position in this anymore. Just be a little more serious here. There's no pattern here. I mean, it just goes up and up and up. There's no real reason I should be short this, so I'm not. Yes, it's very expensive from a fundamental standpoint, but I'm more of a shapes and patterns person, not a fundamental guy. So, but there'll be the hot one this afternoon. And in the morning, Caterpillar, a little bit of an older company, but like Palantir, right near lifetime highs. And I am short this one. I don't feel quite as at risk. Last tidbit, the NQ, NASDAQ long-term continuous contract here. As before, we've broken this ascending price channel, and we've been bonking our head against the outside of that, and we took a nice tumble on Thursday and Friday, and now all we're doing is pushing back up toward that line. So if you're a bear, what you want to see is us to re-weaken again tomorrow away from that line. That's the line in the sand that must be watched. Okay, good. I will see you tomorrow. Thanks for joining me. Bye-bye.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
from the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
What did you get up to last night?
I had a rough night. I was doing webinars till 7 o'clock.
Oh no.
Yeah.
It's hard being a cam girl.
It is.
You had breakfast for dinner?
Breakfast for lunch, breakfast for dinner.
Oh no.
Yeah.
Was it even good cereal?
No.
Well, yeah, I was like, what kind of cereal do you eat?
I had some.
You're like a Mueslix guy.
I like Raisin Bran,
Okay.
Special K, and granola.
Just not
I like oatmeal too.
Okay, congratulations.
We weren't talking to you.
I like
He was
cream of
talking
wheat.
to me.
I like cream of wheat.
I was literally and he's just like, I like oatmeal. It's like, okay.
I'm gonna tell you right now,
Here
St. Bart's.
Yeah, here we go. See, I knew I'd get Tom going. I have
I've
to
only
talk
been
about
there.
St. Bart's.
I've been there a couple times. I love St. Bart's.
Couple of times?
Couple times.
Are you sure it's not going to get you in trouble? Would you like me to get that cut out, or would you like to keep that in there?
Keep that in there.
Okay.
What's the
You
other?
tough
What's
guy.
the other?
Wait till I tell about St. Bart's a couple of times. Wait, I could be wrong, but wait, I have it here on film.
Wait a minute. Hold on. I've only been there once. What do you mean?
I already texted how many times you've been to St. Bart once. I go, ooh, do I have news for you?
I'm getting tickets. You're coming with.
I'm not.
Yeah, you will. I'm buying good seats, and you're
I'm
gonna
not
come
sitting through it.
You're gonna tell me Elton John's no good?
Radio was
one of the worst concerts I've ever seen in my life.
In the day, you're gonna tell me Elton John's no.
In the day, what? I didn't see him 40 years ago. I'd rather see Lady Gaga.
So
Oh, you're a freaking poser.
So then I said, hey,
What? Give me one name of one Lady Gaga song.
I don't know the names. I just like before we get all excited here and start, and start using those little what do you call those things that you blow out on New Year's Eve?
My what do you mean? What?
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With the closing bell, Sadnoff, and what a difference a day makes. It's the opposite day, Sadnoff. Even the S&Ps are up 81 now.
It is the opposite day. The question is tomorrow going to be the... Remember the last time we had 3 or 4 consecutive days where they were like up 60, down 60, up 60, down 60? Now we're down 110, up 80. I mean, what are they going to do tomorrow?
Only the shadow knows. Nasdaq up 370. That's one of the leaders in the clubhouse, but the Russell's really the strongest of the group, up 44, and the Dow up 553. Volatility in by $1.55. Sosnoff most of the day, and I mean by most of the day, I mean from the time we got off the show until now, even the S&Ps have been in a very tight range. I mean, you've got over 1 million even the S&Ps have traded, but really the bulk of them from 10 o'clock in the morning on have been trading right here within 5 handles of where we are right now. Bonds are up 5 ticks to 115.28, continuing a rally they started yesterday. Bitcoin up 1,700 and change. It's about $1,000 off of its highs made earlier today. Oil down $1.20 off of its lows by about 60-ish cents or so. Gold up $31, trading about $8 off its highs, but a good strong day in gold. And a couple of movers today, Sadnoff. I'll go to the upside first if I could. Meta, you talked a little bit about it this morning, up $25. MSTR up $20. These are big moves after yesterday's big sell-off moves. AppLovin up 15. Reddit never goes down. It's up almost 13. Microsoft up 10. Netflix up 9. Palantir, which has earnings today, has been up around $6 all day. It continues to be up $6. And just a few buckers, Sadnoff. Biggest one is Carvana CVNA down around $5.60, and Amazon down about $3. Obviously, all volatility products are down. You got paid on your premium today, Sadnoff.
You got paid for sure. Well, I thought the weird thing today too was that I figured after Friday, Apple would rally today because it was up on the earnings and then it was down after, but it's down like 50 cents. It was up a couple of bucks this morning. It's down. And the other stock that surprised me that opened up pretty good this morning, like $3 or $4, but it's down now, is Amazon.
And if anybody cares, Costco's doing the same thing too.
Yeah. Yeah.
Not as widely held, not as popular.
No, not as popular.
Oh, it's up now, $2.70. It was down most of the morning.
Oh, okay. Well, Amazon and Apple are down. Those are two stocks that are, a little bit weird, but some of the other stocks, Reddit continued to move. I was not getting, after Reddit opened on Friday, I was not getting in front of that train. That's for sure. And what else today?
Reddit was a bucker on Friday, you mean?
Yeah, there were some stocks. Reddit was the total bucker on Friday. It's weird. 2 things to mention here. First thing is on Friday, I know you weren't watching the whole day, but Friday, the S&Ps, they had one crappy little rally in the course of the day. They went from like down 100 to down 88. And the rest of the day, they stayed literally in a $10 range like today, between down 100 and down 110.
That's exactly when I landed. That's exactly when I looked. And I said, I texted my son, Nick. I asked him what the low was. He said it was something like 24 or something like that. There were maybe like 20, 25 handles off of their lows. And I said, you know what? Are they going to go down triple digits again today? I don't think so. I put on a little bit of long delta there, and I had egg on my face for the rest of my trip.
Yeah, they never bounced on Friday at all. Then they closed like today. They just stayed on their butts all day and closed there. Today, exact opposite. They opened up higher, and after the opening last night, they just went higher. And when they opened this today, they were up maybe 45 or 50. Then they're up 60. Then they're up 70. Then they're up 80. We sat here all freaking day, and they've never had even a 10 handle downtick.
No, and they're five handles off of their highs or so. So
yeah. Yep. So the question becomes, do we have 50, 60 points of down tomorrow? Because that's the way these trends have been going, or not? Who knows? I don't know.
One day expected move. What do you think it is? 1 day expected move. That's tomorrow, the 5th. What do you think it is? From now till tomorrow, the 5th.
34.
30. Pretty good. Pretty good. I mean,
I didn't think it would be much more than that. But today was just the complete opposite. And after they're down 100 and something, we finally had a kind of vol expansion. I thought for sure at some point today, I even said this last night. I said, I think they're going to have a really hard rally on Monday or Tuesday, but they're going to be a lot lower. They're going to be lower before that. They're going to rally from, lower prices. Mm-hmm. And they definitely did not. They didn't have a freaking downtick all day today. Now,
actually on Sunday, I think they opened down around 8 or 10 points. That was about it.
Yeah, last night they actually opened up and then they went a little bit. They opened a little bit higher, a couple bucks, and then they opened about $6 higher, and then they immediately went down 10. And then they hovered around unchanged. When we got off air, they were exactly unchanged, and then they just went up from there. And the crazy thing was, like, I sold some futures last night, and I sold some futures this morning, and then I don't ever cover futures early because they didn't have a turnaround. I covered those futures at 10:30 this morning, and I was like, you know what? These things aren't turning around. I just took my loss. I was like, you know what? I'm not gonna stay in for the ride. If they turn around, great. If not, I'm just gonna take my loss. And I never do that. They just didn't look like they wanted to. Looked like no sellers today. There was no buyers on Friday. There was no sellers today.
Yeah, it definitely was the
opposite. That's a scary market. That's all I'm going to tell you. That's a scary market. When there's one day there's no buyers, the next day there's no sellers. That's a very one-directional, one-dimensional market. Makes me a little nervous. The bonds, on the other hand, crazy strong on Friday. They were weak last night. They were down almost to 115. And then after they rallied this morning, they stayed up here. They had a little sell-off, maybe 5-7 point ticks, and then they're back up near their highs. I think at 116, I don't like them from the long side anymore. I wouldn't get short them, but I don't like them from the long side.
116 is only 4 or 5 ticks away.
Yeah, exactly.
Right
Exactly. Yeah, I don't care about them here from the long side, but I'm definitely not getting short yet.
Volume today is a little bit more typical than it was yesterday, which was a lot heavier volume day.
Oh yeah.
Many sources are telling me.
We've been very quiet today. Today's a very normal day. And tonight there's a couple of earnings plays. I can't even remember. We did them on the opening. I think Palantir was one. Hims was
Palantir is probably the biggest one. Hims is another one. Caterpillar, Pfizer. I mean, I don't think you care about Yum. Lemonade, you have a position in?
No, we're out.
Oh, okay, an ADM.
Yeah, we're out of Lemonade. We're out of Caterpillar. We have a position on in Hims. I'll go to that one first.
HIMS.
Yeah, so Hims is a 51 IV rank, and it used to be pretty illiquid, but I got to give them credit. Who's ever making markets in there, they have stepped up their game. This morning we sold a strangle for $1.22. It's currently trading at 93 cents. What did we sell? We sold the 45.82. It's weird.
45. Yeah, I told you were a lot closer on the put side than you were on the call side.
Well, they killed it.
Well, that's good because you sold it already.
Yeah. 45.82. Where's the stock? 63. With a couple of days to go here. I don't know. I don't like the downside in here. I don't know.
What do you mean by you don't like the downside?
I don't like this. I don't like the downside risk. I don't know. For some reason.
So you're afraid of the velocity to the downside. Is that
no?
correct?
I'm afraid of the velocity to the downside. Exactly.
Okay.
I don't know what to trade in here. I think you got to go. I've had a lot more success.
The call ratio spread would be your play to take advantage of the call upside skew.
Well, I've had a lot more success with the weekly options in the earnings plays than I have with the monthlies. I find the monthlies have been more challenging. The weeklies have been a lot easier to trade.
Well, you got a $10 expected move, right?
Yeah, and you can go $20. You can go $20 away You can go $20 away on both sides if you want to get just a crappy premium. And then the other one is Palantir.
PLTR. How's the IV ranking there?
Well, it's
49.
Yeah, 39. Pretty decent. We sold a strangle this morning. We sold an August strangle this morning for, let's just see.
How do you feel about Palantir's downside? Because it hasn't had an uptick since inception.
You mean a downtick?
I'm sorry, a downtick, yes.
Yeah, Palantir has not had a downtick. And the day it opened, it opened at a little over $10 and it went down to 9.5. Since then, it basically hasn't had a downtick except for April.
Yeah.
Where it crashed for a little bit and then they just exploded it. So in Palantir,
expected move is about $17 on this $160 stock. You can see that on the parentheses on the right-hand side here over the next 14 days. Oh, sorry, next 4 days.
I mean, Palantir to me is one of the great meme stocks of this year, except it's not a meme stock. I just like to say it.
Definitely call skew also.
Oh my God, yeah. Crazy kind of call skew. I don't know. I mean, are you doing anything in there?
You know what? Markets are good enough too. I mean, they're 10 cents wide, and everything seems to be trading at mid price. I didn't do anything in there myself. I'm not the earnings trader that you've become.
That I was born to be. Well, they're playing a little harder to get right now on the close. I have a set position on that's really wide and really small, and I don't love it.
You just closed an iron condor, I think, didn't you?
No. I just
just widened your strikes.
Yeah, I'm just trying to figure out how I want to play this. Like, in the back of my head, I'm thinking, okay, today was the up day, tomorrow's the down day. So I'm trying to figure out how I want to play this. And I'm trying to figure out what I'm worried about.
Palantir's traded twice as many options today as it has yesterday, almost twice its volume.
Oh, doesn't surprise me at all. I mean, Palantir, how much?
I mean, a guy like you should be staring at these 200 calls with 4 days to go going, man, oh man, oh man, who is going to pay 50 cents for this, or the 90s at 118? Who's going to pay? I mean, it's 2 times the expected move with 4 days to go. Where's the risk?
Where is the risk?
Where is the risk?
All right, where's the risk?
You did the 127 200.
Yeah, where's the risk? You just said, where's the risk? That's 51 cent.
127, obviously.
51 cent calls. I don't know, just a cheap shot.
There you go.
Yeah, I'll do that. I'll do that some more.
That's my Sazi.
Let's put some. Well, somebody's buying them.
I'm buying them a penny better too.
I know. They got to buy junk. They're like, can somebody please sell some junk? All right, I'll sell you a little junk. I'm hoping they just need it for protection. All right, I'm done, Palantir. The other stuff, I'm not trading Lemonade and I'm not trading Caterpillar. The markets were horrible this morning. I don't know what they are. Let's see.
They're the same. ADM and VRTX, if you're interested in any of them.
Caterpillar. Yeah, you don't want to trade that. Earnings. I mean, it trades a little bit, but you don't want to trade that.
You have to have a directional bias, I would think. That it makes sense to enough.
Yeah. Looking at the rest of the market today, I mean, this was just a premium crush day. This was, if you look at your positions today, and I got a lot of stuff on all over the place, so I'm definitely very aware of what's happening today. Yeah. I mean, everything worked. Didn't matter what you had on. I mean, what didn't work was the deltas. I have short deltas. Right. Short deltas didn't work. The only stock where short premium that I lost money on was Reddit.
And you didn't get any type of volatility contraction on Friday, so you're getting a little bit more today because of the weekend coming out too.
Yeah, they owed you a little bit.
Mm-hmm. For sure.
They owed you a little bit. I got a position. Yeah. Ooh, that's not a good one. RBLX. Oof. Yeah. I mean, there's a couple of nasty kids, that decided to buck. That didn't want to help out the good kids today, but mostly it was just pure deltas. SPY, S&Ps, Qs. That's where I got killed today. Other than that, it was nothing. Everything else came in premium wise. That's the only good thing about being short into an up move. Being long into a down move, you lose both ways. Being short into an up move, you only lose on delta. Yeah.
Still not happy though.
No, I'm not happy.
Okay.
Natural gas broke the 3 level today. I don't know if you're trading it at all.
No, I don't trade it because it's too big of a product. I think it's really a horrible product for retail investors. But for pool owners today, it's a big day, Sadnov.
Yeah, good luck. Good luck. You call People's Gas and tell them, hey, I'm a Batista. I want lower.
All the neighbors came out today, started banging pots and pans who own pools like it was New Year's Eve, Sosnoff.
Yeah, well, you tell those neighbors that the reality of that is that
Incur locked you in at 425 back in March.
They what?
They locked you in at 425 in March.
Did you really do that?
No. No.
Because I think that they do offer that kind of stuff.
They do offer that kind of thing. Nah, I float to the rate, whatever it is. You know me, I'm a risk taker.
Oh, yeah. You're on the ledge. Intel, huge move today, up 12 cents. I just want to put that on. I want to mention that.
Oh, please. I can't stand that you even talk about Intel. I'm not even going to put it up on the screen.
I'm not. Please don't. Yeah, we're not having a good run in Intel. That's a stock I thought wasn't going to get back under. Somebody told me Lucid had earnings today or tomorrow. Does it? Let me see.
I saw it also, but I did not see it for today. I'm looking right now. August 5th after the close. So tomorrow after the close.
Would you buy Lucid here?
Again,
240.
But wasn't it right around here before it made that little bit of a rally or something? Yeah.
I'm buying some stock at 240 and 241.
Yeah, you don't want it to get away from you. I mean, this is a humdinger of a mover right here. Yeah, you don't want this $2.40 stock get away from you. Might not be here tomorrow. No, might be.
Just in case it's not there tomorrow.
All right, it might be 202.
It probably will be. I should have looked to see what the options are trading for. Yeah, why should I buy stock here? I should just sell the 2.5 puts in August with 4 days to go.
Yeah. Or you can just buy same crap. Yeah. Mm-hmm.
Why wouldn't you? It's just so much easier. Buy the stock at 225, 224, 226. Sorry, can't add.
226.
That's where you buy the stock from.
Yeah, because that's your cost basis. You mean?
Yeah, 226.
Mm-hmm.
Yeah, that looks good to me. Or
sure. Give up the $3. Give up the $3 upside move for 26 cents. Genius. Absolutely genius. Right there, ladies and gentlemen. You don't get that anyplace. You only get that here.
Well, you only get that when you know the stock's not going higher.
No. You know, some people might say, "Oh, you know what? Throw caution to the wind here and pay an extra 4 cents, maybe 3 cents for the 2 calls and have all the upsides you can get, but you pay an extra 3 cents because you don't want the stock for whatever reason." Yeah, okay, I can see that. But selling those puts for 26 cents, you the man, Sadnov. You the man. Raise the roof.
Right. Spoo's up 90 is not what I had on my bingo card today. Just want to throw that out for the record. Haven't sold.
Thinking properly. I get it.
Haven't sold any NASDAQ futures yet today, but I've been leaning.
Haven't hurt yourself that way yet?
Have not hurt myself yet. Yes, yeah. I mean, with NASDAQ futures up 410, I don't think there's any risk of waiting till tomorrow.
Missing them? Yeah, you probably.
Yeah. I don't think you're going to miss anything here. So I think I'm going to wait.
I wonder how many people watched yesterday's action and said, man, if I would have just got out the day before, with a whole little bit of long delta. I wonder what those people are thinking today. Like if they held, I wonder what they're thinking. Do you think they get out?
Sometimes, I've told you this before, sometimes I like when I'm not allowed to sell anything. As a trader, I hate it. But sometimes as an investor, I'm like, oh, thank God my stock's locked up.
Because you'd hurt yourself.
Oh, you would definitely hurt yourself.
All right.
Yeah, that's why you shouldn't own certain instruments of war, instruments that can harm people. Not only may your spouse use it against you, but you also may use it against yourself and not realize it.
My Taiwanese sources, come on, Sad. No, Seller Strangle and Pfizer. It hasn't moved in 20 years.
Pfizer, if you could make, here's what I'll bet you. Here's what I'll bet your Taiwanese sources. I'll bet anybody, any amount of money, you can't make 20 cents in Pfizer.
Okay. I think my Taiwanese source is going to take that bet.
Okay, well, you're
on for $1.
You have to prove it to me. You got to prove it to me right now that you can make 20 cents in Pfizer. What's the symbol? PFE, right?
Yes, sir.
I haven't traded it in so long. I don't think you can make 20 cents in there.
IB rank at 22 is relatively low also.
Hey, how are you going to make 20? What's the stock doing? Stock is at 23. How are you going to make 20 cents? Just tell me and I'll do it. Should I sell the at the money straddle?
Sell the 23, 24 and a half.
I'll do whatever you want me to do.
No, it's horrible. You can't.
I'll do whatever you want me to do to make 20 cents.
No, you can't do that.
Okay. What do you want me to do? Quick, you're gonna run out of time. What do you want to do?
I
to
don't
make 20
sell
cents?
the 23 puts. I don't even think you can do that.
You can't make 20 cents. They're 32 cents. How are you gonna make 20 cents? I want to know what your freaking Taiwanese source is saying. Okay, I'll sell for you. Okay, I'll sell the 23 and a half straddle. Well, that's the only way you can do it, right?
It's trading at $1.07. Yes, mid price.
Oh, I did the wrong one.
You did the 11-day one. Why would you do the 11-day one for like a nickel more, Sadov? That's so stupid.
Oh crap!
Sorry, I didn't mean to say stupid. That's not an intelligent thing to do, Sadov.
No, because I switched my screen. All right, hold on.
7 days more of risk for.
All right. Here,
5 cents.
There you go.
Oh, you sold it at 108. You waited out. You're good.
I waited him out. Okay, I don't think I could make 20 cents on it. You're betting me. You're paying me $20.
What? Wait, well, let me see. What's the? Let's see. What's the theta decay on there?
I don't care. I don't think you can make 20 cents. That's what I'm going with. I'm rolling with that. You can't make 20 cents.
All right, you're gonna make 30 cents on this, and you're gonna owe me 30.
I don't think so. I think it's almost a guaranteed loser. But we'll see. I did it small. I don't care. Just to prove to you and who is it?
My Taiwanese sources. My Taiwanese sources by way of Canada, named Peter.
Your Taiwanese sources is out to lunch on this one. Peter, I don't think you can make. Oh, we forgot about the overtime boys.
This is your call to make, not mine.
Oh, sorry. Bring them in, Paul.
Bring them in.
Oh, shoot. So sorry.
Gentlemen.
Hello, guys. I'm so sorry. I forgot about you guys, Ilya, because Tony was making me a bet that he says he could make 20 cents in Pfizer on earnings. I don't think it's possible.
My Taiwanese sources said they could do it.
Dylan was texting us on the side. He's like, guys, we're getting paid either way. Who cares if they bring us on? It's like, Dylan, relax, guy.
Dylan's right. I saw your little rant today, Dylan.
I have an issue on behalf of the people of Taiwan.
Go ahead. What's your issue?
I think it's obvious. I think their name is being used in you're invoking the name of the Taiwanese, and they've got nothing to do with any of this. They didn't do.
I can't find them. So how could I abuse them?
You like my little street rant there?
I did. I saw it on Twitter. I loved it. Very, very good.
I didn't see the street rant. What street rant?
It's a Beth was like, you need to just start doing it. She said, just start saying things.
Dylan's doing the John Nigerian walks around before the market opens.
So he's doing a street rant. He's a new fashion model. He's a sneaker model. He's a bathing suit model. He's a spokesperson.
I'm a tasty trader.
He's a
only here
trader.
on overtime, folks.
He's a host. I mean, how do you do it?
And I might add, I'm the owner of reservations.com.
I read that. I don't know what it is, but I read it.
Just so you know, if you need a reservation, I'm your guy.
What kind of reservation can I get?
Anything you want, baby. For you, anything. I'll make anything.
Is there? Hold on. Now I got to go. Is there a website?
Of course, there's a website.
Okay.
You think he just named the company reservations.com?
Yes, I do.
You don't know
the website's reservations.com.
404 not found.
Yeah.
Hold on, I gotta see this.
It's called reservations.com.com. Chris is exactly correct.
There you go. You are amazing.
You want to make a reservation? You can just text me. I'll take care of you. I'll give you VIP. For some people, I just take text messages.
Oh,
I would take Tony, but now because I'm so offended by the whole invocation of the Taiwanese, I'm gonna have to decline.
I'll make it up to you. I'll get a reservation.
Okay. Listen, that street rant was a big hit on Twitter. I mean, that was
very big. I liked it. I liked it a lot.
Hit.
Very good.
Big hit.
Very good.
I decided only after I go to the gym. I have to do it walking home from the gym. It's an incentive to work out, because if I don't go to the gym, my head is not clear. I don't have any thoughts.
See, that's not enough. We got to get you to the gym because you obviously don't have any clear thoughts. We're going to take a quick 90-second break. Come back. We got more Tasty Live with the Overtime crew next. A peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you missed the live show, here's our cherry on top yearly recap.
Breaking news on Instagram. The first segment of your line dancing has been posted. Left together, switch, turn. Right together, twirl, turn. Hip, hip, hip.
Right together, spin, clap. Left together, spin, clap. Hitch, 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 turn, shuffle, rock, shuffle, rock, shimmies. Shimmy.
I took 5 lessons for Casey's wedding, and all I knew how to do was
right together, spin it around. Yup. And you want to clap. And then like strut down, right together, spin. Left together, spin. Hitch, 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 cross, turn, shuffle, lead, shuffle, rock, shimmy, lasso.
This is not good.
Hey!
That is not even close.
God, bitch stole my. Oh, it's flawless.
Look, it's beautiful.
Flawless.
No.
You're walking way too fast.
And go stick your finger in all of our lunches.
Now complain about something.
Oh, God. You watched the debate. You knew who won, and you just didn't want to admit it.
I was in New York. I was flying home that night, and I'm so sorry that I didn't go back and tape the vice presidential debate.
First of all, I think it's hilarious that you run a technology company and you still think you think you had to tape it in order to watch it. You think you have to tape it?
He didn't have a
in order to
blank
see it later?
VHS tape to spare for the debate. Stas, what comes up next?
The opening bell. Don't look so surprised. Sadov has been this way since 1980 when you first started trading. Wait a minute. Was it always 8:30? Yes. The opening always was the same. The closing has changed.
What has
Wasn't
changed?
it?
I don't think so. Nothing's changed. The only thing they did, I think, was add the 15 minutes.
Excuse me? To now, 2024, we didn't always open at 8:30.
I gave him 1980, but I technically didn't start probably till 81. But go ahead. What is it?
September 1985 is when it switched to 9:30 a.m. Eastern.
Thank you very much. Thank you very, very much.
Not 1980. Not 1980.
I remember. I was on the floor. I was working because I would have to get up earlier in the morning.
In 1980, the New York Stock Exchange opened up at 10 a.m. Eastern. It closed at 3:30 p.m. Eastern Time. The schedule was in place until September 1985, when the opening time was changed to 9:30 a.m. Eastern.
Pay me,
Get the full scoop by checking out the archives at tastylive.com.
Cancel the recession. It's Monday, August 4th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, here to take you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade, on the website, tastylive.com, welcome. Join us in the chat on YouTube. Tell us what you're trading, what you think of this market. We do have a fast and furious rebound here for stocks, which, after closing much weaker on Friday, did not see any overnight selling pressure in the European or Asian hours. U.S. traders were happy to pick up the baton and run this thing back up to basically where we were prior to the jobs report Friday morning. Your Russell is the leader, Mr. Radigan, up by 2.22%, followed closely by the NASDAQ up 1.95%, S&P up paltry, 1.58% itself. It's one of the better rallies that we've seen since late June. Dylan, I want to start with you at least here as we turn our attention to the stock market, because I did see a little bit of a walk and talk that you had today. Great video that you published to Twitter. Your optimism unbridled seems vindicated on this rebound Monday. Why is the market back up after such a horrific end to last week?
Overwhelming force of the glory of modern technology. It shall not be denied. It shall not be diverted. It may be occasionally delayed as a result of, valuation or some economic rationality, but that'll only be brief and short-lived. I just think that this is a tidal wave, a tsunami, if you will. An overwhelming force of optimism in technology that if there ever was a buy the dip scenario, I don't know about, again, the indexes, whatever, but for sure the NASDAQ, for sure Meta, for sure NVIDIA, for sure Google, for sure Tesla. Don't let me look at this. Don't try. What do you think? You're smarter than the, you're not, okay? Just stop it and just let it ride. You'll be fine. And so I think that, you get, that's what I said, this is one of those things where thinking hurts or hurts you. And so I don't advise it.
Oh yeah, to his point, Microsoft, new all-time close, Meta, new all-time close.
Sure. No, I don't think you can in any way dismiss how forceful this rebound was. I just think you also have to acknowledge that this forceful rebound has only erased about 50% of last week's sell-off. So the force of the way down merits a strong rebound. There's nothing particularly surprising there. We've been talking for a few days about how last week the sell-off landed us on basically the important range bottom for pretty much every major index, where we might look and see, okay, if you cross this Rubicon, now you have a top. And now the bias is overwhelmingly turned. Let's see. I mean, in my mind, we have not overturned last week's sell-off. We've seen a correction to retest whether the sell-off has wherewithal to continue. Let's see.
Dylan, Friday's market was punctuated by a really deeply negative flavors of highs jobs report. A jobs report, when we take a look at the numbers, typically doesn't see that scope and scale of revisions outside of times of what, Ilya? Deep recession? We shared the graphic earlier on overtime today, but I suppose it's worth bringing up again here right now, so I'll do that. Dylan, did anything stand out to you about Friday's jobs report? We've had maybe the U.S. economy is resilient and humming along, and there's no reason to get too worked up. I can't help but notice that the 2-month revision that we just saw is the kind that you see during COVID, during the global financial crisis. There's a lot to discuss about Friday's jobs report, Dylan, but let's just start with the actual numbers itself and not the narrative elsewhere. Why does this not worry you if this is a data point that appears in
if you're looking for things to worry about, I would say that the list is as long as ever. You know, whether it's on the job, I think there's inflation concerns. I think there's job data concerns. I think China's more powerful than we give them credit for. I think that if the European Union was a federal state instead of a consortium, their leverage would be more than the United States, which is its own thing. You know, I mean, there's a million issues, but I just think that at this particular moment, when it comes to the financial markets, that the pure force of artificial intelligence as an investment hypothesis and as an economic phenomenon, that it's sort of like, you know, the Buffett saying, when the tide goes out, you see who's not wearing shorts. Well, when the tide comes in, all the problems are hidden. And I just feel like that this is sort of a rushing tide of optimism and a rushing tide of technology that's coming in, which is not to say that I'm not concerned about the jobs number or not concerned about inflation, or I mean, I can be concerned about all of these things. And if I had Ilya's patience to sort of take these micro shorts, and then sort of just get ding, 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 and then when it goes my way, lean into it, which I have great respect for Ilya's ability to do that as a mental temperament. And I think that probably makes a tremendous amount of sense, but I don't have the temperament for it. And so if I'm going to do anything, it's long the Mag 7, it's long AI, and it's buy the dip. Not because I think the jobs number is not alarming, or that the decision to abandon the concept of data is not an issue. But simply that I believe that the force of artificial intelligence is that big that at least for the short and intermediate term, it becomes an overwhelming wave. So it's not that I discount the other issues. It's just that I believe the force of the AI thing is that big.
Well, you mentioned AI. We have Palantir earnings that have just come out here, and the market's taking them in stride. Sales up $1 billion versus an estimated $939 million, the first time that they've cleared $1 billion in sales ever. EPS 0.16, 16 cents versus 13 cents estimated. Their sales outlook, $936 million versus $899 million. They're looking for operating profit of $495 million versus an estimated $417 million. About 40% of the business is related to government contracts and AI, Dylan. So shares here up after hours from 160.66 close to now 167 and change, as it were. Dylan, I do need to pick your brain, though, because Ilya and I were on Friday, so we had a chance to talk about non-farm payrolls. But the firing of the BLS commissioner is eyebrow-raising for a number of reasons.
No kidding.
that's not to say that there are not legitimate complaints about how the data collection has deteriorated in recent years. In fact, in recent weeks here on the show, we've shared charts of how the response rates to various official government surveys have dwindled, particularly in the post-COVID era. Now, that's not the full story, because by the time you get through the final revision of jobs reports, you have 90+% respondents. But the initial responses, they've fallen. And so it's led to some concern about how actionable or viable the data even are. This doesn't seem like that, though, Dylan. It doesn't seem like there's a problem with the methodology here. I know that we like to rag on the plus or minus error term for the jobs report being 100,000, but the way that they measure the jobs report is they tally up all the jobs in the country. So when the difference is something between like 156,400,000 jobs and 156,200,000 jobs, that's an error term of like 0.16%. Like it's not that big in the grand scheme of things. So what does this tell you about the state of the US economy right now if we're firing statisticians for bringing bad numbers to the president of the United States?
I mean, first of all, I would say that the jobs number, for as long as I've been around it, which is probably 30 years now, God help me, has always been a squirrely number. Difficult to forecast. It is the very reason I believe you once upon a time texted me the words ape shit. Was that in the context of such a number? So I would say that the jobs number is obviously one of the most important, if not the most important number outside of maybe CPI, PPI, depending on what sort of is going on. And it's also one of the most revised. It's always been heavily revised. And it's always been, vulnerable to meaningful divergence from expectations. So I am not that alarmed by the presidential firing of a statistician on the jobs number, because I think the jobs number is always going to be the jobs number. I think that the presidential firing of the statistician is less of a reflection or honestly a concern for the jobs number, and more just an indication to the temperament of the president. It's like the president fires the chef because he doesn't like the food. Well, there's still a kitchen, and they're still going to make food in the kitchen, and it's going to be a different chef. Like, I don't think that one statistician, even if one very important statistician, firing that person ultimately is going to have a material impact on the degree to which we have a reasonable amount of insight on the jobs market via the jobs number. Because I believe the jobs number is assembled through so many disparate atomized parts and is so, as I mentioned, heavily revised as it is, that the president firing the guy is I think it's dumb, but I think it's more of a reflection of the judgment of the president than it is a point of concern in my point of view. Maybe I'm naive, but I'm not worried about the quality of the jobs number. I'm worried about the quality of the president.
Could I opine perhaps on that whole, how the data are accumulated? Please. I think it's interesting for people to know that the BLS commissioner actually is not part of the process for tabulating the non-farm payrolls data. All the data, as Dylan just said, are atomized, and they're basically aggregated micro up. When the BLS commissioner herself or himself gets their hands on the report, all the data has already been entered into the official computers and has been transmitted out into the world, so it can be embargoed for various reporting agencies and news bureaus. And so when the BLS commissioner receives a copy of the jobs report that will ultimately be released on the Friday, she has a final number that she's going then to deliver to the President's Council of Advisors. She's just a messenger. She's not producing the report at all. But Dylan, I think you also raise a point there, and perhaps maybe this is the market rebound today. She's definitely not going to be firing Powell, because if he's going to be firing the head statistician at the BLS, if he really thought he had the power to fire Powell, Powell would be long gone by now. Maybe that's what we're also reassured about today. Is that not a proper view to think about what just occurred here? Maybe that we don't need to worry about Powell's departure whatsoever.
Maybe, I mean, maybe, but I just think ultimately the markets, I'm a broken record right now. I think the market's behavior is propelled by the overwhelming force of the AI hurricane. And I think it blasts through all these things. I think, sure, not firing if you're looking for confirmation that the president, it's impossible for the president to fire Powell. This could be that, but Powell's done it in 7.5 months anyway. Like, it doesn't really matter. Like, the Powell's going to be done quickly, and you're going to get, a CNBC host as your Fed chief come 2026, probably Joe Kernan.
Oh, say, are you going to throw your hat into the ring?
I don't think I'm qualified. I think I ask too many questions. I think you need somebody more obedient.
Ilya, I would love to see a Dylan Ratigan run Fed.
Oh, that would be tremendous.
What's that?
Yeah, I'd love to see you run a Fed press conference.
Me, I would like to see Maria Bartiromo run a Fed press conference.
Oh, okay. Fellow Italian American. I guess that's good.
Yeah.
Right. Okay. Response
if I
rates.
ran a Fed press conference, I'd be like, let's be very clear. Nobody knows. I don't know. No one in the boardroom knows. All the data are bad. The GDP number measures all of the wrong things.
Sir, ES minus 300 on your comments.
Never mind. Everything is fine. Everything is fine. Carry on.
Just kidding. Ilya, jump in here. There are obviously concerns about the BL, and I don't know if people are going to trust the future NFP numbers. Again, this is kind of like when I hear concerned about like state elections and whatnot from political people. It's like, that's not how elections are run. I know, I've partaken in the system. I've helped with the recounts. Like, it's an atomized system for a reason. A lot of decentralization means limited points of absolute failure. So what does this mean to you? Like, should we, as people have messaged me, I've been tagged in tweets, emails, like, should we trust data from the US government from now on? Or is this another tempest in a teapot?
There are two different perspectives here. There is the perspective from sort of generally the chilling effect that this produces, in the sense that, if you bring the monarch bad news, beware, your head may be rolling, and that doesn't necessarily compel then the monarch to act. It creates a sort of incentive, and then you start to wonder if in fact the data is getting massaged. And there's a gazillion things you can say about that. Obviously, examples of Turkey come to mind, etc. But I think the most important example from a trading perspective is the example of China, where the massaging of economic data is so open, so readily discussed, so easily telegraphed by officials, that you can actually get an example of what that looks like in practice, and the markets take those data at face value. Why do they do that? Because they need a jump-off point, they need a reference point, and very simply put, either the data is real and that's a policy signal, or the data is cooked and that's a policy signal. From a trading perspective, what you need is the policy signal, so that you can understand how then assets may respond. So from a trading perspective, this doesn't change anything for me. Nor do I think is it going to change anything for anyone, because what they need is a baseline, not the absolute academic accuracy. They need a yardstick against which to trade.
It's kind of like the Nielsen survey data for watching televisions, Dylan. It may not be the most complete set of data, but because there is a set of data that has been built up, a process that's been upheld, there's been buy-in, and a lot of people use it as a reference point.
Mm-hmm.
Like, that's what really this all underpins, is that all of us are looking at the same information and it's all publicly available. So,
and at least it can be directionally, even if the levels are all wrong, at least we know that it's sort of all consistently wrong the same way, such that the direction is valuable.
Well, and everybody is looking at the same wrong number or right number or whatever number, and then benchmarking their actions against the same thing. As long as the game is in reference to one variable and everybody has said this is the variable, now let's go value assets, that's what matters.
I mean, I think that's ultimately what we as traders need to be concerned about within the story at the moment, right? Maybe the underlying data, we're going to question it, some will, to a higher degree. Perhaps that leads to more volatility, but we're all going to be looking at the same number. We were all looking at the same number in July. We're looking at the same number on Friday morning. If the next number comes out and it says plus 200 with the revisions of plus 200, we're all going to have to make the judgment around whether or not that's a number to trade around or not, just like we did every other number.
We just learned this about CPI. The Wall Street Journal just had their big article about CPI and how the share of imputed data points in CPI, that is those things where they didn't exactly observe those data points, but they imputed them, jumped to 30%. And that's higher than COVID, even when everything was absolutely shuttered. Why? Staff cuts.
Well, yeah,
they're
staff
just not
cuts.
collecting the data. And
well,
so
that's Doge for you.
So you can talk endlessly about the strangeness of saying let's fire the head of the BLS when the data is volatile, when it's the staff cuts I've mandated that make that data volatile like it hasn't been before. But from a trading perspective, does that matter?
No.
Not really.
No, and that's really what I wanted to get to here, because it's a lot of narrative and noise, and there may be some other implications for it. But from our perspective, the data is the data, right? We're all going to be looking at it.
Yeah.
Dylan, I saw this Reuters article last week. Do you notice when it's dated? July 25th, 2025. That's before Trump fired the BLS commissioner. So this has been something that people have been talking about. If you were to scroll through the article, which I'm not paying for Reuters here on this login, you know what? You would see that people have been saying, yeah, there's been this trend post-COVID where response rates have fallen across the board for the initial data. By the time you get to the final revisions, most of the surveys are in there, but how come people aren't responding in a timely enough fashion? What can we do to get a better system? And so Trump doing this right now, yeah, it's ugly, particularly after a bad jobs report. He was cheering on this woman 2 months ago. Last year, in terms of revisions, there are 12 revisions. 6 were up, 6 were down. Like washes away.
This is like the most revised. This number's been getting revised for decades.
Because the first iteration of the report, we only have somewhere between like 65 and 80% at the high end of people responding to the survey. And by the time you get to like month 3, one of these small businesses that doesn't have an HR department, but like it's the owner following up on things, like that's when they get their payroll information in. Now, are there better ways to do it? I'm sure. We probably should be looking, how can we do weekly jobless claims, right? Like, aren't those payroll figures? There may be other ways to collect the data that we need to make these informed decisions, because at the end of the day, that's what this is all about. We only care about the non-farm payrolls number because it helps us understand the state of the economy. It feeds into our understanding of where policy will be. If we're growing, we're shrinking, should we be adding more in stocks or bonds? But otherwise, it's just a number, right? As traders, we don't really care about it. It helps us with our asset allocation preferences and maybe nothing else. So Ilya, I'm not of the place, and Dylan, I suppose with you, after giving this a few days to settle in, we're all going to be seeing the same numbers, real or fake. Doesn't matter how you feel about them. We're all going to be trading around the same number, no matter what. So as a trader, I don't know if this story matters much at all.
I don't think it does. I mean, especially for that. I mean, I think I said more than enough about it. What the question that comes up for me, just to go back a touch, even going back to when I was at CNBC, for sure, when I was at MSNBC, all of the data is lousy. All of it. It's relevant and valuable for the reason that you articulated, which is at least it's a shared, common, lousy data set that is indicative of directions, expansion, contraction, rising, falling, whatever. But I do wonder, Ilya, in the scope of sort of generally lousy data, either measuring the wrong things, like if a hurricane destroys a city, that's GDP positive because there's going to be so much money spent on construction. So that's good GDP, but why is that good for a society? Or if a mad lunatic runs around New York breaking everybody's arm, that's good for GDP because it creates an increase in medical spending. But is it good to have somebody running around New York breaking people's arms? And so there's sort of there's the phenomenon of measuring the wrong things and saying, well, it's valuable to have lots of broken arms and lots of destroyed cities, which I think we could argue maybe it's not. And then there's sort of bad measurement, right? Like they don't even know, right? Like it's just it's some technique from 1923, something like this. In the scope of sort of good and bad data, and for me, the jobs number, the reason I actually like the jobs number is because it does get revised. At least the jobs number, they're like, this is what we think. But honestly, give us a month because we're going to have to sit with this thing and we'll let you know. And that's why like this month's revisions of last month are frequently more interesting than whatever the headline is.
That's right.
Month. How does the CPI and PPI shake out in the scope of lousy data? Is it among the better or the worse indicators, in your opinion, relatively to your experience, all the data that exists?
I mean, I think.
Are we getting a good reading on inflation? I guess is what I'm getting at.
I mean, I think what a lot of people always quibble about with the CPI and PPI data is what's in the basket. Because really, inflation can only be sort of discerned, or at least we've decided that the way that we're going to discern inflation statistically is come up with a basket of stuff and track the cost of the basket over time, and then get a sense of what inflation is that way. And periodically we tinker with the basket because, of course, that makes sense. The sort of range of things people consume, that's going to change when people get in cars or a cell phone is invented, etc. So you constantly have quibbling with what's in the basket. But I think from a trading perspective, again, the most important thing is to have a jump off point. We can absolutely have an academic conversation about whether it is, let's say, as you were saying, a good thing that after destroying a city, well, first GDP would crash, and then it would violently rebound as that city is rebuilt. Is that a good thing? Whether it is or not is a point of policy. For traders, what matters is that there is a number against which they can say, well, if this were this to be a real number, assets would be this. And then there's another group that says, well, no, because this number is going to go there, so the assets should be that. As long as both sides of the market are jumping off from the same number, its academic quality is not relevant very much. At least that's what we've learned about China, where the numbers are very suspect a lot of the time. But the market just says, well, but I just need a yardstick. And if we're all using the same one, we can value assets to the best of what any one of us ostensibly could know.
And even the worst numbers, to Chris's point about the Nielsen ratings, can be directionally accurate.
Yes.
The audience is getting bigger, the audience is getting smaller. The prices are getting higher, the prices are getting lower.
Yes.
There are more people that don't have a job, there are less people that don't have a job. Like absolutely. Just that one statement has tremendous value.
And things are going faster, things are going slower.
Exactly.
Things are accelerating, they're decelerating.
Exactly.
In a good direction, in a bad direction. All of these types of dynamics are really what markets are after. And so whether the number is what it is to the exact decimal point or even to a significant degree, from the market's perspective, that's not what's important. It's, are we all valuing the same thing? is the bogey the same for all of us?
You know, you talk about data reliability in China. I recall reading a story last year, and I was reminded of it on Bloomberg Radio today. There was a researcher at the University of Wisconsin who had come out and said that China's population was being overstated by probably 100 million people, maybe a little bit more. And maybe it was Morgan Stanley then produced a follow-up to this. Like, what would the implications of that be? And they basically pointed like, hey, you know, if that's actually true, that would explain why their economy is not growing as fast as we think it should be, given what we understand to be their official population data. Right. Because if it's like, oh, if there's 100 million fewer people, oh, okay, that explains why aggregate demand is so much lower. It's not just they're doing a bunch of policies that don't work. They're not actually pumping as much money into the system on a per capita basis as they said. Maybe they're doing it at per capita of 5,000 yuan per person, but there's that many fewer people than we anticipated. So there's not as much money going throughout the economy. So data reliability is a problem. You could talk to anyone in Europe. Eurostat and the European statistics agencies don't hold a candle to anything that we do here. But as traders, we're all chasing the same object. It's different for CPI because CPI is more of like a measurement where they go into establishments. And I think the basket point, Ilya, is well taken. We should be quibbling over what's in the basket.
And boy, do people. I mean, the whole concept of the trueflation measure that comes up every now and again. I mean, what is that? People go, well, inflation isn't really this, it's that. What is that statement embody? It's quibbling over the basket.
Right. And trueflation is measuring millions of data points across the country in real time, so they say. CPI is very similar. They go to retail outlets. They basically 55-60% of the survey is done by actual, canvassers going into stores and collecting information on prices. And you understand why there's not a revision then, because after I've seen the price of something like today, this is $3.99. I don't need to call back the store and be like, hey, can you confirm that this was $3.99 on August 4th? Like that price didn't change intraday on August 4th for the cup of coffee. So the price point is the price point at that moment in time. In any event, it's only about 80,000 prices in the top 75 urban areas in the country, which 75 urban areas in America, what kind of small cities are we getting into? Like the Yonkers, New Yorks of the world, Dylan. Small places. So it's not just the New York Cities, the Miamis, and the San Franciscos that garner all the attention. Either way, though, I think we've talked about this enough. We can move on to a different topic at this point in time.
Am I going to make one comment on this? Although I hopefully
sure. No, go for it. I think this is interesting.
I do wonder. So let's say you have one number that's a lousy number.
Well, Dylan, hold on a second. Can I say why this is important? We're all left-leaning people. Our audience, we know that there's a lot of people who are like us, but more market-minded than your average, Democrat bear. And I try to be apolitical as much as possible. We want to analyze things through a policy lens, but I've just seen the information that's being fed to, like on CNN about this. And it seems to me that from a trader's perspective, you could really get lost in the sauce, conflating actionable information and things that would force you to change your trading mechanics. And I don't think this rises to the threshold of that. I think it's our job to provide that clarity for people.
Yeah, no, I mean, I think it's easy to be like, oh my goodness, now the data, now we don't have data anymore. It's ridiculous, honestly. But what I was reflecting on and listening to this discussion was the sort of the mutual decision to agree to use the wrong number makes the wrong number right.
Yes.
And so let's say you have this New Year trueflation number that is a better measure of inflation. If in some sort of academic audit of sort of the components and the way it's measured and whatever. But are you going to trade based on the delta or the spread between the trueflation number and the CPI? Because my bet is that the CPI number you'll get run over every time. Like that if you think you're going to outsmart the bond market using a more sophisticated inflation number, then using CPI, I think you're barking up the wrong tree.
Well, and moreover, if you're looking at a number that's maybe more right, if whatever that means, but if the central bank is going to move on what the official number is, what does it matter that you're right about inflation? From a trading perspective, you're not trying to be right about inflation. You're trying to be right about what asset prices are going to do.
Yeah.
Right.
What does it matter?
Unless if the market doesn't believe the data, it's not going to be a scenario where it's like, oh, inflation came in right at 2% on the nose, and the market freaks out and goes, oh no, it's really XYZ, and then everything sells off. It might be a situation where everyone just goes, we'll wait for ADP.
Yeah.
We'll wait for the ADP report.
Hold on.
We'll wait for the jobless claims because those are aggregated from the state level up. And, the 4-week average of jobless claims and that rate of change has been a pretty good predictor for recession. So who cares? If the economy isn't growing and companies are losing jobs, we'll just see it in those states' claims data. So we can't rebuild them perfectly, but we could do it in aggregate. And again, I don't know what this does to move the needle for us as traders. It's an interesting story. It's been dominating the financial news wires. I felt prudent for us to address here today. There's a different story addressing things that are important in terms of locking people up. I don't know how I transitioned with that. Elon Musk is staying on with Tesla.
Well done.
For the next few years. Tesla's share prices were up 2.19% today, Mr. Radigan. We see that the board has approved a $30 billion stock award to Musk as long as he focuses on the company. Is this the most important corporate news of the rest of the 2020s, that visionary Elon Musk is now going to be focused on electric vehicles and AI?
For sure not. I mean, first of all, just because he's committed to do something today doesn't mean he'll do it. I mean, this is not someone who is beholden to contracts or money. So just because he made the deal today doesn't mean, that the deal's going to be good in a year or two. Although I think it's the right deal for Tesla. But I think the question is less Musk, not Musk. The question is, what is the best way to be invested in artificial intelligence? And is that Tesla, or is that Meta, or is that Microsoft, or is that Google? And it might be Tesla. It might be Tesla, because at Tesla, you get a sort of 2-for-1 special of both artificial intelligence and transportation technology. Not bad. Musk, I feel like, has almost moved into a character who obviously has great value and all the obvious things. But I think the greatest value at this point is that I think Musk is going to become less damaging. It becomes more of a do no harm thing. Like, the more Elon Musk is not a central figure in American or global politics, the better off Tesla shareholders are. And so I think that's actually the most valuable aspect of all of this. But I mean, I guess the question I would assert to both of you,
inverse key man risk.
Yeah, do less, bro.
Okay.
Why don't you just calm down? Just calm down. Everything will be just fine. But my question for the two of you is, if you have to rank the AI names for the most desirable to least, between Tesla, Microsoft, Google, Meta, and NVIDIA, so those 5, let's say, how do you stack them with your grandma's money?
What's the time frame? I think is the most important question to answer there, because
let's say over the now, let's say 12, not a trading time frame. Let's say it's like a 12 to 24 months.
Tier 1, Microsoft, Google, Tesla.
What was number 1?
Microsoft, Google, Tesla. I think it's so. I don't think Musk is
More
going to
than
keep
Meta
XAI.
NVIDIA.
NVIDIA would be tier 2 because I think that the applications are going to. That's going to spread, but NVIDIA is going to stay near the top because inference is what drives the demand for the GPUs. So this is a snowball. The more people use it, the more inference. The more inference, the more viable it becomes because the greater the use cases become.
Why Microsoft instead of Meta for number one?
Microsoft has done a very good job, I think better than Meta has at managing its risk in the space and not overbuilding. I also have seen some comments made and have verified myself. Meta has done some interesting classification on their income statement in terms of how they're depreciating their GPUs. That's to say that the GPUs typically have a depreciable lifespan of about 2 to 3 years for actual use, and they're marking them off as 10-year depreciation on their income statement. So it seems just like there's a little bit of, I'm not accusing anyone of any wrongdoing here, but it seems like they're trying to tell the best story possible, right? And they're telling the best story possible that they could be telling right now with the numbers that they have. So in terms of running that narrative up more and, gilding the lily there, I think the lily's already been gilded for Meta. But Microsoft, to me, they can just keep going. And they have the consumer scale that so few other people have. If it's what's happening with your phones, operating systems, computers, cloud software. That was Amazon's reason for being punished. They don't have the software. They don't have the scaling in cloud the way that Microsoft does.
Ilya would say.
To me, it comes down to valuation because I think the space itself is so saturated that you look within it and you go, okay, Tesla has been beaten down a bunch and Apple has been beaten down a bunch. Both of those offer you if what you believe in, which I don't, is rotation inside this space because there's general strength and there's going to be catch up because everything is going to work out and everything's going to be fine, then the laggards are Tesla and Apple.
Mm-hmm.
And so that's where the value is.
I have such a hard time, Dylan, Apple here. I know we have a bit of a rebound today, but Apple is not a participant the way that a Google, a Tesla, a Meta, a Microsoft are.
Causes me sadness.
I'm just shocked that they blew their first mover advantage with Siri. And how do they get out of this now? We're tariffing India. The whole plan was to move production out of China into India. Now we're going to have tariffs in India. Like, what's Apple's path forward right now if they don't have a premier AI offering?
No, I think that's the question you and everybody else on the earth is asking.
They have the premier delivery system, regardless.
But they don't have a product to deliver.
They are the product. The ecosystem is the.
I agree, but
product.
But they don't. But when in a world where Apple has control of the dashboard, the physical hardware that is the dashboard to the digital world, but they don't have the AI.
No, so they're gonna need to figure out how they're gonna sell being the middle step, and what deals they're gonna cut with those places where there is AI.
The other guys are saying.
Yeah, I mean, I think right now, and this is not my wheelhouse. I look at the world through a macro lens, but if I had to kind of dabble in company level thinking, I would think that for them, they're going to have to figure out how they're going to sell being the delivery system, and say, you know what, for us, that's actually better because we don't need to win the AI race. We just need to take the piece of monetization from whoever wins and let them beat each other up. We'll just sit here and get paid either way.
Maybe
the multiple on that is nothing like the multiple on AI. I mean, that's a bad day if I'm an Apple shareholder.
Can we point out something good that Apple's doing though, which is just delightful? This was forwarded to me yesterday. It is, and it's not downloading. Please download. Okay. This was forwarded to me yesterday. It comes from the National Republican Senatorial Committee. It's about political texting. Apple's releasing iOS 26 in September because it's the next iteration of iOS. You know what the good news is? It doesn't really matter that this is from the NRSC. If it came from the Democrats, I'd show it here too. There's going to be a separate inbox for spam messages now. So
I have it on my phone already.
I don't have it at all. So I'm so looking forward to
I have it on my phone already.
28 texts a day.
The Mail app on iOS now categorizes separately spam, separately updates on any shipments you might have coming in, separately on this, separately on promotions.
Doesn't Gmail do that right now also?
And then your real email.
Gmail does.
Yes, Gmail
I find
does.
it annoying.
It depends if it's done well, and I think that this is. I find on Gmail it is kind of annoying, but this version that Apple has created is actually pretty convenient.
Right.
I signed up for a group a number of years ago, and it's very obvious that they sell their list to Democrats and Republicans because I get like 20 messages a day from both parties. It's like, please stop. Please stop. And now I'm starting to respond to the text messages angrily. Like, there better be a human reading this because I can't do it anymore.
So don't you just have to say stop?
You know, that's the funny thing. I send stop. I click delete and report spam.
There's always a new one though.
It's happening. They just keep like the zombie invaders keep.
Well, it's like, yeah, the phone numbers are always like 833-411-1234, and then I block that. It's like 411-1235 shows up next.
Yeah.
It's like, I didn't block that number too. Okay. All right. Dylan, this week.
Amazon chart. That's not pretty.
Well, you know, that's because they're not doing well with their AWS, and the numbers that they laid out, they're not getting the traction that people thought they would. But I suppose the question is this a buy the dip opportunity, Dylan? Because you are ever the AI optimist. It subsumes and consumes all. You're getting ready for the singularity. Why not roll the dice on another one of these companies like an Amazon? Or is
100%
this?
agree. Couldn't agree more. At least do some put spreads.
Do you think that the U.S. consumer is a bigger problem for Amazon than the AI story?
No, but maybe the tariffs are. And the de minimis and all that jazz. But anyway, no. AI, yes. Buy the Amazon. Don't be an idiot.
He makes it sound so simple. We've continued to rally here after hours, by the way, with Palantir's beat. NASDAQ is now up 2% on the session, 23,340.50. S&P extending gains 63,67.25. Ilya, I try to be, I'm not always, but I'd like to be a man of intellectual integrity. Earlier today on Futures Power Hour, NASDAQ level was 23,300, Russell 2210, ES 6365. We're through those now.
Yeah.
Is the correction over?
I don't think so. I don't think we've come back through the underside of former support, become resistance, and we'll see. Maybe we will, but we haven't yet.
Dylan, what will happen first? S&P 500, 7,000, or Ilya turning bearish?
You mean bullish?
Ilya turning bearish?
Bullish, excuse me. Because it seems like that's a long way away, but it's really not that long away. I mean, Ilya, the line that we had here.
Ilya turning bullish, or what's the alternative?
S&P 500, 7,000.
S&P 500, 7,000.
10% rally from here.
S&P 7,000. Ilya is biologically designed not to be bullish, and there's always an abundance of reasons not to be bullish. And he's comfortable with his little micro shorting strategy, and he's done very well with the currency. So he's not sweating his chicken soup. So there is no way this guy's going to be bullish ever.
Ilya, I have to say,
in fairness, I did buy the early April low, but I was in there lightning fast.
I mean, it's antithetical to his Russian heritage. They're known for their dour and bearish worldview.
And my first trades was were done in 08. I'm conditioned.
And the icon of Russia is the bear.
What I'm getting at here is I'm
and
looking
California.
at this, and what appeared to be a breakdown earlier today has clearly moved in a manner where that needs to be questioned. If it is the Russell back above 2210 or so, if it's the NASDAQ back, I mean, we're about to clear out that swing high we talked about earlier on Futures Power Hour. Same thing with the S&P 500. It's already kind of poking through there.
Yep.
Where does this leave us heading into tomorrow?
Obviously, we have had a spirited rebound on Wall Street. I think it's very likely that, as you usually do, whatever happens on Wall Street becomes a tone-setting situation for Asia and becomes a tone-setting situation for Europe. I don't put a tremendous amount on what's going to happen in that sense on anything until we get to about midday Europe, where the U.S. Volume starts to build and we start to get the overlap between Europe and the US. We get some real liquidity. We see what this thing is made of. We may well test deeper higher here on the futures. It's thin. Asia's going to have to respond. All that makes sense. Now, if for some reason this thing fails in Asia, that would be very soft-footed indeed. But I don't think that's going to happen here. I think we're going to see a little bit of follow through, and when we get to somewhere within striking distance of U.S. market can open, then we'll decide.
Dylan, with that, I think we should leave that session here on the cutting room floor for today. Overtime is out of time for this Monday, August 4th. We'll be back tomorrow, same time, same place, every Monday through Thursday, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. Good luck trading. Grab a bite to eat, something to drink. As Dylan might do, have a cup of coffee and a cigarette. Then come back for Ilya because he's here with Macro Money. Oh, good for you. Good for all of us. See you tomorrow.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
With rate cuts back on the table, are there any trades that you're watching in particular?
Well, rate cuts have never been off the table, but every time bonds drop, I think they're a buy.
Not really watching any specific trades in the interest rate space. I do keep an eye on, the futures options like the ZBs, the ZMs, the ZTs to see if there's any volatility types of plays that I can integrate into them. Unfortunately, I don't really feel like there is a really great micro future to trade the changes in interest rates just yet. I feel like they need a little bit more volume, but when those get a little more active, that will be definitely one way I will be participating.
Yeah, I am. I would say honestly the dollar trade, and I know that is one trade that has been very crowded as far as a lot of people are short the dollar. And if you look over the last couple of years, typically when interest rates are higher, the dollar is higher, and we've seen the opposite. So it would definitely be the dollar and how I'm going to trade that based on what happens with rate cuts.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Well, the markets find themselves a little bit of steam for a rebound after last Friday's bloodletting, but is it the start of a recovery, or are we in fact looking at something more sinister? once this rebound runs its course? That's the question we're going to ask here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is explore how all of this might play out in the week ahead with a much lighter calendar of scheduled event risk on the menu and a lot more opportunity for the markets to sort of find a path of least resistance. We'll start with a look at where the performance situation left us last week and go from there. This is what these markets did ultimately once the dust settled on Friday's volatility. And what we see here is, of course, very, very lopsided. We have dramatic declines last week in both the S&P and NASDAQ. That comes with a drop in yields, which, of course, is more intense at the front end of the curve than it is at the back, because all of this ultimately comes together as a consequence of a very disappointing jobs report, perhaps not even so disappointing at the headline, 70 odd thousand versus 110 expected. That's not that much delta, but dramatic revisions to the prior 2 months reports, to totaling a downgrade of 258,000 jobs between those 2 months. So cumulatively suggesting that indeed the economy is in much worse shape, or at least the labor market is in much worse shape than prior data suggested. Lots and lots of hand-wringing around that, of course, after the signaling from the Federal Reserve, suggesting that they were not wanting to jump the gun on rate cuts. But of course, the markets then looking at this data and saying, well, you will be compelled. And so the response, both disappointed from stocks about the state of the economy, but also because of now the missed opportunity to cut rates in July, and perhaps now a elongated period of delay. The next scheduled Fed meeting is in September, where they might do something. And of course, the odds of a move there have now jumped up, as we can clearly see in what the 2-year does here. Interestingly, crude oil manages to rally on net last week. It's sort of off on its own as we digest still in the ranges that have persisted over recent weeks following those spikes around geopolitics in the Middle East. Gold a little bit higher last week, 1.9%. Most of that move scored against the backdrop of this drop in yields. But the really interesting story here, aside from the Japanese yen, where losses are relatively mild because of its sensitivity to yields, the situation in the euro here, the other major counterpart for the US dollar, pointing to a nearly 2% decline. Now, that's not as bad as it was until this jobs report came out and gave the dollar a big knockback last week, but it showed very, very spirited recovery last week until this jobs report. Certainly the more hawkish Fed didn't hurt the cause there, but the situation very interesting now for the dollar in that it's at something of a dividing line, as are stocks. And the question going into this week, of course, is will this momentum carry us forward, or is this move already spent? Now, of course, we can see the implications. The outlook for Fed monetary policy now in Fed funds futures envisions 5 rate cuts between now and the end of next year. The most interesting influence, of course, last week here was the jump from basically down to 1 rate cut for 2025 after the Fed, going into the jobs numbers, back out to a pair of rate cuts, 55 basis points now on the menu, basically in line with what the Fed has been forecasting itself. It's looked for 2 rate cuts this year. The real disparity then is next year. The markets are looking for nearly 3 rate cuts, fully discounted here. There might as well be 71 out of 75 basis points already priced in. That's basically a rounding error. So we're looking at a situation seemingly here where the view for next year is a lot more dovish, even though the view for this year has basically lined up. The Fed already discounting these 50 basis points for this year in their forecasting, but only looking for 25 next year, which of course is a huge 50 basis point disparity with what the markets now see. Clearly, some sort of a growth risk continues to be on the minds of investors. And so with that in mind, the first piece of interesting event risk for the week, sparse though it is this time as compared to last week's avalanche of news, we are going to get to the service sector PMI reading from the Institute of Supply Management. The expectation here is that we are going to see a little bit of a pickup. This would be the second consecutive month of growth. As ever, these are done around an axis of 50, where that's neither growth nor contraction. Above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. And so for the services sector here, which of course is the lion's share of the U.S. economy, a second consecutive month of improvement after that shock contraction back here. And with that, we have a acceleration. So seemingly a benign set of numbers, but of course last week we pointedly had a disappointment on the manufacturing side of the same survey. It was expected to be in contraction territory narrowly, but not only did it not manage to meet that, but it actually deepened into this this shrinking territory. The pace of contraction actually accelerated. So the risk here, perhaps, that services may go the same way. Now, a parallel PMI survey from S&P Global did suggest a buoyant service sector in July. So at least leading in from analog type of business survey data, we're looking at indeed a case for a bounce. So perhaps that's less market moving in that this much ought to be relatively discounted by markets already. The worrying bit would be if the internals start to look similar to the kind of thing we just saw in this manufacturing side of the equation, because of course here we finally started to see that contraction territory, new orders, and employment, and indeed in the case of employment, the contraction there has only accelerated in recent months. But not only did we get this deepening contraction in overall activity, but we had this overhang from the prices component. And of course, with the tariffs, that makes quite a bit of sense. But notably, over the past set of numbers, the prices component on the manufacturing side started to fall off, suggesting that with the tariffs notwithstanding, weakening demand is starting to weigh. And we are starting to see that really become a more cyclically worrying state of affairs, whereby whatever one-off factors happened here with this jump in the pricing structure, not surprisingly, it starts right going into the beginning of the year with the new administration coming in. But we are getting through the point where we have that one-off shock, and perhaps getting into the part where the demand destruction becomes actually evident. And as ever, manufacturing is a little bit more politically sensitive than services. So if this is suggesting to us which way the wind is blowing, then we may have a little bit of an issue on our hands here with this ISM report. Later on, we are going to get a monetary policy announcement from the Bank of England that is expected to give us a rate cut. And as we can see here, over the past several meetings of the central bank, the path implied in markets hasn't really changed very much. And what that seems to be suggesting is that expectations are relatively well benchmarked for what this outcome is likely going to be. Now, the expectation is that we're going to have a 7-9 majority on the policy setting MPC in favor of the cut, that we're not going to have any votes for a hike, and that 2 people will abstain and vote to keep things unchanged. Now, that's basically an inversion of the count when we looked at it for the last policy meeting, where there was a narrow minority wanting to cut 3 out of 9, but then 6 out of 9 voted to keep rates unchanged. So it looks all relatively steady, and with how narrowly these implied curves are sitting to next to each other, it seems like there's not that much room here for a change in the market's perspective. But of course, that also creates the threat of complacency. And as we can see here, looking between now and the end of next year, the Bank of England is expected to deliver 58 basis points in cuts. So one more cut this year with some possibility of a second, and one cut next year with some possibility of a second. So we're sort of veering into the between 2 and 3 cuts now through end of 2026 kind of territory at 58 basis points, narrowly. And so the surprise risk here, of course, would be any kind of a growth assessment from the Bank of England that suggests, well, we are actually perhaps more concerned, or maybe less concerned, about growth, and the overall tally, despite sort of how well telegraphed this particular move looks, perhaps the overall tally now is off. And with that in mind, we have an interesting story here for the British pound. So this is an excellent kind of version of what we just saw with the dollar last week. It had a strong push higher here, in this case against the pound, and then Friday's jobs report saw a strong rebound, but we pointedly held this former range bottom and held underneath it. So the breakdown architecture, as it were, seems to still be intact. And if we get a Bank of England that perhaps starts to get a little bit more concerned about growth dynamics and give us a sense that we are looking at maybe a little bit more easing against that back story than is currently being priced in, that may help to sort of engineer this rebound in at least the idea that at this point a reluctant Fed, despite the jobs data, is not scheduled to do anything until September, with lots of data in between now and then. And in that time, the dollar continues to be the higher yielding of the major currencies. Unless something materially changes in the outlook for, say, the Bank of England this go-around in a more hawkish direction, that still makes the dollar appear relatively attractive, and maybe that helps to make this a correction that becomes a selling opportunity rather than the other way around. Now, thereafter, we are going to be looking at a set of import-export data out of China, and here the expectation is that on the export side and the import side, we are going to see slowdown, down to 5% year on year on exports. We can see then that this upswing around the beginning of the year and the front running of the tariffs continues to fade. Meanwhile, imports as a measure of domestic demand, or at least a window into it, that continues to be anemic, and the expectation is we'll actually get a 1% contraction this time. That, of course, continues to speak to this larger narrative that we've been observing in China, whereby for 9 consecutive quarters now in China, we have had de facto deflation at the economy-wide level. And in fact, in the second quarter of the year here, with the latest Chinese GDP numbers, we've seen that deepen more so than this entire period, suggesting essentially that there is a near total absence of demand in China's economy, and thereby the whole of output, as it were, is on discount. And so we're looking at an economy that, were there to be a downturn elsewhere, were the U.S. economy, say, to lose steam, the world's second largest economy would offer no real backup. In this sense, a similar story for the Australian dollar as a kind of barometer on global commodities demand. And of course, China is its largest export market. And so there's some direct sensitivity there. We can see, similar to what we just saw for the European currencies, a strong bout of US dollar strength, a very tepid attempt at going the other way on the jobs data, and then ultimately a situation where the former range seems to be getting retested, but the architecture of the breakdown appears to be intact. And so if we were to get a soggy set of Chinese figures here, sort of reinforcing which way the wind blows, seemingly since we established this top near the 66 figure, this might start to look like an opportunity for a trend that's developing rather than the start of a rebound in the opposite direction. And then finally, there is, of course, the implication for why all of this ought to come together as we consider what it means for stock markets and for sentiment writ large. We're looking here, of course, at the breakdown for U.S. GDP data over the first half of this year. And as we've pointed out here over and over again, there is a tremendous amount of fuzz around the surge in imports in the first quarter, and then the retrenchment there in the subsequent quarter. There's a similar thing with inventories, where first there's a surge in inventories, and now it looks like those inventories are getting some degree of drawdown in the second quarter as companies attempt to shield consumers from the cost of tariffs. But the big part of this story is this right here: the shrinking contribution from consumption, because that accounts for 68% of overall GDP, where this is all, for the most part, noise. And what we find is that in the first 6 months of this year, we have the weakest 6 months of consumption contribution since the first 6 months of 2020, which of course is the COVID-19 recession. And so what ultimately brings us back to why the markets performed this way when they saw that jobs data is the implication that, were we to see the U.S. economy slow in a material way, as these GDP numbers seem to imply, as perhaps the jobs numbers suggest, as the ISM numbers may start to signal. This recipe for global economic resilience, whereby we have the world's top 3 economies accounting for 58% of global GDP, the US, the Eurozone, and China, are set up such that the US is where the growth is, and everywhere else remains anemic, then this is a single point of failure. And if, in fact, the US economy is starting to unravel from this, then there is no backup. And there is then a global and not just a US recession risk. And then, of course, those Fed rate cuts can't come soon enough. And so if, in fact, the Fed is resistant and growth in the US appears to start to sour, then this starts to be a lot of what is perhaps on the menu going forward, whereby risky assets take a haircut, interest rates continue to decline around swelling expectations, as we've seen, that the Fed is going to have to be more aggressive, if not this year, then certainly next year. And that may start to undermine the kind of resilience we've seen in cyclical assets, for example, crude oil. And then, of course, the most important question here for the dollar will be, is it a creature of yields or is it a creature of risk aversion? Because even with this decline at the front end around these swelling rate cut expectations for this year, overall, it has held up quite well, suggesting that maybe the dollar is regaining that risk-off haven of liquidity function and could rally even with stocks declining as growth expectations fizzle and yields fall. And that is Macro Money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also on with Chris for Futures Power Hour Mondays and Fridays, on with him and Tom for First Call Sundays, writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Thanks for watching.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. Tom, when you talk about the good guys, who are they?
They are us. We are the good guys.
When you say they take out the weekend, what does that mean to you?
That means when you're a premium seller and they take out the weekend, that means that all the decay over those 2 days, Saturday and Sunday when the markets are closed, come out of the market Monday morning.
When I say bell to bell, what does that mean to you?
Bell to bell is like, in horse racing they would call it wire to wire, and in trading they call it bell to bell. So the opening bell to the closing bell.
If you're saying something's thin, what does that mean to you?
That means it's not very liquid. That means that the marketplace is relatively illiquid. That's what thin means.
If you can't buy an uptick, what's happening?
If you can't buy an uptick, that means the market is going down and there's no bounce.
How does Daddy do it?
Daddy does it good.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Crypto Show, I'm Ryan Grace, and with me today, of course, the wizard is in the house.
You.
Katie McGarrigle, what's going on?
I'm good. I was just telling you off air how I am still recovering from my bachelorette party this weekend. I have some very, very good friends, but my body does not heal itself the way that it did in my 20s, to put it gently.
I can understand that. Did you have a good time? What'd you do?
Had a great time, yeah. We stayed in Chicago. We did this like really cool sneaker decorating class down in Pilsen at this woman's like shoe shop.
Okay.
So that was like really neat. and I'm like doing the artsy things like that. And then we did lunch somewhere, and then we kicked it for a little bit, and then we had like this mobile hibachi guy come, and like I was like playing with fire. It was kind of scary. Glad all my hair's still intact. And then we ended the night with dancing at one of Chicago's great dance bars. So yeah.
Hell yeah.
Yeah.
Sounds like a good time.
It was a great time. I just, again, like.
Very wholesome, Katie.
It was pretty wholesome, yeah. There was no
sneaker decorating. I like that.
There
That's
was-
on the other end of the spectrum from I think your traditional bachelor party for sure. Maybe bachelorette parties are a little bit different.
Yeah, there were no Thunder from Down Under mail reviews or anything like that. Not that there's anything wrong with that.
Sure,
Totally
to each
support
their
it.
own, yeah.
Yeah, we had a nice little fun girl time. But like I said,
How are you feeling today?
I'm better today than I was yesterday. But for context, I had bone broth and crackers and like 5 French fries yesterday, and that was all I could consume.
Oh, you need like a double cheeseburger from McDonald's or something.
I couldn't even breathe without feeling nauseous yesterday. So I feel like a new person today. But yeah, I mean, how about you? What did you get into this weekend?
My wife's family was here for like the second or so week, so we hung out and hung out with some of her nieces.
Okay.
Guess kind of practice for my upcoming birth or
What's to come?
child, I guess is probably the better
The little PETA.
Yeah, probably. You know, I can remember when I was a PETA, and that's a pain in the ass for anybody that's not familiar with it. When I was little, my dad, I think, cursed me, right? He would say things like, "Don't say sorry, you'll never be sorry." And, I hope you have a son just like you.
Oh my gosh.
And this is when I was probably 6, 7 years old. So I've probably been cursed, and we'll see.
Well, yeah, time is coming real soon.
Yeah,
Dad Watch 2025.
that's right. One more month to go. But weekend was good. We had an opportunity to buy some crypto this weekend as well. Were you active in the market?
I was not active in the market. I was active in the streets.
Oh, that's right. Yeah. I mean, you do have the Tasty Trade app on your phone, Katie. I'm just saying.
I know. Well, what did I miss? Regale me.
Well, we had a bit of a dip post-Friday. You got a fairly weak jobs report, revision of prior numbers as well that didn't look too good. You've got some risk-off, tariff-on headlines, and we took a dip down towards almost 112, I want to say. Bitcoin higher now, almost 116. I've got some slides from my friends on Options Trading Concepts Live. I do that show on Mondays. So we'll go through some of these signals. We can take a look at our watch list in the Tasty Trade platform as well. But yeah, had an opportunity to, dip your toe into the water in ETH, came down to almost 33 and change. Bitcoin, like I said, 113. Solana, I think well under 160. So a nice bounce here today, and you're seeing the same thing across the market when we look at equities as well. We've got the S&P 500 up over 100 points, which gets you almost 2% to the upside. So the world was ending on Friday, and maybe today it isn't. Volatility coming back in after popping, when we look at the VIX, over 22.
Mm-hmm.
So you get a chance every now and then.
I must have missed it. Next time we've got to set up the weekend text thread so I don't miss it.
It's a good point.
But you're right. I do have both the Tasty Crypto app and the Tasty Trade app on my phone. So that's on me. But I am still optimistic. Maybe we can place a few trades, today, or talk about what we can do maybe in a crypto ETF as the market reopens tomorrow, and then maybe do something with just like one of the outrights in the next 21 minutes or so.
Yeah, let's do that. But before we do, we got to shout out the chat popping off. Emmett up in here. Katie forgot to cast her Impervious Charm.
I sure did.
Is that actually the name of a spell? I'm not really in the know. Believe it or not, when it comes to wizardry, and I don't know if I'd go so far as to say the occult, but the magic side of this spectrum, I'm not up to speed. What's the Impervious Charm?
It could be. I'm not also I have not played Hogwarts Legacy in over a year or two now, so I'm a little bit slow to the specific spells. I do know that Aguamenti is a spell which would have come in real handy when I needed more hydration when I was
The hell is that?
It fills up your cup with water.
Oh.
Aguamenti. Yeah.
Wow, there's a spell for everything.
So I could have used that. I really could have used like Gatorade Menti, you know what I'm saying?
Something like that.
Or just some type of thing that would remove the, skull splitting headache that I had. But here we are. We are back. But yeah, I did forget to cast that spell. I did make a wish to not wake up the way I did, and that didn't work, obviously.
Oh, I'm sorry to hear that.
But it's okay. We're here. I learned from it. I had fun. That's what do you say? You're like borrowing happiness from tomorrow to have fun tonight. Something like that.
Yeah. I guess you have to pay the price.
Yeah, the
at
party
some
price.
point. Fair enough.
Yeah.
I digress. Get your ass in the chat if you're not in there and you're not streaming this on Tasty Live's YouTube channel. What are you doing? Well, maybe you're streaming it on Tasty Live, which is a great thing as well. But if you want to join us in the chat, if you have a question for us on the show, you want to say what's up to Katie as well, get over to YouTube. We're streaming live. Pop out the chat, hit the like button, subscribe, do all that shit. I guess that's what you're supposed to say, right?
Yeah, all that shit.
Yeah, there's like this guy on YouTube that I watch. He basically provides commentary over. Now I'm exposing myself. He provides commentary over like scary videos.
Oh, hell yeah.
Have you ever seen any of this stuff?
No, but he's like, oh, I wonder what's going to happen, like stuff like that.
It's there's a couple of these channels out there. One's called Nuke's Top 5.
Okay.
And so my wife and I watch this like while we're eating dinner. You know, it's like cell phone videos of people capturing ghosts in the woods.
Yeah.
It's great, by the way.
That sounds like such a Natalie thing, by the way. I'm so here for that.
Right, like we were kind of giving you shit about like the wizardry, and I'm over here like watching spooky videos, like that Sasquatch someone captured on camera, on their grainy cell phone camera. But this other guy is called Slapped Ham is the name of the channel, and where I'm going with all of this is instead of hit the like button, he says tickle the little bell. So get over to the Tasty Live YouTube channel, tickle the little bell, and subscribe if you're not already. But that said, Katie, let's pop back over to our crypto market update. Again, these numbers are coming from the show earlier today. Options Trading Concepts Live, an hour long. You can get the commentary and the questions from there.
Yeah.
But you can see across the board, consistent themes here week to week. We've got the pullback. There's not much that's up in the last week. Litecoin maybe up 2%. Everything has been down. I think it presents you an opportunity. Larger market cap tokens, things like Bitcoin and ETH, have been better places to maybe hide out versus some of the stuff that tends to be a bit more volatile. So if we jump over to smaller market cap tokens here, we got Cardano at the top. You can see double-digit losses weekly, and the same thing when we get into some of these smaller tokens. That said, that theme of Bitcoin relative outperformance remains, up 22% year to date. And then everything else against that here is in this column. So Bitcoin up 22% year to date, not against itself in that sense, just its performance. And then relative to that, ETH, it's still up, but down 15% versus Bitcoin. So up 7% year to date. Volatility is still relatively low. Price momentum remains bullish over weekly and monthly timeframes, but you have seen a bit of a pause here when we're looking at Bitcoin, ETH kind of holding in there for now, Solana a little bit worse off. Nothing that has me changing my mind, but we do want to keep an eye on whether this move evolves into something more on a weekly basis and, certainly monthly. By that time, I hope you're out, and we'll give everyone a heads up, at least as it relates to kind of what we're seeing or how I might trade it. But if I start to get a breakdown on the daily that then flows or spills over into the weekly, I'm not going to wait around for this to be down 30% on its way down to 50% if we see that show up in the monthly signals. But right now, I think, again, we were a bit overbought. We talked about that, 3,800, 3,900 ETH.
Yeah.
Looking for a pullback to 3,500. You got it. What are you going to do when you get it?
Yeah. Knowing that you've been in the game as long as you have now, are you ever fully...
About to retire. Not because I won, just getting out of the game.
Give it up. Just throwing in the towel.
Right. Sometimes like your knees just hurt too much.
Yeah. Well, that's kind of what I was going to ask you is like, knowing that you've been doing this for as long as you have now, like, are you ever fully covering a position? And maybe it's less about, I'm sure the answer is no for like Bitcoin and ETH and like some of the bigger market cap coins, but like, are you ever fully covering any positions at all? And if so, like, are they in smaller names, bigger names? How do you kind of navigate that?
Yeah, absolutely. So recently, and by recently, I mean really over the last 6 months, I've consolidated my portfolio a bit within kind of a larger downtrend outside of Bitcoin, ETH. I mean, up until recently, just a couple of months ago, ETH sucked. And that was true of a lot of alts. So in some cases, I was flat or maybe slightly up from adding to positions, and then you got a little bit of a bounce, and I just took some stuff off there. That was in smaller tokens, some L2s. I was in Optimism, got out of that entirely. Say, a ticker symbol is SEI, got out of that entirely. These are some that we don't yet offer on the Tasty Trade platform, but hopefully will soon. And as well, shout out to Andrew here. Hopefully we get Fartcoin on the platform. That would be a good one. But yeah, I've gotten out of positions entirely because it just wasn't worth my time, attention, or when you look at the outperformance that's occurring in other areas of the market, specifically with Bitcoin, it just made sense to no longer throw good money after bad, try to buy the dip on some of the smaller stuff, and just participate in the, you know, the broader rally across the market in some of the larger market cap tokens. So on that side of it, absolutely. On the upside, I probably will never go no coin.
Right.
You don't want to be a no coiner in a world where there's only 21 million and it's going to like, 10 million a coin by 2037 or whatever. Yeah. You got to have a little bit of skin in the game. But I think if you were to see this cycle, some, let's call them big ass moves, I'll probably get out of a chunk, take some off the table, pay my taxes, of course, but let's throw out arbitrary numbers. ETH 10K, yeah, I'm taking some off. And I know like that seems as if it's unrealistic. I think it's very possible.
Sure.
It's a non-zero probability. When we look at past cycles, if we want to use that somewhat crude analysis, I think you could get to 20,000 on ETH, maybe 30,000 if it gets really crazy. If that happens, yeah, I'm probably out. Deleted my Twitter and I'm not doing the show anymore.
You're on your private island?
Not quite that, but just taking a breather for a second. But most of the time I am, at least at this stage in the cycle, I'm trading around some core positions. The bear markets in here can be pretty nasty, but they present opportunities to really load up. I think you have to be prudent. You've got to approach this intelligently and you've got to take some off the table. Maybe not everything, but I think you've got to trade out of it on the other side of that. And I think you will have a chance to do that this cycle. Maybe you're already seeing some of it now, right? Bitcoin at all-time high, what better price to sell it at? Though I do think you go higher. There's a lot of indicators that could point you higher.
For sure. Okay, that's fair enough. I saw that the guy who lost his hard drive, in the dumpster.
Did you find it?
No, he's giving up. I saw. I just saw that he's like throwing in the towel. So
yeah,
that's a hard one.
From what I've read, he's spent millions of dollars trying to recover this. And
yeah,
who knows?
That's a rough one. But yeah, it's good to know. I just wanted like your 2 cents on that because obviously it's so easy to just get greedy and want more. But you have to be sensible in terms of nibbling, pulling back a little bit, nibbling, taking some off the table.
Yeah, it's interesting with things like ETH. You can stake ETH, you can stake other proof of stake tokens, you can put them to work in DeFi. So there's a lot of utility here. So you might want to have a position in order to participate and generate a yield, right? In the same way where you might want to be positioned in treasury bonds at certain points in time. And it's not so much this trade where it's like, how high do you think the price of the 30-year treasury bond is going to go? How low is the yield going to go? And then are you going to trade out of that position? Or vice versa, if you have very high interest rates, are you going to go into that and then try to generate some yield. I think maybe there's some of it, but it's not so much like a binary decision when it pertains to some of these tokens that you can kind of put to work.
Yeah.
And then on the other side of that with Bitcoin, I do think today, and this is largely informed by how long I've been in this and just some of the different cycles that you've seen, I probably will hold, but there will be points where you want to take some off the table to buy it back.
Yeah.
I just won't go out of my entire position, but I could take it down 50%,
Yeah.
60, 70%, with the idea being, though, that I'll probably buy back in if you get some downside volatility.
Sure. So, I mean, that actually brings up an interesting point from Andrew then is like, are you looking at, like, when you're taking profits, are you doing it on like a percentage of what you've invested basis? Are you doing it on a price level? Are you doing a combination of the two? So if I'm buying $500 worth of Bitcoin, is a home run being 50% of that in terms of profit, like $250? Like, what is your kind of rule of thumb for profit exits?
I look at it a couple different ways. So first of all, if that's your trade, and I think you have to have a plan going into this. If you have $500 and you're going to buy ETH and you get a 50% return on $500, that's massive.
Yeah.
Right? When you look at the nominal value, okay, it's $250, but it's a 50% return on risk. If that's not what you went into the trade for, or you didn't anticipate it, what did you go in there for? Are you looking for 1,000% return, 100% return?
Which I think is like,
you have to be realistic.
Right, which is the problem I think with like where Bitcoin or crypto volatility is right now is people see it as like this highly volatile thing where they're able to like vaporize or multiply their account, or you know what I mean? So there's just like this shift in how we talk about it so that people don't have like that type of expectation going in.
So
right?
I think a 5 to 10x is just a massive, massive home run. You can hit those more often, seemingly, in crypto.
Yeah.
If ETH goes to 30 grand from here, it's a 10x. That's a monster, monster trade. And if you have enough in it at that time, that could be your last trade.
For sure.
So to speak. That's probably one way to look at it. It's like, what's the greediest return multiple that you can come up with that's still somewhat realistic relative to what actually happens in the space? And I think when you look at it from the perspective, okay, what market cap does that imply? How realistic is it, right? XRP at 100, probably not that realistic, so that's not my target. XRP at 10,
sure.
Beyond that, you might be kind of greedy. So I think you kind of just have to have some number or some idea of return in your mind, just like to go off of to start with. But in terms of how I actually do this or think about it, right? We were talking about 3,900 ETH being a little bit overbought short term, and likely we're going to see a pullback here for one reason or another. And it doesn't have to be crypto induced. It could be something that happens in other markets, which is what we saw. So I use a lot of technical indicators, right? There's not really this great kind of fundamental view that you can take for some of this stuff, right? Protocols do have revenue. You can model users, and we can look at growth trends over time. But what I typically do from a trading perspective, and you'll see this on the follow page as well, as we were kind of selling out of some positions on the way up and buying them back on the way down, I'll look at RSI. If that's in overbought territory on a daily basis, north of 80, that's one box that I'll check.
Okay.
I look at exponential moving averages, which is where we derive these price momentum signals. So when the price is above all three of the averages that I look at, and that's an 8, 13, and 22 day or period, depending on whether it's daily, weekly, or monthly for your bars. When those things get really extended, the price is very far away from even your shortest exponential moving average, your short-term time frame, and the averages themselves are quite a bit away from one another. That's another signal. So I've built kind of little dashboards that I use personally that'll just give me those signals. And it's not simply one thing, but when you have 6 or 7 boxes of 10 that you can check,
right,
I tend to assign a higher probability of, a reversal coming, and that's on the downside too. I've probably talked about this before from like the perspective of driving a car, or this analogy, right? And so stop me if I've said this, but we're driving the car And our goal is ultimately to not crash the car and get to where we're trying to go. But we need to know, how fast are we going? Is it nighttime? Is it raining or snowing? Is there ice on the road? What's the traffic like? Are all the other drivers intoxicated? And so if we have a good understanding of all of these things, and we can look at this dashboard and go through and say, okay, this checks the box, this checks the box, that checks the box, then you have a pretty good sense of, whether or not it's time to get out, time to stay in, or time to enter into a position, if that makes sense. So that's kind of how I look at it. A lot of technical indicators. I want the macro fundamental backdrop too. Are we in a macroeconomic environment that's conducive to Bitcoin? Tend to be a few that are. The worst environment is one in which the data that's being reported, those economic growth metrics and those inflation data points are both going lower. You'll see the whole market crash in that environment. You'll see tech stocks down double digits. And so you just have to recognize that. You've got to recognize where you are from a price perspective. And I think you also have to have an understanding of where we are from kind of a policy perspective too. A lot of this is driven by liquidity on the margin.
Yeah.
So that all tells me today that for the most part, intermediate to long term, we're still in a pretty positive environment.
So looking at your follow trader account then, and with 4 minutes to go, like where would you place a couple shekels at this moment? If you had to pick one or two.
Let's take a look. Well, maybe we just go off of kind of what looks a little bit better here on the dashboard. Sure. We kind of missed the dip over the weekend, or I added a couple things. I've been buying around 3,600 in ETH. Wasn't as active as I should have been below that. But
you were on niece duty.
Yeah.
You have excuses.
I would kind of
degenerate duty. Okay. I have no excuses.
I'd look at ETH here. I'd look at Litecoin, Bitcoin Cash, elsewhere. Chainlink has done well enough recently. Interesting dip there. We've held up. XLM is another one where you got the volatility expansion. You got the pullback here, but structurally you look pretty bullish. Hedera, HBAR is another. So we can buy like $50 of each one of these and just come back and see whether we were able to perfectly time it on Monday or not.
Yeah, why not?
All right.
Let's nibble a little.
Let's jump into the platform really quickly. We'll show you how to trade crypto on here. It's pretty easy. Just click a couple buttons for the most part. That said, Katie, if you do not have crypto trading enabled on your account, here's how you do that. Jump over to the Manage tab, and then we're looking at the web-based platform here, the web trading platform. Go to My Accounts, Trading Preferences, and you can see we've got it enabled through our third-party crypto service provider, Zero Hash. If you don't, and you have a crypto-eligible account, that means you have an individual cash or margin account, you can enable crypto trading.
There we go.
Once you've done that, jump over here, and I think the easiest way to do this is to find a crypto watch list or type in the symbol you're looking for. And this is an easy way to also just quickly see what's up or down here, the most or the least on a daily basis. But let's go in and let's just buy $50 of a handful of coins. So let's buy some Bitcoin, and we're going to click on the ask price to do that. And we're just going to set this up so that we're going to do a dollar amount, and we'll put $50 into each one of these here.
Beautiful.
Just as an example, I suppose, of how to do this. But I also think, you've got a little bit of a dip. Let's see if we can trade back to 120 on Bitcoin. That would be the high end of the 1 week, one standard deviation move, given the lower vol we're in. So we're going to buy $50 of Bitcoin. I'll post all of these on the follow page too. We mentioned ETH. We'll buy $50 worth of ETH. So we're going to jump back over to the watch list. We've got ETH on here. Let's see. Let's just sort these in alphabetical
Just celebrated
order.
its 10-year anniversary.
That's right, yeah. And ETH making a little bit more of a move here. But 10-year anniversary of ETH just last week.
Yeah. Time flies.
It sure does.
Time flies when you're still at Tasty Trade.
Right. ETH was a couple dollars at one point, right?
Yeah, we had him on the
I remember
show.
when it was $10. It's the first time I ever saw the thing at like $10. Bought a little bit and then sold it at $100. Crazy. Now we're buying it at $37.28. We'll add a little bit of Litecoin as well. That's another one where it's just been, it's been pretty strong. Whether that continues or not, we'll see. I mean, the other thing here is that these all just kind of go up together with varying degrees of volatility. but I'm going to add a little bit of Litecoin, click on the buy. We're $3 higher than we were this morning. So I'm probably just chasing prices higher. We'll see. But, with this as well, what I like to do is just look at those 1 week, 1 standard deviation moves. And that'll be kind of my price target short term. So if we're just putting on some small trades like this and we're trying to return even 10% on our money would be decent.
Yeah.
And you can get that very quickly in
Cup of
crypto.
coffee in the morning.
Yeah, you don't really need leverage here given how much these can move. We're looking at Litecoin 30-day realized vol of 63%. Bitcoin Cash, let's do that one as well. BCH 562 is 553 earlier. So, getting some moves already. But you don't need a ton of leverage when you've got this sort of volatility. And then the last one that I want to add, well, what did we talk about? XLM and Hedera. H-bar. We'll add a little H-bar.
H-bar.
And then we'll just come back and see, I don't know which one performed the best or the worst, I suppose.
Yeah. I love it.
And you know what? I haven't been in Stellar Lumens in a long time. We'll add a little bit of that.
Okay.
It's XLM. 41. I had 41.19.
A little comparison.
41.83 now. Yeah, this stuff has all moved quite a bit, as you can imagine, versus where we were this morning. But a little bit of a demonstration here on the platform.
Yeah.
So filled on all of those. You can see that right here as well on the activity page. So we got our XLM fill, HBAR, BCH, Litecoin, ETH, and Bitcoin. 6 new positions while adding to a couple positions. And yeah, if we get a little bit of a bounce here, which if I just double check my expected moves, at least for the ones that we've run, Bitcoin, I've got a range of 108.3 down to 120. That was with a spot price of 114 and implied a 37% this morning. So we'll look to get out of this. If we trade up into 120, I could get nervous and call it 118, 119. ETH, looking for almost 3,900 on that 1 week, 1 standard deviation move. And then not that we put these on, but we can run some numbers for the others. Solana, I'm looking for 178 to the upside, 149 to the downside. Sui, 394, 304 on the downside. And then XRP, I know a lot of people like to trade that. Our 1 week, 1 standard deviation move in there is 335 on the top end and 265 at the low. Now, these are not static. Obviously, they can change, but just based off our spot price this morning and implied vols or realized vols for some of these, which we'll model, those are your ranges.
I dig it. This was fun. And soon, recurring purchases coming, so you won't even have to do it manually if you don't want to.
That's right. Yeah, we've got recurring purchases for cryptocurrency going into testing, I believe today, tomorrow, one of these days. And then hopefully by mid-month, at some point this month, if we run into any bugs, that sets it back a little bit, but hopefully we don't. So that said, mid-month, targeting a release of recurring purchases. If you want to buy $50 of Bitcoin each week, like we just did here, you can set that up to automatically invest kind of dollar cost average in over time. And then, dump that position when we get to 200,000.
Yeah.
Or 500,000 or whatever your, exponential price target is.
Yeah. Well, I've got super high expectations.
Yeah. 20, 37, 10 million, right?
Yeah. Bitcoin to 500,000.
To the moon, Katie.
Yeah. By the end of the year.
Awesome. Well, thank you for coming on the show. As always, that's going to do it for our show here today. I'll be back on Wednesday with Greg Magadini of Amber Volatility. Greg's been like 4 for 4 for trade ideas. So
hot streak.
Tune into that. Yeah, he's had me looking at selling juicy puts in Circle. We talk a lot of volatility related trades in crypto, a lot of ETF options. So we were buying some ETH, cheap upside vol, looking for a 4K play. That worked out really well about 2 weeks ago. So excited to have Greg on the show on Wednesday. Don't miss that, per usual, fan favorite. But Katie, you're my favorite wizard.
Oh.
Thanks for coming on the show.
Me. Thanks so much.
I hope you feel a little bit better. By like Wednesday, you'll kick that hangover.
I'll be full force by tomorrow morning.
Hell yeah. All right, that's going to do it for our show. I'll be back on Wednesday. Until then, I'm Ryan.
I'm Katie.
Peace.
Very good morning to you. Welcome to Trade Live with